morning all. Shall we start our revision? That is marginal costing. One of the important topic, examiner's favorite topic you can say. Easily you can expect around 10 marks from this particular chapter. Okay. Fine. And if I am not wrong, out of all the chapters, this one has more questions. Compared to all the chapters, this has more questions. Okay. That's okay, but easiest concept, to be frank, and out of all the concepts available, this is the chapter where bit of practicality exists. Okay. So that is your marginal cost. So shall we start now? Okay. Around 67 questions are there. Okay. Around 67 questions we'll be discussing. Small questions. Few are big questions that will mix and match. Okay. Shall we start? Let me check whether to do this. Great. We can start now. Marginal costing. Guys, what do you mean by marginal costing? Before that, you should know the meaning of marginal cost. Marginal cost means any additional cost incurred to produce additional unit. To produce any extra unit, whatever the extra cost what we incur, that only we call it as what? Marginal cost. The technique of costing, what we use to make decisions using this marginal cost alone, that is additional cost alone, that particular technique only we call it as what? Marginal costing. Always remember guys, marginal costing, standard costing are not methods of costing. We are not trying to determine the cost of any particular product, service, etc. There we are trying to make the decision. That's why marginal costing, standard costings are techniques of costing. Your process, job, batch, etc. those are your methods of costing. Know the difference. Okay. Those are there to determine the cost of the product. Here it is there to make the decisions. So marginal costing is a technique of costing used to make decisions using what? Only marginal cost into consideration. By taking only marginal cost into consideration, marginal cost is nothing but your variable cost. Not only variable cost, any cost extra what we incurred to make extra units, everything we call it as what? Marginal cost. Majorly it will be your variable cost. Whereas your cost can be divided into variable as well as fixed cost. Cost can be divided into variable as well as fixed cost. Now listen. Now let's say let's assume we have two batches, morning, evening, but let's assume there is no evening batch. Okay, only morning batch is going. Number of students right now, let's say number of students, let's say around 200. Around 200. Let's say fees chargeable to student is around 50,000. Fees chargeable to student is 50,000. Done. Let's say few cost. Rent. Let's say around 20 lakhs. Okay. In fact, you keep it as 48 lakhs. I'm talking about per annum everything. Okay. Rent. Salary to staff. Salary to staff. Let's say we are paying around 10 lakh. Assume we are paying around 10 lakh salary to staff per annum. Okay. Electricity charges. Majorly constituting AC cost. Assume. Okay. Which is 6 lakh. Okay. Other admin cost. Other admin cost, let's say it is around other 3 lakhs. Other 3 lakhs. Now, faculty cost. Faculty cost, assume 10,000 per student. Study material cost, assume, let's say 5,000 per student. Okay. Now, can you guys help me in determining profit or loss of running this particular batch? 200 students, 50,000 rupees, which will be 1 crore. Rent 48 lakh, expense salary to staff 10 lakh, expense electricity charges 6 lakh, expense admin cost 3 lakh, expense faculty cost 20 lakh. Make number of students as 300. Make number of students as 300, then it will be 150, right? Faculty cost will be how much? 300 into 10,000. Sorry? 30 lakhs. And that is admin now. No, I mean study material cost would come to 15 lakh. Now can you tell me profit or loss? 38 lakhs profit. Okay. So profit of 38 lakhs. Profit of 38 lakh. Okay. Now let's assume few students came and asked, start evening batch. We got an enquiries to start evening batch. Now the question is, how to determine should we start or not? Let's say we got enquiry from around 40 students. We got enquiry from 40 students. So now when we will start the batch? If we have profit, we will start the batch. Otherwise, we won't start the batch. Simple. Correct? No? Now, let's see. How much will be the revenue? 40 students into 50,000. 20 lakhs. Rent. 48 lakhs. Salary to staff. 10 lakh. Electricity charges. 6 lakh. Admin cost. 3 lakh. Faculty cost 4 lakh and study material cost 2 lakhs. How much it is? 53 lakhs of loss. Correct? No? Should we run or should we not? See here. What are we discussing? Running the afternoon batch. Have we taken this particular building for rent for 24 hours or 5 hours? 24 hours. So whether I run the batch or whether I don't run the evening batch, morning batch though it is not even decision making thing, we are running it, right? So whether we run the batch, we don't run the batch, whether rent has anything to do, that means this should not be considered for decision making. Salary to staff, no. Morning or evening, they have to come in the morning, they have to go in the evening. So end of the day, whether it's class till afternoon or till evening, it's not going to make any difference. So this also has nothing to do. Electricity charges, it is gonna increase by, if not 6 lakh, at least by some amount, because running AC for 5 hours, running AC for 10 hours has a huge impact. Correct? No? That is different. That let it be. Let's assume it as variable and let it be. Admin cost. Whether you run the batch, you don't run the batch, you are incurring it. So it has nothing to do with the decision making. And faculty cost, that will change because morning batch students are different, evening batch students are different. Morning batch teaching for 5 hours, evening batch 5 hours. So that is variable. Study material also same. So now tell me how much will be our profit or loss. 20 lakh minus 12 lakh rupees, 8 lakh profit. Now tell me, should we run the batch or should we not? Run the batch. Got it? However, so try to understand here, whatever the logic we applied is of marginal costing. That is, we have taken only incremental cost into consideration. We didn't consider all the cost. We took the incremental revenue, we took the incremental cost, and we determined should we go for it or should we not. Clear? And one more thing you have to remember. Let's say here they told for the evening batch running purpose, we have to hire one more staff, because if they come in the 8, if they go at 8, then it is like 12 hours. So that's not feasible, right? Let's say we have to hire new one. For them, we have to spend 3 lakh rupees. Now tell me, we should consider it for decision making. Although it is fixed cost, it is relevant for decision making, because if we run the evening batch, then only we are incurring. If we don't run the evening batch, we are not going to hire that staff at all. So that is your relevant cost. Got it? And one more thing you have to remember, the fixed cost which are not relevant here, we call it as irrelevant cost. What do we call it as? Irrelevant cost. In fact, we call it as sunk cost. What cost? Sunk cost. Okay. We call it as sunk cost. Hope it is clear. Okay. Yeah. Good morning. Tala for a reason. Tala for a reason. These are your sunk cost. Is that clear, everyone? Hello? Yes. Sunk cost means, boss, it's already incurred. See, you don't have to say that I have paid it. Need not be. If at all I have committed to pay also, one or the other day I have to pay. Right? So it has nothing to do with the decision making. I have already agreed for it. Right? That is the case. Hope it is clear. So listen here, guys. Cost, it could be variable cost, it could be fixed cost. Variable cost has impact on decision making. Fixed cost, we also, in marginal costing, fixed cost is known as period cost. What do we call it as? Period cost. Because it won't vary with the production, rather it is depending, or it is based on time period. Right? It doesn't matter how much you produce, etc. All it matters is how much time you are there in that business. Based on that, you will be incurring those expenses. So that could be divided into sunk cost. We also call it as irrelevant cost, also call it as committed cost. It has no impact on the decision making, so you should ignore it while taking the decision. Whereas relevant cost has impact on decision making. Is that clear? Yes. Any doubts? No doubts. Now, shall we see one question of PYP May 2025 related to this? Yes, see here. In the following independent situations, Identify the type of cost and state whether it is relevant or irrelevant in managerial decision making. A Limited owns a commercial space of 1500 square feet and uses the same for its own office accommodation purpose. Similar office is available for a nearby rent of 30,000 per month. Now tell me, for any decision making, is it relevant information or irrelevant? Relevant or irrelevant? Guys, this is opportunity cost and this is relevant. Why it's relevant, sir? If at all I think of not running the business, then I will earn 30,000 per month. If I run the business, I will lose. So if, for example, if someone said, start a business there, you are going to get 20,000 rupees. Do I completely ignore this 30,000 and will I start that business of 20,000? Of course, no. Without starting business, I can make 30,000 there through rent. Right? So automatically this has impact on your decision making. So this one we call it as relevant cost. Got it? MNC Limited has paid rupees 1 lakh as a rent for the factory shed, which is temporarily closed for last 2 months. Relevant or irrelevant? Temporarily closed. Irrelevant. Boss, you run the business, you don't run the business, you have committed, you have to incur. So this one we call it as shutdown cost. Okay. And it has nothing to do with the decision making. However, if the question is about should I run the business, should I not run the business, for that it has an impact. Okay. More about it we are going to see in further discussion things. We have a discussion on shutdown cost, dedicated discussion on it. Beta company has paid rupees 3 lakh to a market research agency. Beta company has paid rupees 3 lakh to a market research agency to find out the market demand of innovative product developed by the company. Relevant or irrelevant? See, this we are spending on feasible study. Now let's say marketing team says, no, you guys don't have a business there or don't have a market there. You will run the business or you will not run the business? Not run the business. That's okay. But you will pay that 3 lakh to marketing agency or you won't pay 3 lakh to marketing agency? You will pay. If at all they say, no, go and run the business, crazy market, you guys will be the market leaders. Now, will you pay that 3 lakh or you won't pay that 3 lakh? That means whether research says okay, whether research says not okay, you are going to pay them. So, irrelevant. It is irrelevant for decision making. Got it? And we call it as sunk cost because it is already committed. Boss, whatever the result you give, it doesn't matter. We are going to pay you that amount. Sunk cost. Next, Zen LLP has paid incentive of 5 lakh at 1% on sale to salesman for achieving the sales beyond the expected sale of 25 lakh per month per salesman. This commission is there, no? Selling and distribution cost. The more and more they sell, more and more commission you pay, less and less they sell, less and less commission. That means, of course, it motivates them to make more sale. More sale means more cost. So automatically this is relevant cost. That is your relevant cost. We call it as out of pocket cost. Okay, that means because the money is going out. One more is your economical cost or imputed cost. That is, money is not going out, but opportunity cost is there. So imputed cost or economical cost is one more name for your opportunity cost. Actually, money is not going out, but for decision making, it's there. Considered that one. A startup company has invested rupees 50 lakhs in project P. The company could have earned interest of rupees 3 lakh by investing the amount in FD at 6% per annum. This is your opportunity cost and it has impact on decision making, because if I don't go for the business, I will put it in FD and I will earn the interest. If I go for a business, I won't be able to do that. I will lose the interest. So of course that interest factor also should be considered while making the decision. Got it? Hope you guys understood about relevant cost as well as irrelevant cost. Yes? Great. Now we are jumping into basics of your marginal costing. Let's see one by one. Now first I'm assuming, or I'm telling you, no.
Only the answer.
I should write what cost it is and relevant or irrelevant. More about that cost in first chapter, division of cost on the basis of managerial decision making. There is one big list. You can go through that. Marginal costing statement for decision making, guys. This is the statement we generally use where there is no opening stock and closing stock. Whatever is produced is sold. For that we are using this. Okay, listen. We take the revenue, that is sales, less variable cost. Now what do we get? That one we call it as contribution. What we get? That one we call it as what? Contribution. From the contribution, we reduce the fixed cost. Fixed cost in marginal costing is also known as period cost. It could be an MCQ question. Okay. Fixed cost in your marginal costing is also known as fixed cost. Okay. That will give you profit. If the contribution is more than fixed cost, profit. If the contribution is less than fixed cost, loss. Contribution is nothing but a portion of sales which is left over after recovering variable cost. Portion of sales which is left after recovering of variable cost, we call it as what? Contribution. Got it? Now listen. Now let's say we are dealing in some product. Where?
In the KOV, the class where there is no AC. There is some classes going.
No. Why?
Lot of students.
They are using study hall properly. That's why you feel bit disciplined way they are sitting. Classes are not going on. Artya is there, yeah. So no classes going on. But I don't know. Yesterday onwards, I think these guys also started scolding. So good it is. Good. That's the way study hall should be. Okay. Because discussion in the name of discussion, that never happens there. Simply round table conference will happen. All the unnecessary stuff. And somewhat I believe that I don't mind 100 people getting that inconvenience through that. But if one person is able to study well using that, that is more than sufficient. That should, because out of 10, if one is interested, that's fine. Let that person study. That's the case. I don't know. But yeah, again, if we go to ground floor, how much they can control. That panel itself has become like now round table discussion. All nice chairs is you guys got. You can turn around, keep talking. Can't tell. Now, let's say we have 1000 units. We have 1000 units and selling price, let's say it is around rupees 200. Okay. Variable cost, let's say around 60% of selling price. Variable cost is 60% of selling price, and fixed cost is around 50,000. Fixed cost is around 50,000. Now can you guys help me out in determining the profit? Sales will be how much? Sales will be 2 lakh. Variable cost will be how much? 1,20,000. And contribution will be 80,000 minus fixed cost would be 50,000. Profit rupees 30,000. Is that clear? Hello? Great. By the way, now that contribution 80,000 is there, no? Contribution 80,000 is there, no? If I do contribution to sales, that is 80,000 divided by 2 lakh into 100. Now I get 40%, right? This 40% is nothing but, guys, contribution percentage. What do we call it as? Contribution percentage. In fact, this is also known as PV ratio. This is also known as PV ratio. We call it as contribution percentage, or we can also call it as PV ratio. Is that clear? How to determine that? Very simple. Contribution by sales into 100. You need not to take the full sale also. Even per unit if you take, because of the variable cost varies with the different product, different units you produce, automatically even that will give you the answer. For example, how much is selling price? 200. Variable cost is 60% of selling price, which is 120 into 100, which is gonna be 80, because selling price is 100, variable cost is 120, so contribution per unit should be 80, so 40%. Is that clear? Hello?
Yes, sir.
Now also, using contribution percentage, I can find out variable cost percentage. How, sir? If I take sales as 100, out of that sale, if 40% is contribution, remaining 60 should be what? Variable cost only. So, and 1 minus variable cost percentage will give me PV ratio. 1 minus variable cost percentage will give me PV ratio. Is that clear? Yes? Now, proceeding further. Now, let's say, guys, our business, we decided that to give discount of 10% on selling price. Discount of 10% on selling price. This will increase units sold by, let's say, 20%. Now tell me, should we go for it or no? See, sales will be how much, guys? Selling price is how much? It will be 180. Correct? No. Units will be how much? 1200, because it won't be 1000 anymore. It will be 1200. 180 into 1200? 2,16,000. Variable cost is 60% of this, which is 1,29,600. Correct? No. Contribution will be 1 second. Wow. How much it is, guys? 60% of this? 1,29,600. Contribution will be 84,000, 86,000, 86,400. Fixed cost would be 50,000. Profit would be 36,400. Is that clear? Hello. May I know selling price here we took how much? Variable cost we took how much? Now tell me one thing. Let's say ArivuPro pays, ArivuPro gives discount to students. ArivuPro gives discount to students. Now, just because ArivuPro gave discount to students, do you think faculties give discount to ArivuPro? No. Let's say I am buying some product from the supplier. From that supplier, I am buying right now at 120 rupees. I am selling it at 200 rupees. Now I decided to reduce my selling price to 180. Do you think my supplier also reduce his selling price proportionately?
No.
He will keep 120 only, no? Hello? Then when I change selling price here, don't you think variable cost won't change with its proportion? Yes or no? Why? Why it will change? That's what I told. When I am selling at 200, I bought it at 120. Now I reduce my selling price to 180. That has nothing to do with my supplier. My supplier will give it at 120 only, no? Just because I am giving discount to my customer, why my supplier will give discount to me? That means, yeah. That depends on us. So always remember, guys, variable cost will never change along with the change in selling price. Okay, so don't do 60% of the sales there. You know that although selling price changes, variable cost is not going to change. Variable cost per unit is gonna be 120 only, just like the earlier one, because my selling price is changing. Of course, for the change in units, total variable cost will change, no doubt in that, because along with more and more units you produce, more and more cost you will incur. But selling variable cost per unit will not change. That's what I am telling. Is that clear? So may I know how much is 120 into 1200? 72,000. Now tell me, should we go for it or should we not? We should not. Hope it's clear. Hello. No, that is in the current scenario. Now the question is, I am planning to give discount of 20%. 10%. Where that's gonna increase my sales quantity by 20%. Should I go for it or should I not go for it? So just because I will reduce my selling price by 10%, my supplier has nothing to do. They will give it at the price what they want. If they want to increase their sales, then they might give it at discount. Got it? Hope it's clear, everyone. Hello. Okay. So this point is clear now. That is, total variable cost changes along with the change in the sales quantity. However, variable cost per unit will never change with the change in selling price. Change in selling price has no impact on variable cost. Hope it's clear. Now, let's say no change in selling price and all. Okay. No change in selling price and all. Old selling price, old variable cost, everything is same. Now, instead of 1000, let's say I am selling 1500 units. Instead of 1000, I am selling 1500 units. So 1500 into 200. 3 lakhs. Variable cost 1,80,000. That is 120 into 1500. 1,80,000. Contribution 1,20,000. And your fixed cost profit will be 70,000. Yes, guys, can you tell me, when due to this 500 units extra what we sold, what is the change in your sales? What is the change in your variable cost? What is the change in your contribution? What is the change in your fixed cost? What is the change in your profit? That means, can I in simple say that change in my contribution will be equal to change in my profit? Change in my contribution will be equal to change in my profit. Also, I know that my PV ratio is how much? 40%. Also, can I ascertain it only with the change in contribution by change in sales? 40,000 is change in profit. 1 lakh is change in sales, because everything is variable in nature. Correct, no? So, how many percentage? Can I say this way? Hello? Any doubts? No. So, my PV ratio is 40%. So, change in contribution by change in sales also will give me PV ratio. Now, let's say question is not telling anything about this. Question is not telling anything about it. Question is only telling so much. That is, they are telling how much is the sales and they are telling how much is the profit. Now, using only these two information, can you determine the PV ratio? How? Difference in profit divided by difference in sales will give me PV ratio. Why? Because difference in profit is as good as difference in contribution. Correct, no? So I can treat my change in difference in profit as change in contribution altogether. Yes or no? So can I say that same, I am not taking change in profit, rather I am taking change in contribution. 40,000 divided by 1 lakh change in sales into 100 will give me 40%. So always remember, change in profit divided by change in sales will also give us PV ratio, or we can call it as contribution ratio. PV ratio, or we can call it as contribution ratio. Is that clear? Any doubt? Okay. Now shall we go to the further stage? Same thing. Selling price rupees 200 I took, right? Okay. Variable cost rupees 120. Units sold 1000 units. Fixed cost was rupees 50,000 or 30,000? 50,000. Done. Shall we proceed? Listen here. Now, can you quickly help me out with decision making table? Sales will be how much, guys? 2 lakh. Variable cost 1,20,000. Contribution will be 80,000 and fixed cost profit anyone any doubt here? No doubt? Pakka? Now listen. Let's say we want to determine by selling how many units. Right now we are selling 1,000 units. So we are making profit of how much? 30,000. Now I just want to know, if worst thing happens, then of course my sales quantity will reduce. Now I want to know till what quantity I can go to make sure I end up making no profit, no loss. Now that point or number of units what we should sell to make sure no profit, no loss is achieved, that particular sales quantity only we call it as break-even point or break-even sales units. Okay, that is where our revenue will break even with our cost. That only we call it as break-even sales or break-even quantity. Okay, break-even point. Is that clear? Now, let's determine. First, let's determine in terms of units. Let's say, if at all I sell B number of units. What number of units? B number of units. I end up making no profit, no loss. If I sell B number of units, I end up making no profit, no loss. Now tell me, how much will be the sales? Selling price is 200 rupees. Units are B. So the sales will be 200B. Sales will be 200B. If at all I sell 200B, what will be my profit? 0. Why? Because that's what I assume, no? If at all I sell B number of units, I end up making no profit, no loss, because B number of units, the assumption is break-even point. Is that clear? Now, talking about variable cost, 120 rupees per unit. So, for B, 120B. Contribution will be 80B. Fixed cost will be 50,000. Fixed cost will be 50,000. Is that clear? Now can I say that 80B minus 50,000 is equal to 0? Can I say that 80B is equal to 50,000? I don't know maths. Slowly. We'll go one by one. I don't know maths, know what to do. I'm not smart like you guys. B is equal to 50,000 divided by 80. Now B is equal to 625 units. That is, if at all you sell 625 units, you end up making no profit, no loss. You end up making no profit, no loss. Is that clear, everyone? Hello? Now, this is one way, using the table, finding out the break-even. Or else, can you tell me one thing? In amount, can you tell this? In amount, shall I take sales as, in amount, shall I take sales as X? That is, if my sales amount is X, I will end up making no profit, no loss. 0. How much will be my variable cost? You can see that when selling price is 200, my variable cost is 120. That means, can I say that it is 60% of sales? So 0.6x. My variable cost is 60% of sales, which is 0.6x. Contribution will be 0.4x. And my fixed cost will be 50,000. Now guys, can you help me out with this? 0.4x minus 50,000 is equal to 0. Can I say that 0.4x is equal to 50,000? Can I say that x is equal to 50,000 divided by 0.4? And can you tell me X is equal to 1,25,000. Got it? Now, shall we write and check whether these numbers are correct or no? Okay. My sales will be how much? 1,25,000. That is 625 into 200. 1,25,000 only. Variable cost will be 120 rupees per unit or 60% of this. 75,000. Contribution will be variable fixed cost, profit 0. Hello. That means, can you notice something here? Fixed cost is equal to contribution. So always remember, at break-even point, fixed cost is equal to fixed cost is equal to contribution. Is that clear? Now, let's say I want answer in amount. How do you arrive at contribution if at all you want answer in amount? Sales in rupees I will take. Hello. Sales in rupees I will take and I multiply it with PV ratio. Remember, not contribution per unit. Because if I multiply amount with amount, what do I get? How can you multiply amount with amount? Can you multiply amount with amount? Have you ever multiplied amount with amount? Where? Tell one example. Money is it? Tell. Money. Sir, 100 rupees into 100 rupees will give you 10,000. 100 rupees into 100 units of 100 rupees will give you 10,000. You will never multiply amount with amount. Amount with amount will give you some nonsense stuff. Always remember, amounts are multiplied with units or amounts are multiplied with percentages, never with. Got it? So here, if at all I am taking sales amount, I can't multiply with contribution per unit because contribution per unit will give me in amount it is. So rupees into rupees I can't multiply at all. So now guys, here I am telling that my contribution will be equal to fixed cost. Correct? At which point? Break even point. Then can I say fixed cost is equal to, or let's say break even sales rupees. Break even sales rupees into PV ratio when I do, can I say that it will give me contribution at break even sales? Break even sales into PV ratio will give me contribution at break even sales. Yes or no? Can I say that contribution at break even sales will be equal to at break even point contribution is equal to fixed cost? No. Then contribution at break even sales will be equal to fixed cost. So break even sales in terms of amount, if at all you want me to write, what I will do, fixed cost divided by PV ratio. Fixed cost divided by PV ratio. Is that clear? There is one formula. Here, you guys skipped this step, no? What is this X? What sales? Break even sales. What was that 50,000? What was that 0.4? Hope it is clear. Hope it is clear. Now, let's check whether same is applicable for break even sales in units. Now, how to arrive at a contribution when units are given, sales units are given. So I will take sold units, correct? To the sold units, if I multiply PV ratio, what do I get? I get answer in units only. Correct? No. But do I want answer in units or amount? Amount. Because contribution I want in amount. So sold units I should multiply with contribution per unit. What do I multiply with? Contribution per unit. That will give me what, guys? Contribution. Always remember this. Units into rupees we do, not units into percentages. Amount into percentages we do, not amount into amount. Please keep in mind. Okay. Now here sold unit, let me take it as break-even sales units. Okay. To the break-even sales units, if I multiply contribution per unit, what do I get? I get contribution at break-even sale. You already multiplied unit into amount. No, you won't get per unit. Now I know that at contribution per break-even sale is equal to fixed cost. So can I say that break-even sales units into contribution per unit is equal to fixed cost? Can I say that we can determine break-even sales per units as fixed cost by contribution per unit? Yes?
Yes.
Simple. So here you skip this step. No. What was that? B. Break-even sales in units is equal to, what was that 50,000? Fixed cost divided by, what was that 80? Contribution per unit. Remember that is in rupees. Okay. Anyone, any doubt in this break-even? Please let me know. You can use either of the method. You can use the formula directly, fixed cost by that, or you can use table, or you can simply write at break-even point contribution is equal to fixed cost. Let break-even point be X. Contribution per unit will be there in percentages or in rupees. If you want in units, take the rupees. If you want in amount, take the percentage is equal to fixed cost you do, and automatically will end up there. Anyone, any doubt in the break-even point? File is already uploaded, I feel. File is uploaded. You can get it, I will send. I think its link is there in description, no? Download notes, yeah. Link is there in description. Hope it's clear. Now shall we proceed? Now we'll go further. We understood that our break-even point is how much? In units? 625 units. Correct, no? That means when we sell 625 number of units at the rate of 200, we end up making no profit, no loss. Tell me, when and all the break-even point will change? Will it change when the fixed cost changes? Of course it will, because the formula has fixed cost in it. Will it change when the selling price changes? Of course it will change, because it has contribution. Contribution will change along with change in selling price. Will it change along with variable cost? Per unit variable cost change? It will, because contribution will change. If that changes, break even also will change. Will it change along with the sales quantity? Will your break even changes along with sales quantity? Will it change along with the sales quantity? No. Why it will change? For example, now let's say we decided, if at all we are going to have 30 students in our classroom, we end up making no profit, no loss. Now, 20 students came to class. Do we change our break even to 20 or we'll keep it 30? 30. 40 students came. 30. 50 students came. 30. 100 students came. 30. That means number of units sold doesn't change your break even sales. Break even is a limit what you kept. Because if you sell more than that, you will make profit. If you sell less than that, you will make loss. You will incur loss. Yeah. Profit changes. Break even won't change. Break even is a limit what we are keeping. Right? It has nothing to do with the change in sold units.
Changes like if the profits are more, it will be more than break-even point.
If profit is there, we sold more than break even. If profit is not there, it means we sold for something less than break even. That's why we are incurring a loss. If we have sold at a break even, that means we wouldn't have made any profit or loss. Okay. Now, break even point. Sales quantity was how much? 1000 units. Correct. Selling price rupees 200. Variable cost 120. Fixed cost. Got it. Hello. Now, listen. I will take my sales. Can you guys help me out with this? Sales 1000 into 200. 2 lakhs minus variable cost 1000 into 120, 1,20,000, and your contribution will be 80,000. From that, if I reduce my fixed cost 50,000, that will end up giving me profit of 30,000. Profit of 30,000. Is that clear? Okay. Please discuss more number of problems. Sure. Hardly we have 70 somewhere there. I don't know what is more number. 70 is more than sufficient. So, don't scare me, man. I can complete 7. Damn sure. Marginal costing done and will be done and dusted today for sure. Your promise.
That is the reason you told us to sleep well yesterday.
Yes. So today you won't sleep. Now, listen. What if I had achieved break even? If at all I had achieved break even, 625 into 200. 1,25,000. 625 into 120. 75,000. My contribution will be. My fixed cost will be. Profit. That means if I split that 2 lakh into 2 portion, this portion will be called as break-even point. Correct? No. Remaining sales is how much? Variable cost is how much? Contribution is how much? And your fixed cost? 0. For the extra sale, you are not incurring any fixed cost because already fixed cost is recovered in your break-even. Already fixed cost is recovered till the point of break-even. Then profit will be how much? Got it? Now, if at all the portion of sale which will bring me to no profit, no loss, if I call it as break-even point, then the portion of sale which is more than break-even, what should I call it as? I will call it as margin of safety. MOS. A portion of sale which is more than break-even sale, we call it as margin of safety. Now, can you notice something here? At break-even, contribution will be equal to fixed cost. Here, contribution will be equal to. So, can I say that? How to arrive at a contribution here, guys? 75,000 into 40%. Yes or no? Which is? What is this 75,000? Margin of safety. What is this 40%? PV ratio. What is this 30,000? So, can I say that margin of safety is equal to profit by? So, sales over and above the break-even sale, we call it as margin of safety. So, you can divide total sale into two parts. Break-even sale, margin of safety. Break-even sale plus margin of safety is equal to total sale. Anyone, any doubt in this? Let me know. If there is no doubt, we can proceed. No doubts? Pakka? Pakka no doubts, no. Sorted. This is your margin of safety. By the way, there is something called as cash break-even point, guys. Cash break-even point is nothing but rather than taking the full fixed cost, we take only the cost what we incurred in cash. Like non-cash item like depreciation and all will not be considered. Okay. Cash break-even is what sale you need to make sure you will be able to pay off all your cash expenses. All your cash expenses. Is that clear? Now, let's say I want to make profit of 80,000. How much profit I want to make? 80,000. How many units should I sell? Shall I say that? Okay, listen. Shall I say we need to sell around X number of units to make the profit of 80,000? Okay. So if I sell X number of units to make the profit of 80,000, then sales will be how much? 200x. Selling price is 200. X number of units. Sales will be 200x minus variable cost 120x. Contribution 80x minus fixed cost 50,000. I am selling X number of units. What did I assume in X number of units? If I sell X number of units, I will end up making profit of 80,000. Got it? Now can I say that 80x minus 50,000 will be equal to 80,000. 80x is equal to correct. Yeah, writing. Sorry, my bad. 80,000 plus 50,000. So x is equal to
1,30,000
X is equal to A. X is equal to, that is, if at all I sell 1625 units, I will end up making profit of 80,000. So what is this 200x? 200 into 1000? 3,25,000. Variable cost 120 into 1625. Contribution, fixed cost, profit. Understood? Look into this. You can solve this way always using the table, or you can go for formula also. Now, what is that X? X is your units to be sold to achieve the profit of so much. That one I will call it as desired quantity. Desired quantity. Okay. What was that 80,000? 80,000 is your desired profit. Correct? No? 80,000 is your desired profit. What was that 50,000? Fixed cost divided by 80 is what? Contribution per unit. This form. See, this is break-even formula only. Break-even, what is the formula? Fixed cost by contribution per unit. Yes or no? Fixed cost by contribution per unit. Now, when it is fixed cost plus contribution per unit, fixed cost by contribution per unit, we'll end up making no profit, no loss. That means next to fixed cost, profit is there, which is 0. Here, I want particular profit. So, everywhere it is fixed cost plus desired profit divided by contribution. In case of break even, my desired profit itself is 0. Understood? So, remember this formula. Any number of units to be sold when you want to calculate fixed cost plus contribution divided by, fixed cost plus profit divided by contribution per unit. Whereas, in case of break even, my profit is required is 0. That's why we take only fixed cost. Instead of contribution per unit, if I use PV ratio, I will arrive at amount. Break even. Is that clear, everyone? Anyone any doubt? But any point of time, if at all you are feeling, sir, confusion, formula, these many, use the table. You understood table, no?
Yes.
So, marginal costing statement for decision making, sales minus variable cost will give you contribution. Contribution minus fixed cost will give you profit or loss. And what is contribution? Amount of sale which is available to recover fixed cost and contribute towards profit. So how to arrive at it? Total contribution by total sales into 100, or contribution per unit by sales price per unit into 100. Also you can compute variable cost to sales, that is variable cost to sales or variable cost ratio is equal to total variable cost or variable cost per unit divided by total sales or selling price per unit into 100. Sales is nothing but variable cost plus contribution percentage. And your change in profit by change in sales will also give you PV ratio, because change in profit and change in contribution are same. Correct? Any doubts so far? No doubts? We can proceed. And one more very important aspect to remember, also based on this, the illustration is also there. That is, variable cost will not change with the change in selling price. Total variable cost will change only due to change in number of units sold. Only due to change in number of units sold. And if the question says sales increased or decreased, it is assumed to be due to change in the sales units and not due to change in selling price. Sometimes they say that sales went by 15% down, sales went up by 15%, all those things. Always remember that is due to change in sales quantity, not due to change in selling price. And break-even point or break-even sales are nothing but, guys, level of sale at which there will no profit, there will be no loss. There will be no profit, there will be no loss. That is, your revenue will be equal to total cost. At break-even point, contribution is equal to fixed cost. Break-even sales in units. Break-even sales in units means number of units to be sold to achieve break-even sales, which is fixed cost by contribution per unit. Okay, if at all you want it in rupees, that is fixed cost by PV ratio. Cash break-even sale is sale at which revenue will be equal to cash expense. Cash break-even in units is nothing but fixed cost incurred only in cash divided by PV ratio or contribution per unit. Got it? Margin of safety is nothing but sales over and above the break-even sale. At margin of safety, contribution is equal to fixed. At margin of safety, contribution is equal to profit. Correct? And sales is equal to break-even sales plus margin of safety. Sir, earlier you told variable cost plus contribution. That is also correct. This is also correct. Okay. Here sales amount, we are dividing it into two different sales. There we divide into cost and contribution. Okay. So MOS is nothing but sale minus break-even sale. Profit by PV ratio if you want it in amount. Profit by contribution per unit if you want it in units. Okay. Now, there is something called as shutdown cost. There is something called as shutdown cost. What is this shutdown cost, sir? Guys, remember, shutdown cost means any cost what we incur. Shutdown cost means any cost what we incur even if we shut down our business. Even if we shut down our business, whatever the cost what we incur, we call it as what? Shutdown cost. What do we call it as? Shutdown cost. Okay, that is any cost what we incur even if the business is stopped temporarily, that thing we call it as shutdown cost. Now let's say why that is relevant, sir. Why that is relevant? Let's say Gayatri is running some shop. What shop? G? All other things are correct. Numerology. Gayatri is having what shop? Food. Okay. What food? Particular. One food. Because multiple product will go later. Parota. Dessert. She's asking who is owner, you or me? Who will decide? Okay. Dessert. What? Truffles. Okay. She's selling truffles. Now, let's say per truffle selling price is how much, madam? 120. Variable cost is how much? 50. Fixed cost is how much?
50. Fixed cost. 50 rupees. 120.
50,000.
50,000 per month. Got it? Let's say this includes two elements. One is rent. which is 20,000 per month. Okay. One more is staff salary, which is 30,000 per month. While that staff was about to join, that time only Gayatri told one thing. See boss, if at all I ask you not to come to work from tomorrow, you should stop coming. No more salary will be paid. That means once I stop running my business, don't even expect me to give you any money, salary. But rent, whether she can tell the terms? No. The owner of the building will tell. Owner of the building told that, Madam, whatever you are starting, we will be having agreement for 24 months. So you run the business, you don't run the business, for the next 24 months, you have to pay the rent. You have to pay the rent. Is that clear, everyone? Yes. Now let's say in the first month, she was able to sell 2,000 truffles. What will be the sales? Awesome. 2,000 into 120. Crazy. 2,40,000 minus variable cost. 1 lakh. Contribution 1,40,000 minus fixed cost 50,000. Profit 90,000. Now tell me, Gayatri should run the business or should she close the business? Run the business. Mad or what? To close the business when it is making profit, isn't it? Good now. Take to your own this thing. Done. Shall we proceed? Second month. First month, how many units she sold? 2,000 units. Then people got to know it's just a hype. Nothing is there. Special and all. Yes. Normal. Worst. Not worst. Normal. Huh? Yeah. First everyone will go and check out. No. Oh, this new place has come in Coimbatore.
That happens in Coimbatore.
No, not Coimbatore. Not Coimbatore. Everywhere. Food is that. Everyone wants to try new spot. And if you will like it, if you will not like it. And nowadays, though, whatever this social media guy says, few influencers will take money and do. But few influencers are genuine. They give good review. Now, second month, because of people getting to know it was just a hype, sales fell to 1,000 units. Next month sales will be how much then? 1,20,000 variable cost, 50,000 contribution, fixed cost, profit. Should Gayatri run the business, close the business? She should run the business because she's making profit, right? She's making profit. Okay. Now, I will change the salary to 15,000, okay? And rent to 35,000. Now, then people realize that the quality of her truffles is not that great, right? First they realized it was just a hype. Then they realized quality is not good. Now let's say sales straight away fell to 600 units. Third month. Now tell me, how much will be the sales? 72,000 variable cost, 30,000 contribution, fixed cost, profit. Now my question is, should Gayatri run the business or close the business? Close the business, she is making 8,000 rupees loss. If she close the business, fourth month, her sales will be how much? Nil. Variable cost will be how much? Contribution will be. Fixed cost will be 35,000. Because when she closed the business, she told her staff not to come. But can she tell her landlord not to come? Don't come and knock door and all. Done. No. That means she will incur loss of. When she is running, she will incur how much? Now when she closes, how much? So she should run the business. When nothing is going good in life, whatever bad is happening, in that select the worst thing. I mean, not worst thing, best thing. If everything is worst, in that worst, select best. Correct? No. I agree, both are loss only. But 8,000 loss is better than 35,000 loss, no? Yes? Now, this 35,000, the cost which will be there, irrespective of you running the business, not running the business, this cost we call it as shutdown cost. What do we call it as? Shutdown cost. She cannot avoid it for 24 months. She cannot avoid it for 24 months. This cost we call it as shutdown cost. So always remember, whenever the shutdown cost is there, it's not something like just because you incurred a loss, you will close the business. No. You should consider shutdown cost also. Is that clear? Now, going further. Now, at what point Gayatri should close the business? Now we determined she should not. When she should? When she runs the business and her loss goes for more than 35,000. Correct? No? When she runs the business and if loss goes for more than 35,000, then it's better to run the business or close the business? Close the business. If you close the business, loss will be restricted only to 35,000. Got it? And remember, when you are running the business, fixed cost will always be 50,000, not 35,000. Few students will do this mistake while computing shutdown point. They will take fixed cost as shutdown cost. No, you are running the business. If you close the business, then only fixed cost is your shutdown cost. Now, how to determine that? Let's say she should sell X number of units so that her loss will be 35,000 or lesser than 35,000. So, sales will be how much? What is the selling price? 120. So, sales will be 120x. Variable cost will be 50x. Contribution will be 70x. Fixed cost will be 50,000, not 35,000. Please keep in mind, because we are thinking of running the business. Profit or loss will be, whenever I sell X number of units, my profit or loss, let's say it shall be lesser than or equal to 35,000. Lesser than or equal to 35,000, or in simple for the time being, you take it as equals to 35,000. That is 70x minus 50,000 is equal to minus 30,000. Please keep in mind. Sorry, 35,000. Now, 70x is equal to, no. Come on, guys. Plus 50,000 minus, I don't know maths. Come on. What maths? Step mark, not step mark. Who will explain formula again? Divided by. Got it? Inter-level. Do it. How much? You are in intermediate level. What nonsense stepwise you are doing? 214, huh? 214.28 units. That means if at all she is able to sell anything more than 214.28 units, let her run the business because her loss will be less than 35,000. If at all her units sold are lesser than 214.28, close the business because if you run the business, loss will be more than 35,000. Okay. Now this 214 what we got, this we call it as shutdown point. What do we call it as? Shutdown point. That is the point. If at all units sold are more than this point, run the business. If units sold are less than this point, close the business. Always remember, if the variable cost is more than selling price, don't produce one also. If you produce one, negative contribution on that negative fixed cost, double loss. If you don't run only, then only negative fixed cost will be there. This point is coming into existence because contribution is positive, we are making loss. Contribution is positive, we are incurring loss. If contribution is negative, this point itself won't come. For each and every unit you are selling, you are putting money out of your pocket. Got it? So whenever the contribution is in negative, you have nothing to think of. Shut down. Okay. Now, hope you guys understood shutdown point. How did you arrive at 214? What was that X? X was your shutdown point. What was that 50,000 guys? What was 35,000? Shutdown cost. Loss as well as shutdown cost. Shutdown cost only I took it as loss. No. Divided by 70 is? So fixed cost minus shutdown cost, contribution per unit. Sir, this also we have to remember now. Same formula. What was the formula? Fixed cost plus profit divided by contribution per unit. Here profit is not there, loss is there. So I took it as negative. Shutdown point itself is a loss what we are expecting. Got it? So now shall we see few questions on this SDP?
Yes.
Time is there, madam? It's there, no? 2 questions we have. Shall we see?
Yes.
Quickly. Mr. X has 2 lakh, this study material question. Mr. X has 2 lakh investment in his business. He wants 15% return on his money. That means how much profit he wants? He wants profit of 30,000. From an analysis of recent cost figure, he finds out that variable cost of operating is 60%. That means PV ratio will be how much?
40.
His fixed cost is 80,000 per year. Show the computation. What sales must be obtained to break even? Should I use the formula or what? Table? Okay. Table, shall I start straight away with the contribution? Yes. So contribution at break even will be what? If I take break even sales as X amount, contribution will be 0.4x. Hello? 0.4x minus fixed cost, which is 80,000. That will give me 0 because X what I took it as break even sales. Now X is equal to rupees 2 lakh. So my break even sales is rupees 2 lakh. Whoever want to use the formula, fixed cost by PV ratio, 80,000 divided by 0.4. Is that clear? Okay. Next, what sales volume must be obtained to get 15% return on investment? Let me say the sales amount to make that 30,000 rupees profit be Y. Okay. If at all I sell Y number of units, my contribution will be how much? 0.4Y. If I make sales as Y, my contribution will be 0.4Y. From the 0.4Y, when I reduce my fixed cost of 80,000, I should still end up making 30,000. So y is equal to, sorry, 2,75,000. So I should make the sale of 275,000. Or you can, if you want to use the formula, you can use the formula, that is desired sale is equal to fixed cost plus desired profit divided by contribution per unit. Whereas desired sale is y, fixed cost is 80,000 plus desired profit is 30,000 divided by PV ratio is 0.4. Is that clear? Next, what they told. Mr. X estimates that even if he closed the doors of his business, he would incur 25,000 as an expense per year, shutdown cost. At what sale he would be better off by locking his business up? Let's say the shutdown point, or if at all he makes amount Z amount of sale, he will end up making loss of 25,000. Okay, so if he sells, sale is Z, then contribution from that will be 0.4Z. From that, if I reduce 80,000, then he will make the loss of 25,000. Okay, so Z is equal to 1 lakh. That means if the sales goes less than 137,500, close the business. If it is greater than 137,500, continue the business. Equals means works both the side. It depends on proprietor, if he really wants to continue or if he wants to close. But to be like, if it practical point of view, if it's equal, they would like to continue because they want to try their luck again, because they are not losing anything extra there. Got it? Simple. Hope this shutdown point is clear. If you want to use the formula, what is the formula? Fixed cost 80,000 minus shutdown point 25,000 divided by contribution per unit. Instead of contribution here it is PV ratio 0.4. Is that clear? No doubts? Look at this one. PYP November 2023. For 5 marks they have asked this question. R Limited produces and sells 60,000 units of product AN at its Noida plant. Okay. The selling price of product is rupees 15 per unit. The variable cost is 80% of this, which is 12 rupees. Correct? No? Fixed cost during this period is 420,000 rupees. The company is continuously suffering the losses and management plans to shut down the Noida plant. The fixed cost is expected to reduce by 2,50,000. Right now, how much it is? 4,20,000. They are not telling it will reduce to 2,50,000. They are telling it will reduce by 2,50,000. Got it? 1,70,000. That means this though you can't avoid. It is reduced to 170,000 or reduced by 250,000. And also additional cost for shutting down is 25,000. That means your shutdown cost is 195,000. 25,000 to close down. Plus, if you close down also, you are incurring that 1,70,000. No? Is that clear? Any doubts? Pakka. My shutdown cost is 195,000. Now, you are required to comment on whether the Noida plant be shut down. Guys, listen. I will shut down my business if at all my loss is more than 195,000. Otherwise, I won't. Now, shall we find out how much is our actual current loss? Yes. How many units you are selling?
60,000.
See here, as it's a revision, I am not concentrating on a presentation, but in examination, your presentation must be very good. Okay. And in examination, see, very simple. How to determine presentation is good or no? Always remember your answer sheet. If at all anyone who knows to read, if at all they take and read it, Although if they don't know the concept, still they should be able to understand what you have done. It should be that clear. If that is case, that is the thing, then it is sorted. It should not be in such a manner that whoever knows how to solve, they should get confused. No. Whoever don't know that concept, if they read it, they should be able to understand. For example, study material and all, when we see, before solving that, will you be knowing how to solve? After reading that answer, will you be able to identify how to solve? That means study material presentation is good. So presentation should be like that. Okay. So now I am selling 60,000 units, and from each and every unit I am making contribution of 3 rupees. Correct? No? 1,80,000. And how much fixed cost I am incurring? 4,20,000, not 195,000. 195,000 is only if you close the business. 2,40,000 loss. That means better to shut down. Because if you shut down, your loss is just 195,000. Because you are running, it is going to 2,40,000. Also they asked shutdown point. Let's say if you sell X number of units, your loss is restricted to 1,95,000. That means your contribution will be 3x. 3 rupees per unit you will make, X number of units you will sell. Where fixed cost to be recovered is 4,20,000. This is what I told earlier. Because you are running the business. So that your loss will be 1,95,000. X is equal to 1,95,000 minus 420,000. Sorry, divided by 3, 75,000 units. That is, if at all you end up making 75,000 units, you will end up incurring the same loss. So if the units are less than 75,000, shut down the business. Units are more than 75,000, operate the business. Equal to 75,000 also, you can operate the business. Okay. Hope it's clear. Shutdown point concept is clear, everyone? Pakka? Okay. Should I take a break or should we continue? Continue. One small concept will continue and will proceed. Okay. Shutdown cost which is to be incurred although we temporarily shut down the business. Shutdown point, if number of units sold fall below shutdown point, then loss of running business shall be more than shutdown cost. Decision making, if sold units are greater than shutdown point, run the business. If the sold units are less than shutdown point, close the business. Is that clear? Is that clear about shutdown point? We'll do one thing. Now we'll see few basic questions. Then we'll go back to all those remaining concepts. Shall we? Total 3 questions we have solved, right?
Yes.
Look at this question number 2, which is your illustration question. Angle of incidence is more and more and more means always remember the difference between your the contribution is getting more and more and more. Difference between your sales and variable cost is getting more and more and more. That is your angle of incidence. Okay, please keep in mind. Now, by noting PV will increase, PV will decrease, or PV will not change, as the case may be, state how the following independent situations will affect the PV ratio. Guys, whenever they give like this in MCQ or anywhere it is, all you have to do is assume your own numbers first. Assume your own numbers first. Let's assume selling price as 100. Hello? Sales quantity as 10. Variable cost as 60. Now, tell me how much will be the sales right now. 1000. Variable cost, contribution, PV ratio 40%. PV ratio is how much? 40%. Is that clear? Now shall we proceed? First, increase in the physical sales volume. What will change? PV ratio will change. PV ratio will not change because selling price is not changing, variable cost per unit is not changing. No? So you can check. That's what I told. Using this, you can check now. Let's say this became 12. Then sales will be 1200. Variable cost will be, contribution will be 480. PV ratio will be 480 by 1200 into 100, 40%. That means this will not change. Is that clear? An increase in the fixed cost. Fixed cost has nothing to do with the PV ratio. No change. Decrease in the variable cost per unit. Let's say sales will be 1000 only. Variable cost, let's say it falls to 50. Then my contribution will be 500. My contribution will be 500. So how many percentage? 50%. So your PV ratio will change what? Increase. PV ratio will increase. Don't write PV ratio will increase by 10% because those are your numbers. Just write and come increase. A decrease in the contribution margin, array name only says contribution margin, difference between your sales and variable cost is decreasing. Automatically PV ratio will also decrease. Increase in the selling price per unit. Now let's say selling price will go to 120. Then sales will be, variable cost will be 600 only. Correct? Contribution will be, PV ratio will be, moral of the story, increase by decrease in the fixed cost. Whether fixed cost has anything to do with the PV ratio. 10% increase in both selling price and variable cost per unit. If they change in the same proportion, they are asking. Please remember this. It might be useful in the question solving. If both are changing in the same proportion, selling price will go to 110. Variable cost will go to 66. Sales will be 110 into 10. 1100. 660. 440. So 440 by 1100 into 100. 40%. So always remember, if at all the selling price and variable cost change in the same proportion, PV ratio will not change. 10% increase in the selling price, 10% decrease in the sales quantity. What do you think? 10% increase in selling price, it will be 110. 10% decrease in sales quantity, 9. So sales will be 110 into 9, 990. Variable cost will be 60 into 9. Contribution, 450 divided by 990 into 100. Moral of the story. Got it? 50% increase in variable cost per unit and 50% decrease in fixed cost. This portion has nothing to do. This portion has nothing to do. Correct? 50% increase in variable cost they are telling. Increase in variable cost, we already discussed that. It's gonna increase. If you want to check, you can check using that numbers. Angle of incidence, I already told. Sorry, decrease. Yeah. PV ratio will decrease. Angle of incidence, we already discussed. That is a gap between your sales and contribution. That means contribution margin getting bigger. Moral of the story, it will increase. Is that clear? Shall we see one more question? Look at this. RTP May 19 as well as November 19. Illustration. It's there. First question is also similarly like this only, but in the tax part and all is not there. Here it's there. Okay. See there, everyone. MNP Limited sold 275,000 units of its product at 375 rupees per unit. Variable cost are 175 rupees per unit. Manufacturing is 140, sales is 35. Doesn't matter. Variable cost is variable cost. Fixed cost incurred uniformly throughout the year and amount is 3 crore 50 lakh, including depreciation of 1 crore 50 lakh. So cash expense is how much? There are no beginning and closing inventory. First, compute the break-even sales quantity. Guys, shall I take my break-even sales quantity as B? That is, when I sell B number of units. By the way, my contribution per unit is 200. Selling price is 375. Variable cost is 175. Contribution per unit is 200. Now, when I at break-even point, let's assume unit sold is B, then my contribution will be 200B. From the 200B, when I reduce my fixed cost, 3 crore 50 lakh, that will end up giving me 0. Then B is equal to units. That is, if at all I sell 1,75,000 units, I will end up making no profit, no loss. If you want to use the formula, you can use fixed cost by contribution per unit. Got it? Cash break even. Here, let's say cash break even is C number of units. Then your contribution will be 200C. From 200C, if I reduce only the cash expenses, I will end up making no profit, no loss. C is equal to 1 lakh units. Again, I am telling, as it's a revision, we are not discussing on presentation, but you should show the formula clearly. Everything, whatever the integer you take here, unknown figures as X, Y, A, B, whatever it is, you should denote what is it. Is that clear? So this is 1 lakh units. Got it? Next, they are asking PV ratio. How much is my contribution? 200. How much is my selling price? Into 53. Got it? Compute the number of units that must be sold to earn income of 25 lakh. EBIT means interest and tax. All those things won't be there in this operating fixed cost. So 25 lakh is the desired profit. So listen, let's assume the units to be sold as A. If I sell A number of units, contribution will be 200A. From the 200A, if I reduce, they didn't ask EBITDA. If they ask EBITDA, that is before depreciation, I shouldn't have taken 350. Instead, I should have taken only 2 crore. Okay, so that should give me 25 lakhs. Now they are asking earning before interest and tax. That means after reducing depreciation. If at all they asked you 25 lakh EBITDA, that means earnings before interest, tax, depreciation and amortization. That means in fixed cost you should not consider depreciation, because I want to know before depreciation. Okay, so A is equal to 1,87,500 units. Is that clear, guys? Okay. Okay. Now, also desired profit formula is your fixed cost plus desired profit divided by contribution. Now, compute the sales level achieve and PAT, profit after tax, of 25 lakh. Assume 40% corporate tax. Shall I assume the sales at which I make it as X? X number of units. X number of units I didn't take, no? Yeah. Shall I take it as X number of units? Then my contribution will be 200X. From that, I will reduce the fixed cost. 3 crore 50 lakhs. Now, that will give me some amount, whatever it is. From that sum amount, when I reduce 40% further, that should give me 20 lakh or 25 lakh? 25 lakhs. Listen here. Very simple. Concentrate. Tax is 40%. That means whatever the amount profit before tax was there, no? Of that 40% went to tax. That means remaining 25 lakh is 60% of that earnings. If at all you earned 100 here, in that 40 went here, that means 60 is to 25 lakh. So may I know 100 is how much? 41 lakh 66,666.67. Got it? Now 200x plus 200x is equal to 3 crore 50 lakhs plus 41 lakh. $200x is equal to 3 crore 50 lakhs plus 41 lakh 66,666.67. So x is equal to 3 crore 91 lakh 66,666.67 divided by 200. 833.33 na? Okay. This is in units. If at all you multiply with the selling price. So if at all you achieve this much sales, you will end up making profit after tax of 25 lakh. I don't think so. Any doubt is there here? Anyone? Any doubts? Pakka. We can proceed. And always remember guys, marginal cost should be your first priority in examination. Marginal cost and standard costing. I'm telling you. Few will skip that chapter and go. Don't do that. One of the easiest chapter. Plus, weightage is good, plus very much time saving. All these if they give for 8 marks, how much time it will take? At the same time for budget, right? That's the case. But when you denote anything in the chart, make sure you denote it income. Like if you use X, you write income, what is X? Otherwise what they will think? Someone's X you have written. So that's the thing. If you write X, you should write income whose X it is. Study material question. You are given the following particulars. Simple thing. Fixed cost they have given 150,000. Variable cost they have given 15. Selling price they have given 30. So the contribution will be 15. They are asking break even point. Let's assume number of units to be sold to achieve this break even B. Before that, can you tell me PV ratio also? Break even units to sold is B. Then can I say it as contribution is 15B? From the 15B, when I reduce 1,50,000, I will end up making no profit, no loss because B itself is break even, right? So B is equal to 10,000 units. However, if at all you want to do it in sales, you can multiply with the selling price to this and you can write income. Or else, shall I take break even point in terms of amount be X? Then my sales will be X. Contribution will be 0.5X. Because PV ratio is 50%. Whatever sales is there, of that 50% is contribution. So 0.5X. From that, if I reduce 1,50,000, that is equal to 0. X is equal to 3 lakhs. Is that clear? Yeah. That's what I told. Either of the ways. This is your break even. Next they are asking sales to earn the profit of 20,000. Shall I say sales to make is yes? Okay. Yes. Contribution will be 0.5S. From that sales, when I reduce 1,50,000 fixed cost, it should give me profit of 20,000. So S is equal to 170,000 divided by 0.5. 3,40,000. If at all you wanted in units, my contribution per unit is 15. So by selling S number of units, I will make 15 rupees. From that 15 rupees into sale number of units will give contribution minus 150,000 is equal to 20,000. S is equal to 8. No. She told rupees. That's why I told A. Units. Got it? If you want to use formula, it will be fixed cost plus profit divided by PV ratio. Okay. Don't worry. I'm damn sure. Now you will be thinking of table, line, contribution, etc. I'm damn sure by the end of today's class, you guys will be in that situation of applying formula. Okay. There will be some point to the patience. Then once that patience is broken, then, hey sir, what XY you are doing? Put the formula. That happens in regular class also, here also. That means the patience will break when you are confident about the formula. That's what we need, right? So it's your choice. Shall we proceed? A company has PV ratio of 40%. Okay. Compute by what percentage must sales be increased to offset 20% reduction in the selling price. Guys, whenever they give like this, I told you already what you should do. Imagine your own numbers. Let's assume right now sales quantity be 100. Okay. Selling price how much? Selling price also, okay, let's assume it as 100. Variable cost will be how much? Guys, assume, but don't assume everything. Because they told PV ratio 40. Okay. So, that also you should consider. Contribution 40. Done. Now what they are telling? 20% reduction in the selling price. Selling price is going to be, variable cost will be 60 only. Please keep in mind. Contribution will be 20. Now they are asking how much sales should increase to offset the change in selling price. That means I should end up making same contribution amount. Because after same contribution amount, profit will be same only. Because fixed cost is not going to change with your level of output. Right? Right now, how much contribution we are making? Selling price is 100. Variable cost is 60. Contribution is 40 per unit. So for 100 units, sales will be how much? 10,000. Variable cost 6,000. Contribution 4,000. Correct? Next they are telling the effect should be offset. That means I want contribution as 4,000 only. They didn't ask to maintain the same PV ratio. They asked same contribution. Okay. So 4,000 is what I have to achieve. Now my selling price is 80 rupees. I don't know the sales quantity to be made. Correct. So can I take it as 80x? Yes. My variable cost will be 60x. That means can I say 20x is equal to 4,000. X is equal to 200 units. Earlier you were doing how much? 100. Now you are going to do how much? So it should be increased by how much? Wrong. Did they ask increase in the sales amount or did they ask increase in the sales quantity? Sales they told. That means they're expecting you to write in terms of amount. Quantity wise, I agree. You should increase it by 100%. But amount wise, you want to sell 200 units, 80 rupees into 200. 16,000. Earlier it was 10,000. So you have to increase your sales by 6,000 compared to 10,000. That means you want to increase it by 60%. So you have to increase your sales by 60% to offset the change in the reduction of selling price by 20%. Because if at all the contribution amount is same, then profit will be same for both. So to make sure that much contribution is there, we are doing this. Is that clear? Any doubt? No doubt? Okay. See here, PYP November 2019 for 5 marks they have asked. When volume is 4,000 units, guys, average cost is 3.75. Average cost, please keep in mind, not variable cost. Average cost. And when volume is 5,000, average cost is 3.5 and break even is 6,000. They're asking you how much is variable cost per unit. They're asking you how much is fixed cost. They're asking you how much is PV ratio. Listen. When you are selling 4,000 units, when you are selling 5,000 units, may I know the total cost, please? When you are selling 4,000 units, cost is 3.75. 15,000. When you are selling 5,000, it is 3.5. 17,500. Guys, one basic rule you should never forget. What is that? Change in cost is how much? Change in units how much? Will give you what? Variable cost per unit is equal to change in cost by change in sales. Change in profit by change in sales is PV ratio. How much? 2.5 per unit. Got it? This shall we apply to 5,000 units? If at all you apply 2.5 to 5,000 units, 12,500, where the total cost is 17,500. That means the other 5,000 should be your. Is that clear now? Variable cost is 2.5. Fixed cost is 5,000. Guys, if at all they tell change in fixed cost is also there, that effect should be eliminated first. If at all they tell fixed cost increased by 500, that means while comparing the cost, don't take 15,000 and 17,500. Eliminate the effect of fixed cost, reduce 500, take 17,000. Old fixed cost, because this time it increased by 500, no? So eliminate the effect of that. Now what you have, only the change in variable cost is what you have. I hope you guys understood. If at all they say there is a change in fixed cost by 500, fixed cost increased during the year by 500, that means now the 2,500, in that 500 effect is due to fixed cost also. So effect of only 2,000 is due to variable. So instead of taking 17,500 for comparison, you should take 17. But while determining current fixed cost, now what you get is last year fixed cost plus 500 we should do at last. Hope you guys understood. Now this is your fixed cost, which is 5,000. So PV ratio they are asking. Very simple. Guys, at break even point, contribution is equal to fixed cost. Yes. Do you know the contribution? You don't know the contribution. Then what can we do? You know the break-even point unit, no? 6,000 units. In units, you know. Please keep in mind. In units, you know. See. In units, you know. So, how many units? 6,000 units. Shall I take the contribution per unit as C? Yes. That is equal to fixed cost, which is C is equal to Now, remember, generally when we get this, immediately mind says multiply with 100 and write down and come 83.33. Gone. This is contribution per unit in rupees. Okay. Now, how much will be the PV ratio? Contribution by sales into 100. Contribution is 0.83. Sales is how much? Selling price. You don't know. Can I tell? Variable cost per unit is 2.5. If I add contribution to it, what do I get? Selling price. So 0.8333333333 divided by 3.333333333333 is equal to 25%. Understood? Hope you guys understood this particular thing and logic. First I found out contribution per unit in rupees. Then I know variable cost per unit. I know the contribution per unit. If I add both, I will get selling price per unit. Then what I did, I know the contribution per unit. I know the selling price per unit. Using that, I found out PV ratio. Anyone, any doubt in this? Let me know. Pakka. Marked as lemma. Question number 6, PYP November 2019. See, question, by looking at that, all the students will be like, happy, how easy. No, now they are not even asking this. They are asking decision making. PYP. Question number 5. RTPC you are seeing or PYP you are seeing? Oh, you are going from this, no? Sorry, my bad. Shall we proceed? You guys only told continue. Now you are telling break. This one is nice question. We'll do it after break. Fine. Yeah. 11. Manifest. You manifest. Seriously, time is 11:11. Now it changed. Now 11:11 now.
கத்துக்கலாம். கத்துக்கலாம். நீ வேலைக்கு போறியா? நீ வேலைக்கு ட்ரை பண்றியா? உனக்கு என்ன ஏஜ்?
எனக்கு 23.
மெடிக்கல் முடிச்சிட்டேன். ரெண்டு முடிச்சா முடியும்.
ஆமாங்க.
நான் 11க்கு அப்புறம் ப்ரிப்பேர் பண்றதுக்கும்
எங்க அண்ணன் ஃபைனல் 1 இயர்ல முடிச்சிட்டாங்க.
ஃபுல் டைம் டைம் உட்காந்து படிச்சா கண்டிப்பா முடிக்க முடியாததெல்லாம் கிடையாது. சிஏ ப்ராப்ளம் வந்து இப்போ காலேஜ்னா அடுத்த யூனிட் டெஸ்ட் வரும், அது வரும், இது வரும், ஏதோ நம்ம படிச்சுட்டே இருப்பான். இதுல வந்து எக்ஸாம் முன்னாடி மட்டும் இந்த மாதிரி இன்ஸ்டிடியூட்ஸும் வந்து மாக் டெஸ்ட்டுக்கு இதெல்லாம் சொல்றாங்களே வழிய கம்பல்சரி எல்லாம் கிடையாது. காலேஜ்ல யூனிட் டெஸ்ட் போகலன்னா அடுத்த கிளாஸ் இருக்க முடியாது. நீங்க அப்படி இல்லையே. சிஏ பொறுத்த வரைக்கும் நல்லா இதெல்லாம் போடும்போது ஈஸியா இருக்க மாதிரி இருக்கு. ஆனா கொஸ்டின் கொடுத்தாங்கன்னு வச்சுக்கோ, ஆன்சர் நம்மளோட அசம்ஷன்ல வேற வேறையா இருக்கு. ஆன்சர் இதுவும் ஒன்னா இருக்கிறதுக்கு சின்ன சின்ன மிஸ்டேக் பண்ணிடும். இந்த கடைசி நம்ம பிரேக் ஈவன் பாயிண்ட் கேட்டாங்க. நம்ம வந்து ஃபிக்ஸ்ட் காஸ்ட் பை கான்ட்ரிபியூஷன் பர் யூனிட்னு போட்டு அதுக்கு 15 ரூபா தானே வித்தியாசம் நம்ம எழுதிட்டு நம்ம நீ எழுதணும் கான்ட்ரிபியூஷன் பர் யூனிட் எப்படி எனக்கு 15 ரூபா. அது நம்மளுக்கு ஒரு விஷயமாவே தெரியணும். அதெல்லாம் 2 மார்க் போயிடும். நீ எந்த இன்னைக்கு எல்லாம் அதே மாதிரி இருக்கும். என் ஃப்ரெண்டுக்கு சீஸ் வாங்கிட்டு வச்சிருக்கேன். இது நாங்களா இருந்தா 10 நாளைக்கு அவங்க உங்க ஃப்ரெண்ட்ல மாமா எப்படி இருக்காங்க? Hello. How are you feeling better? Headache இருக்கா இல்லையா? சரி. ஆமா ஹீல் ஆகுங்க. சின்ன ஒரு ஸ்கிராச் பண்ணிருக்கோம். 2 daysலயே உங்களுக்கு உங்களுக்கான இப்போ ப்ரிப்பேர் மாதிரி இருக்கு. ஓகே ஓகே. எப்போ அது மூவ் பண்ணுவாங்க? ஈவினிங் நாமளே பண்ணிக்கலாம். சரி சரி. நீங்க போய் ரெஸ்ட் எடுக்கலாம். நான் இப்போ கிளாஸ்ல 11 இல்லை மம்மி, எனக்கு 9 to 6 கிளாஸ். 6:30 ஆயிடுச்சு. நான் சாப்பிட்டுட்டு தான் 2 முட்டை தோசை சாப்பிட்டேன், கொஞ்சம் வெண்டைக்காய் பொரியல். 2 முட்டை தோசை கொஞ்சம் ரெண்டு முட்டை தோசை ஒரு கடலை சட்னி கொஞ்சம் வெண்டைக்காய் பொரியல். இல்லாதான் இருக்கு. மதியானத்தில் கொண்டு வந்துட்டேன். நவீன கொண்டு கொடுத்துட்டு போயிருக்கா. ஈவினிங் வாங்கிட்டு பட்டன் மிஷ் எல்லாமே இருக்கு. ஓகே ஓகே ஹலோ ரவுத்ரி ரவுத்ரி தமிழ் வருஷத்தோடு வருஷம் என்னோட சிஸ்டருக்கு காயத்ரின்னு வச்சாங்க. என்னோட 3 months காயத்ரின்னு வச்சாங்க. அப்படியே அவன் எனக்கு கசன் கம்மிக்கா அவளுக்கு இன்னும் நினைச்சு பார்த்துருக்காங்க. வீடுலாம் இருக்கிற மாதிரி நீங்களா இதை பார்க்க முடியாது. இன்னைக்கு ஜீன எல்லாம் பண்ணுறேன். I lost joy. 130.
3,000.
Wholeness. I mean,
you should be having a negotiation.
your turn. There.
I'm rude as.
There is what.
First I will start.
That is little tough.
Right? I should pay her. Start now. Sitting there, Guru. Shall we start? Take your time. Sugar intake. Done. Good on. This is the age. No.
What is it? Anything always having sweet inside the mouth will spoil your.
No. Don't listen to all those things. Now it's the age you eat. No, you eat. I'm telling you. You guys start. I told no when I joined here. all this Karthik sir, Dilip sir, and all, I used to ask them out like anything. Sir, come, we'll go, we'll have ice cream, we'll have that, we'll have this. They were like, that's okay. Do it. Let's see for how many years he will do this. Now I'm realizing slowly. If someone asks me for ice cream and all, now I'm like, no. Like that. So now for young faculties, whoever joins, I will tell that. Enjoy that. 2-3 more years.
Sir, all user.
Why?
There are
She's body shaming me. She's body shaming me, telling, sir, all are not like you. Karthik sir and Akhilesh sir lost their weight. Dilip sir didn't gain only. Oh, fine, madam. Fine. One day I will also lose.
you to stop at one stage. They
No, I didn't stop. Who told I stopped?
Now you are saying
I mean, I avoid. Completely. Per day, 2 ice cream to no ice cream is like, oh my god. Yeah, this is the age. No, I mean, that was the age. No, this is the age. You guys have fun. Why? Come on, ice cream is ice cream. You should eat. But the worst part, after doing all those things, I'm gaining weight rather than losing. I should eat, right? Vindhya ma'am was telling, things will reflect after 20 years. So I'm just thinking my 40 to 45. Better take health insurance now only. Worst part, me and she was discussing about it when we were having ice cream. Whatever we do now, it will be reflected after 20 years. So easy. Yeah, today is Karthik's birthday. July 16th. 1 plus 6, 7th. Tell for a reason. So yeah, now it's time. You guys eat. Nothing will happen.
not even 20. I'm telling you, after 10 years, itself we will have it.
Now I have to prepone my plan of insurance and all. Touch wood. Touch. It should not happen.
Daily 2 ice creams, sir.
Earlier, madam. No. Earlier, like 1.5 years before, batches and all. Your batch or like let's say after that one more batch. Daily penny we used to go 2 ice creams. 1 hour we used to sit. There was one gang, 4, 5, 6 people, nearby PG thing. They used to come and sit there 1 hour. They also nothing to study. I am also eating ice. First we used to go to Gita canteen, eat nicely to ghee dosa, all those things. Then go to Penny, sit for 1 hour, nicely eat 2 ice creams. Is it? Good. In your batch, I stopped it. Till then, I was going daily because opposite to our flat. You can't avoid also. You go to balcony, you will see that.
Tempting.
Yeah. Can't tell. Taste is also good, no? And upon that, they keep launching new flavors. We are like, okay, let's try. Let's help the business. Scandi I have tried. But near to that Sharif by biryani.
I think all flavors.
Boomerang I have tried. Here Oswald's I have tried. In Coimbatore I have tried so much. You told no, beginning, pre-COVID. COVID changed many things. Faludas. It was.
2020.
Pre-COVID. Now again I heard COVID cases are increasing. In Karnataka it was around 40 already.
in other countries, but
Whatever it is, one day everyone should go. Chalo. Seventh one. See, this is very important question. Huh? Very important question. PQR Limited has furnished you the following data for 2 years. Okay. Sales they have told 8 lakh. PV ratio they have told 50%. Margin of safety they have told 40%. For the second year, they didn't tell how much is sales. They told PV is 37.5, MOS 21.875. There has been substantial saving in the fixed cost in the year 22-23 due to the restructuring process. Moral of the story, 21-22 fixed cost and 22-23 fixed cost are not same. Is that clear? Done. The company could maintain its sales quantity level of 21-22 with 22-23. So sales quantity are same. Okay. By reducing the selling price. Moral of the story, selling price are not same. Now, you are required to calculate sales for the year 22-23, FC for the year 22-23, break even for the year 22-23. Now tell me, what should be the starting point? Sales. May I know the sales, please? Okay. That is for 21-22. For 22-23, we have to compute. How? Previous year? 8 lakh. Okay.
they have given PV ratio.
That is for previous year. Okay. Current year they have given 37.5. Okay. That will apply on what?
Change.
We'll guess the change.
No, sir.
How?
Previous year and present year with the contribution.
Present year what?
That's contribution and
Do you know the contribution? You know the contribution ratio. Hmm. How?
yeah, margin of safety is equal to profit by PV ratio.
Okay. PV ratio they only have given. Why you have to struggle so much? Oh, profit you are telling. Okay. Profit for first year is anyhow you can find out. Second year how will you find out? 21.875 you have to apply on sales, no? To know the margin of safety amount. Now do this. That I did not. No. One link is there. If you are able to crack it, then sort it. Break even. Awesome. Then for the current year, you can determine anything. Everything is there. For the next year, major thing only is not there.
Sales quantity is same.
Yes. So
Yeah, first by calculating for first year we could
first year they only have given 8 lakh.
units same.
Units find out. You know the selling price per unit? You don't know. Then can you find out sales units? One link. One. And also I explained you. While explaining, I told so many times this point.
Total sales equal to break even sales.
Awesome. And
So we can
chalo, forget. First year, can you tell me how much is sales? 8 lakh. Can you tell me how much is contribution? 4 lakh. Can you tell me how much is variable cost? 4 lakhs. Second year, is the sales quantity changing?
no.
Is the variable cost per unit changing?
Yes.
How? No. Here PV ratio is changing because the selling price is changing. That means when variable cost per unit is same, sales quantity is same, don't you think the total variable cost also will be same? I told you variable cost will not change with change in selling price. It changes only with change in sales quantity. Here the sales quantity is same. That means total variable cost for the second year also will be 4 lakh. Now, you know, PV ratio is 37.5. Then variable is how much? 62.5. Now I know then 62.5 means 4 lakhs. 100 means question mark. Sales for the year 22-23 is 6 lakh 40,000. Got it? I know that margin of safety is 21.875 percentage, right? That means break even will be how much? 78.125 percentage of sales. Sales is 6 lakh 40,000. 78.125 percentage of that is how much? Sorry? 5 lakh. Correct. And we know that contribution at break even point is equal to fixed cost. Correct? No? Break even point contribution is how much? 5 lakh into 37.5 percentage. Sorted. Understood? So in the question, anywhere if they say sales quantity didn't change or sales changed only due to selling price, then always remember they are trying to give you some hint about variable cost. Okay? Hope you guys understood. How to solve, you understood now? If at all you are not able to crack that first point, then you won't be able to crack this sum at all. Because for second year, no amounts are given. Hope it's clear. Marked as LMR. I think you already marked as LMR or LMR Pro Max. Only LMR. Shall we proceed? A company earned profit of 30,000 during the year. If the marginal cost, that is variable cost, and a selling price are 8 and 10, then contribution will be 2 rupees. Find out the amount of margin of safety. What is the formula for margin of safety, guys? Profit by PV ratio. So profit is how much? 30,000. PV ratio is how much? 2 rupees out of 10 rupees sale, 20%. Margin of safety is 1,50,000. If at all you want it in units, that is 30,000 divided by contribution per unit, that is 2 rupees, which is going to be 15,000 units. Question number 8. I mean, this should be study material question. Leo, you understood this? No. Hope it's clear. Ninth one. A Limited maintains margin of safety of 37.5% with an overall contribution to sales ratio is 40%. That means variable cost percentage is how much? Its fixed cost is how much? 5 lakh. They are asking break-even sales. We know that at break-even sales, contribution is equal to, so break-even sales into 40% if I do, I will get 5 lakhs. So break-even sales will be how much? 5 lakh divided by 40%, 12,50,000. Anyone, any doubt in the break-even sales? Hello? Now, if 37.5% is margin of safety, then break-even sales will be 62.5%. Now, 62.5% means 12 lakh 50,000, then 100% means question mark. 20 lakhs or 25 lakhs? Got it? Got it or no, guys? Now I know total sales is 20 lakh. My variable cost percentage is 60%. So total variable cost would be 12 lakh. Correct? They're asking current profit. You can start from sales minus variable cost minus fixed cost, etc. Or simply you can say that at MOS, contribution is equal to profit. At break-even sale, contribution is equal to fixed cost. At MOS, contribution is equal to profit. How much will be your MOS? 37.5% of 20 lakhs. 7 lakh 50,000 or total sales minus break-even sale. 7 lakh 50,000. PV ratio of this 40%, which is gonna be, or in simple you can go 20 lakh, variable cost is 12 lakh, contribution 8 lakh, minus fixed cost 5 lakh, profit 3 lakh. It's your choice. Okay. New margin of safety, if the sales volume is increased by 7.5%. Now my question is, sales units is increasing. Correct? So sales will become how much? 20 lakh plus 7.5%. 21 lakh? Tell me one thing. Because of the change in the sales quantity, will your break-even sales changes? No, it won't change. Because quantity and break-even has nothing to do. Correct? Selling price it changes, variable cost it changes, fixed cost it changes. But not with the sales quantity. That means, can I say that the break-even is gonna be 12 lakh 50,000 only? Yes or no? That means my margin of safety will be 9 lakh. Or you can find a profit for this 21 lakh 50,000. Then you can go for margin of safety. That is, margin of safety is 21 lakh 50,000. Contribution will be how much? Sorry, sales is 21 lakh 50,000. Contribution will be 40% of that. 8 lakh 60,000. In that fixed cost is 5 lakh. 3 lakh 60,000. That is profit. Profit by PV ratio. 3 lakh 60,000 divided by 0.4. That is your margin of safety. Is this point clear, everyone? Pakka? Any doubt? What do you mean by opportunity cost, by the way? Next best alternative foregone. Any amount relating to next best alternative. Next best alternative, please keep in mind. A company can make any one of the three products X, Y or Z in a year. It can exercise its option only at the beginning of the year. So it can make either X or Y or Z. If it makes X, it can't make Y or Z, not Y and Z. If it makes Y, it can't make X or Z. If it makes Z, it can't make X or Y. Because one among three you can do. Relevant information about the product for the next year they have given. Selling price they have given, variable cost they have given. Contribution is 4 rupees, 3 rupees, 5. Okay. Market demand and production they have given. Guys, always remember, your units to be sold is lower of market demand or production capacity, not higher of those two. Why? My machine capacity is 10 lakh units. In market demand is 15 lakh. Then maximum how much I can sell? 10 lakh only. Demand 15 lakh is there. That doesn't mean that I can sell 15 lakh because I don't have capacity at all. No. I have capacity of only how much? 10 lakh. Got it? That one thing. And if at all market demand is 10 lakh, my production capacity is 25 lakh. How much I will produce and sell? 10 lakh. Because I don't have customers to buy the remaining 15 lakh. No. Hello. So it's going to be 10 lakh. Is that clear? Now, where were we? So you are going to produce lower of these two. In this case, 2000 in this case, 2000 in this case, 900. Fixed cost they have given 30,000. Should I consider it to compute the opportunity cost? The answer is no. Why? If I produce X, if I produce Y, if I produce Z, I have to end up incurring 30,000. So it's not going to make any difference. So I'm going to ignore. That means opportunity cost clearly here computed on the basis of contribution. If at all I produce X, how much will be my contribution? 4 rupees per unit, 2000 units, 8,000. If I produce Y, 6,000. If I produce Z, 4,500. So if at all I produce X, guys, I can't produce Y or Z. Out of Y or Z, which is best alternative? Y. So if at all I produce X, my contribution, opportunity cost is 6,000. If at all I produce Y, I can't produce X or Z. Out of X or Z, which is best alternative? X. It's not a cost, it is revenue we lost, contribution we lost. Okay. If at all I produce Z, then I can't produce X or Y. Out of X or Y, which is best alternative? So the opportunity cost is 8,000. Is that clear, everyone? Any doubts? Recent attempt they have asked this. This was the least cared question by students. 2, 3, 4, I think. Some 2, 3, 4 they have asked. 4 I think. Something like that. Done? Hello? Shall we proceed? Look at this. This is also nice one. Concentrate. The profit for the year of RJ Limited works out to be 12.5% of the capital employed, whereas capital employed is 4 lakh. So 12.5% of this. They are telling profit is 50,000. That means, guys, they have already given a profit. Please keep in mind. They have already given a profit. Sales 5 lakh. Direct material is there 2,50,000. Direct labor is there 1 lakh. Variable overhead is there 40,000. May I know the total cost? In fact, can I say only variable they have addressed here? Yes, only variable they have addressed here. Okay. So remember, 3,90,000 is only your total variable cost. Study material question, practical problem. The new salesman, illustration is it? Illustration 13. The new sales manager who has joined the company recently estimates that for next year a profit about 23% on capital employed. That means 4 lakh into 23%. 92,000 is estimating around 92,000 rupees of capital employed. 90,000 of profit. Provided that volume of sales increase by 10%. Volume of sales increase by 10%. Simultaneously, there is an increase in the selling price by 4% and overall cost reduction by 2%. Okay. Now, find out by computing in detail the cost and profit for the next year, whether the proposal of the sales manager can be adopted. Before that, you don't know the fixed cost here. Shall we determine the fixed cost? How? Guys, do I know the sales? 5 lakh. From 5 lakh rupees, if I reduce my variable cost, 3,90,000, my contribution will be 1,10,000. But my profit is 50,000. That means something I reduced here. That should be your fixed cost. Correct now? So fixed cost is 60,000. Is that clear? Hello. Now they are asking whether proposal can be accepted or no. Let's see whether whatever he is telling is truth or no. Right now, how much sales we are making? 5 lakh. Yes or no?
Yes.
But he is telling that, boss, next year you increase your sales quantity by what?
10%.
10%, and you increase your selling price also by what? 4%. Don't do plus 14%. First increase due to quantity, then increase due to prices. How much? 5 lakh. New sales will be 5 lakh 72,000. 5 lakh plus 10% plus 4%. Okay, done. Next, what is there? Direct material 2 lakh 50,000. As it's the cost, they are telling cost is reduced by how many percentage? 2% minus 2%. How much it will be? Sorry? 2 lakh 45,000. Wrong. Same, no. From total you reduce 2% or from individual you reduce 2%. End of the day everything will be same only, no. That is not the case. One major thing is there. Guess what is it? What is it? Hey, material we are talking. I am telling material only is wrong.
Sir, 60/20 is
Very good. It is variable, no? Yes. Variable, automatically consumption will increase with the more and more you produce. So first you increase due to consumption. Automatically, if you produce more, if you sell more, you produce more. If you produce more, automatically consumption will be more. Yes or no? So plus 10% will be there. From that you reduce 2% due to cost. Just don't give the effect of price. How much? Is that clear? Yes. Labor is how much? 1 lakh. Correct? Plus 10% minus 2%. 1 lakh? 7,800. Next one is variable overhead. How much? 40,000. Plus 10% minus 2%. Sorry? 43,120. May I know the contribution, please? 1,51,580. From that, let's reduce the fixed cost. How much it was? 50,000. 50,000 plus 10% minus 2%. How much? Wrong. This is not there. Unit change will not change the fixed cost. Extra 10% you produce, that doesn't mean that your fixed cost will increase by 10%. Fixed cost is fixed for some reason. 50, no? Or 60 is it? 60,000 minus 2%. Don't give that 10% effect. How much? 58,800, right? 2%, not 20%. How much it is? 92,780. Okay. 92,780. Capital employed is how much? 4 lakh. How many percentage?
20.195.
That means he told 23. It is 23.195. Of course, it is more than what he told. So it's better to accept the proposal. Anyone, any doubt in this computation? Here two things are there. One, fixed cost they didn't give. We computed it using last year figure. Second, the effect of the unit should be given to the variables, and only the effect of cost should be given to the fixed. Is it clear? Effect of units should be given to variable, and effect of cost should be given to both variable as well as fixed. Hope it's clear. Any doubts? Pakka. We'll proceed. If PV ratio is 60%, variable is 40%. Marginal cost is rupees 20. That means variable cost is 20. Selling price they are asking. Alright, 20 means 40, 100 means question mark. PV ratio is 60 na. That means variable cost should be 40%. I know that variable cost is 20 rupees. So 40 means 20, 100 means question mark. 50. Is that clear? Any doubts? Next. The ratio of variable cost to sales is 70. That means PV ratio is how much? 30%. Break even occurs at 60% of the capacity sale. That means margin of safety will be 40%. Find the capacity sale when the fixed costs are 90,000. That means, guys, what is the break even sales formula? Break even sales is equal to fixed cost by PV ratio, or you can say that at break even point contribution is equal to fixed cost. Break even point, if you take it as B into PV ratio is equal to fixed cost. B is equal to fixed cost by PV ratio. Here fixed cost is how much? 90,000. PV ratio 30%, which is gonna be break even sale is 3 lakh. Now 3 lakh means I know it is 60% of total sale. Correct? 100% should be 5 lakhs. You understood or no? I know that break even sale is 60% of the total sale. So 60% means 3 lakh, 100% is question mark. So capacity sale means 100% sale. Capacity means always 100%. Remember, they say stadium at capacity. That means stadium is full. Like that. How much it is? 5 lakh. Then what they're asking? Compute the profit at 75% of capacity sale. Guys. Sorry? 3,75,000 will be sales. Of that 30% will be contribution. 1 lakh? 1,12,500 will be your contribution. Fixed cost is your 90,000. Profit will be 22,500. Profit will be 22,500. Anyone, any doubt in this? Let me know. If there is no doubt, we can proceed. No doubt? We'll proceed. Next, study material question only. You are required to determine profit when sale is 2 lakh, fixed cost is 40,000, break even point is 1,60,000. What we can do here? Guys, do I know fixed cost? Do I know break even point? Can we find PV ratio, not contribution amount? Okay, PV ratio we can find. How? Fixed cost divided by PV ratio will give you break even point, which is 1,60,000. Therefore, PV ratio will be 25%. Correct? Now, I know my sales is 2 lakh. PV ratio is 25%. That means contribution should be 50,000. Fixed cost is 40,000. Automatically your profit is, anyone, any doubt in this? No? Paka? Determine sale when fixed cost is 20,000, profit is 10,000, break even point is 40,000. What we can do? Can we find a PV ratio?
Yes.
Okay. See, fixed cost is how much? 20,000. Divided by PV ratio, if I do, I will get break even point, which is 40,000. Therefore, PV ratio is 50%. PV ratio is 50%. Is that clear? Now, do I know the profit? How much? Profit by PV ratio, if I do, what I get? Margin of safety. So can I say margin of safety is profit, which is 10,000 divided by PV ratio, which is 50%, 20,000. Margin of safety would be 20,000. Is that clear? Now I know margin of safety. I know break-even sales. Break-even sales plus margin of safety is equal to how much? Anyone any doubt in this? Clear, no? See, now when we are doing in class, of course, it feels like clear. But you should practice it more and more so that you will get to know from which link I should take to what. That could be only done by practicing. To know from where I can take it to where. If at all you get stuck, whatever is possible, you compute that. Automatically that will lead you to the next stage once you keep getting the numbers. Okay. What is it, madam? Madam, what is it? Any doubts? Any doubt? Okay. We'll proceed. A company has made a profit of 50,000 during a year. If the selling price and marginal cost are 15 and 12, then contribution will be rupees 3. PV ratio will be 3 by 15. 20%. They're asking find out the amount of margin of safety. Amount of margin of safety is profit by PV ratio. 2,50,000. Is that clear? Any doubt? Next. If margin of safety is 2,40,000, which is 40% of sale, then 60% of sale will be how much? This will be your break-even sales. Yes or no? Then your total sales will be how much? Hope it's clear. And PV ratio is 30%. First one, calculate the break-even sale. We already computed. 3,60,000. Amount of profit on sale of 9 lakh. Guys, 9 lakh if it's the sale. Hello, listen. Either you can do it by computing the fixed cost, then take the sales minus variable cost, contribution minus fixed cost, etc. Or I know the sales 9 lakh. Now I will get to know from my 9 lakh sale, if I reduce break-even sale, I will get margin of safety. Margin of safety is rupees 5,40,000. 5,40,000 now. 9 lakh minus 3,60,000. Sir, 3,60,000 is for old sales. Along with the sales, break-even sales won't change. Will it change? That's what I told earlier. While solving, you will get to know. This point will come into picture. Break-even sales will not change along with the change in sales. It will change only due to change in sales rate, selling price, variable cost per unit or fixed cost. Along with the quantity, it won't change. Sir, here, how do you know that it's only quantity? I told you if the question is silent about change in selling price, it's always assumed change in sales is due to change in quantity. Is this point clear? Okay. So your margin of safety is 5,40,000. I know that contribution at margin of safety is what? What is it? Anjaneya. Contribution at margin of safety is equal to. Thank you. 1,62,000. Contribution at break-even sales is equal to fixed cost. Contribution at margin of safety is equal to profit. If you don't want to use that, then using break-even sales, PV ratio, find out fixed cost, then you determine the remaining stuff. It completely your choice. X Limited earned a contribution of 2 lakh. Net profit is 1,50,000. Sales is 8 lakh. They're asking margin of safety. Array guys, you know, contribution 2 lakh. Sales 8 lakh. That means, can you tell me the PV ratio? Do you know the profit? Profit 1,50,000 divided by PV ratio 25%. That will give me margin of safety 6 lakh. Is that clear?
Yes.
How much is break even sales? So simple. How much it is? 2 lakhs. Total sales they have given 8 lakh. Margin of safety you computed 6 lakh. So break even sales should be 2 lakh. How much is your fixed cost? At break even sales, contribution is equal to fixed cost. Break even sale is 2 lakh. PV ratio is 25%. So 50,000. Got it? A company sells its product at rupees 15. In a period, if it produces and sells 8,000 units, it incurs a loss of rupees 5. If the volume is raised to 20,000, not raised by, raised to 20,000, it earns profit of 4 rupees. Calculate the break-even point both in terms of value as well as in terms of units. Guys, here I know units first. 2 units they have given. 8,000, 20,000. Profit. If at all you sell 8,000 units, they are telling you will make a loss of 5 rupees. So profit will be, loss will be 40,000. If at all you sell 20,000, you will make profit of 4 rupees, which is profit of 80,000. Correct? Also, have they given selling price? 15 rupees. So 8,000 if you sell, then how much will be your sales? 1,20,000. 20,000 if you sell, how much will be your sales? 3 lakhs. That means they have given us 2 sales, 2 profit. That means easily I can find out PV ratio. How? Change in profit divided by change in sales. How much is change in profit? Very good. Proud of you guys. Mathematicians will die only after hearing this. 80,000 minus 40,000 is equal to 1,20,000. Correct? No? 80,000. Difference means minus will come. On that one more minus is there. 1,20,000. Divided by sales is 1,80,000. Now don't write 4,20,000 please.
66.67 PV.
So my PV ratio is how much? 66.67%. But they asked you to calculate break-even point in value as well as units. Now I know PV ratio. What I can do? Can I find out profit? If not profit, can I find out fixed cost at least? How? If I take sales as 3 lakh, in this, how much will be contribution? PV ratio I know, I will apply it on sales, I will find contribution. When contribution was 2 lakh, I made profit of 80,000. That means I reduced 1,20,000 towards fixed cost. That depends on how many 66666 you have taken. If you remember, in regular class I told you, if I had only come at 33.33 and 66.67, 16.6667, 13.333, 83.333, all those things, then always take the full continuous number. If at all you only computing, while writing you write 67, but while computing you take full numbers. How much? 1,20,000 is your fixed cost. Correct? No. Now fixed cost, which is 1,20,000. If I divide it with PV ratio 0.6666666666666666, I will get the break even sales 1,80,000. However, if at all you want it in units, I will divide 1,80,000, which is the sales amount. Break even sales means sales amount, divided by selling price, which is 15. 12,000 units. However, if at all you want to compute in the units using formula only, then it is fixed cost divided by contribution per unit. How much is contribution per unit? Selling price is 15 rupees. PV ratio is 33.33. That means contribution should be rupees 5. Correct? No? Oh, sorry. PV ratio is 66. Rupees 10. Contribution should be rupees 10. Selling price into PV ratio will give you contribution, which is gonna be 12,000 units. Anyone, any doubt in these calculations? Understood? Oh, we'll proceed. Following figures have been extracted from the books of Messr RST Private Limited. 2-year sales they have given, 2-year profit they have given. They are asking PV ratio. Very easy. Change in profit. How much? 30,000 divided by change in sales 1 lakh. PV ratio would be. Is that clear? This past year paper question, May 2018. Fixed cost they are asking. How can we compute? As I already told you, take one sales. Which sales shall we take? 5 lakh. Okay. When 5 lakh is a sales, contribution will be 30% of that. 1,50,000. From that 1,50,000, you reduce something that gave you 15,000. If it's a loss, I would have taken it in brackets. So my fixed cost should be. Is that clear? I know the fixed cost, I know the PV ratio. Break even will be 4,50,000. That is fixed cost divided by PV ratio. Or you want me to tell that way? Break even sales will be into PV ratio is 0.3. That is equal to 1,35,000. B is equal to 135,000 divided by 0.3. Is that clear? Next, sales required to earn the profit of 45,000. Let's say sales required to earn the profit of 45,000 be S. Then contribution will be 0.3 S. From that, if I reduce fixed cost, 1,35,000, that will give you 45,000. So 1,80,000 divided by 0.3. Rupees 6 lakh. Sales will be rupees 6 lakh. Is that clear? Hello?
Yes.
Clear? Margin of safety they are asking. Guys, you know the sales, you know the break even sales. Margin of safety will be 1718. Oh, sorry, 1718. Sale is 5 lakh. Break even sale is 4,50,000 irrespective of sales amount. Correct? No. So 5 lakh minus 4,50,000. Or in simple, you can do profit by PV ratio also. 15,000 divided by 0.3. Is this clear? Any doubt? Pakka. We can proceed. Next one, RTP May 2024. The following information is given by PQR Limited. 2 sales data they have given, 2 profit data they have given. How much is change in sales? How much is change in profit? 15 lakh, because one is loss, one is profit. So your PV ratio will be 15 lakh divided by 60 lakh. 25%. First one they are asking break even. To find out the break even, of course I need fixed cost. So let me take 23-24 as the base figure here. Sales is 2 crore 40 lakh. Contribution will be 2 crore 40 lakh into 25%. 60 lakhs. Okay. My contribution is 60 lakhs. From that I reduce some fixed cost. That will give me profit of 11 lakh 20,000. 48 lakh. This will be your fixed cost. This will be your fixed cost. Correct? Now if I do fixed cost by PV ratio, that is 48 lakh 80,000 divided by 25% will give you 1 crore. So your break even is 1 crore 95 lakh 20,000. Is that clear? In 24-25, and always remember, if at all they give 3-4 questions in one by one, and if they are telling in first one, determine the selling price. Second one, what will be the profit? Always remember, if the second point is connecting it to the first point, what will be the profit if at all selling price is as calculated above? Then only take the answer of that first point. Otherwise, always remember, for all the sub point, data you should consider is what is there in the main question. Unless and until in the sub point they try to link it, always remember the data you should take is of main question. Clear? Okay. In 24-25, it is estimated that variable cost will go up by 5%. And fixed cost will be reduced by 4,80,000. Selling price is gonna remain same. That means, of course, the PV ratio will change. Please keep in mind. Selling price is changing, variable cost is going up. Selling price is same, variable cost is going up, so automatically it will change. Because of change in the PV ratio, automatically your break-even sales will change. Calculate the sales volume to earn profit of 15 lakhs. In this case, what you should do, if at all they had given per unit how much, I would have quickly computed how much is variable cost right now, minus 5%. But did they do that? No. Correct? Then in that scenario, what you should do, you should take your own figures and try to find out. How, sir? Listen, guys. How much is PV ratio now? 25. That means now if the selling price is 100, contribution is, that means variable is how much? 75. Correct, no? Next year what they are telling, selling price will be 100 only. Variable cost will decrease by 5%. 71.25. Contribution will be 28.75. Correct, no? That means, can you tell me next year PV ratio will be how much? 28.75%, not 25%. Understood? Hello? Understood or no? Next year, I found out how much is my PV ratio. Sales, they haven't given. Sales we have to compute. Correct, no? Shall I take the sales to achieve the profit of 15 lakh be X? Yes. Then my contribution will be 0.2875 X into 28.75%. From that, if I reduce fixed cost, how much is fixed cost? 48 lakh 80, it will reduce by 4 lakh 80. If variable cost go up by, is it? Oh, sorry, my bad. So how much is 75 plus 5%? 78.75, yeah. 21.25, which is 21.25 percentage. 21.25 divided by 100 into 100. Now this will be 21.2125x. That will be your contribution minus fixed cost. Fixed cost right now 48,80,000, which is reduced by 4,80,000. That means it's gonna be 44 lakhs. That should give me profit of 15 lakh. So x is equal to 2,77,64,706. This is what we should achieve. Anyone, any doubt in this computation? Hello? Whenever they don't tell per unit and all, and when they give calculation like this, take your own numbers, but make sure when you are taking, you keep that PV ratio as 25%. That you don't change. Variable 60, fixed, sales price 100, don't do that. How much we got?
2,77,62,000.
Sales volume 2,000.
2,77,64,000.
We'll proceed. PYP May 2022, also RTP November 2018. Similar question. Shall we discuss this? Question number 20. UV Limited started manufacturing unit from October 1st. October 1st, please keep in mind. It produces designer lamps and sells those lamps at 450 rupees. Selling price is 450. During the quarter ending 31st December, it produced and sold 12,000 units and suffered loss of 35 per unit. During the quarter ending next quarter, it produced and sold 30,000 units and earned profit of 40 per unit. You are required to calculate total fixed cost incurred per quarter, break-even sales. Calculate profit if the sales volume reach 50,000 units in the next quarter. Very simple. 2 quarters information they have given. First, sales. In first quarter, that is actually as per calendar year, 4th quarter, as per accounting year, 2nd quarter, October. Sorry, third quarter. Now, sales will be 12,000 into 450. 54 lakh. Next year, 30,000 into 450. 1 crore 35 lakh. This will be the sales. Also, they have given information of profit, right? First year, loss of 35 rupees. 12,000 into 35. Don't forget to take it as negative number. And next year, there is a profit of 40 rupees. 30,000 into 40. Is that clear? Change in profit is how much? 16,20,000. Change in sales 46,000 plus 35,000. 81 lakh. So PV ratio is 20%. 16,20,000 divided by 81 lakh. Is that clear? They are asking total fixed cost incurred. Very simple. Let me take one sale. Let me take a sale of 1 crore 35 lakh as it's a profit. Okay. Otherwise, negative I should take and reverse calculation, etc. Nonsense. So 1 crore 35 lakh into 20%. Contribution is how much? From that, I reduced fixed cost. That gave me answer as 12 lakh. That gave me answer as 12 lakh. So fixed cost could be rupees 15 lakh. Is that clear? Any doubts?
Sir, they asked for per quarter mostly, so every quarter should be paid.
Per quarter, this only. Fixed cost is not going to change. This is of quarter only, no? The comparative figures of quarter only. So what we got is of quarter only. Okay? Done. Next, break-even sales in rupees. So I know fixed cost 15 lakh. I know contribution percentage 20, which is going to be
75 lakhs.
75 lakh per quarter. Correct? If at all they ask for unit, you should write 3 crore. Okay. Calculate the profit if the sales volume reaches 50,000 in the next quarter. Guys, sales will be 50,000. Contribution will be how much? Do I know the selling price? 450. 50,000 into 450. 40? 2 crore 25 lakh. Of that, 20% is contribution. 45 lakh will be my contribution. My fixed cost is 15 lakhs, which is
30 lakhs.
30. My profit for the next quarter will be 30 lakhs. Is that clear? Hope it's clear, everyone. Oh. Next one. Shall we start?
Yes, sir.
A company had incurred a fixed expense of 4,50,000 with a sale of 15 lakh. Okay. And earned a profit of 3 lakh. Guys, they have clearly given one clear information about for the first half year. Sales, they told how much?
15 lakhs.
From sales, what we do? Reduce variable cost. That will give us contribution. From that, we'll reduce fixed cost, which is 4,50,000. That they are telling it is giving us profit of 3 lakh. Correct? No? That means contribution was 7,50,000. Variable cost was, moral of the story, PV ratio is, anyone, any doubt till here? No doubt. Next, in second year, it suffered a loss of 1,50,000. Second year, it suffered a loss of, second half. The PV ratio already done, 50%. Break even they are asking, very simple. Fixed cost is 4,50,000. PV ratio is 50%.
9 lakh.
Margin of safety, profit is 3 lakh. 3 lakh divided by 50%. Or you take total sales minus break even sales. Anything would work. Profit by PV ratio or total sales minus break even sales. Expected sales volume for the second half year, assuming that selling price and fixed cost remain unchanged during the second half year. That means they are telling how much will be your sale in the second half year, provided your variable cost is not changing, selling price is not changing, fixed cost is not changing. That means changes are only due to sales quantity. So second half year we made a loss of 1,50,000. Yes or no? Where the fixed cost was 4,50,000. That means actually we had a contribution of 3 lakh. We had a contribution of 3 lakh. Got it? Now, we know that PV ratio is 50%. That means 3 lakh is 50%. That means sales are 6 lakh. Variable cost is 3 lakh. Is that clear? So expected sale is how much? Is that clear? Break-even point for the whole year. Guys, it's not going to change. For half year, if it is 9 lakh, for whole year it will be 18 lakh. Because selling price is not changing, variable cost is not changing. Then how it is changing, sir? Fixed cost is changing, no? Fixed cost for half year it was 4,50,000. For full year it will be 9 lakh. So 9 lakh divided by PV ratio. 18 lakhs. Margin of safety. How much is the total sale? In the first half 15 lakh, second half 6 lakh. Total 21 lakh. For the whole organization, how much is break-even sale? 18 lakh. That means your margin of safety should be. Anyone any doubt in this 21? 21st question. No doubts. We'll proceed now. Hello?
Yes.
No doubts? Second. The following information is given by Star Limited. They're asking you to calculate profit, PV ratio, break-even sales in rupees as well as fixed cost. Correct? Now, margin of safety they have given 1,87,500 and total cost they have given. That means it includes variable as well as fixed, and margin of safety units they have given. What we can do? Guys, margin of safety is sales amount or contribution amount? Sales amount. Break-even sales is sales amount or contribution amount? Sales amount. Everything is sales amount only. Correct? No? Now, if I divide 1,87,500 with 3,750, what do I get? What? I get selling price per unit, which is rupees 50. I get selling price per unit, which is rupees 50. Is that clear?
Yes.
No doubts? Paka. Now, next, this is your selling price. I know the break-even sales in units. If I multiply selling price to that, what do I get? 62,000. This will be my break-even sales. Guys, I know margin of, by the way, break-even sales I got here. 62,500. Now, I know margin of safety is 187,500. I know break-even sale is 62,500. Total sale. Okay, using this what I can do? You can find out the profit. Very good. How, sir? I know the total sale. 2,50,000. I know the total cost 1,93,750. Using this, I can easily find out profit, which is 56,000. Is that clear? Pakka. So my profit is 56,250. Talking about PV ratio. How to arrive at PV ratio? Guys, do I know the margin of safety? Do I know the profit? Margin of safety is equal to profit by PV ratio. Then can I say profit by margin of safety will give me PV ratio? Profit is 56,250. Margin of safety is 187,500. 30%. They are asking fixed cost. I know that at break-even point, contribution is equal to fixed cost. Break-even point is 62,500. 30% of that is how much? That is what? Sorted. Here also, if at all you don't find out the selling price per unit, things won't move. Hope you guys are able to understand.
Yes.
I mean, yeah, understanding it should not be a problem. But you should know from where I can take link to where, right? Starting should be the problem. But if you practice enough, it will be easy. We'll proceed now.
Yes.
Yes. 23rd. A single product company sells its product at rupees 60 per unit. A single product company sells its product at 60 per unit. In the year 21-22, company operated at margin of safety of 40%. That means my break-even will be fixed amount is 3,60,000. Variable cost ratio to sales is 80%. That means my PV ratio is 20%. This is 21-22. In the year 22-23, it is estimated that variable cost will go up by 10%. Fixed cost will increase by 5%. Listen, here you don't have to assume your own stuff. Reason being, selling price is given rupees 60 and they have told variable cost is 80% of this. May I know the variable cost, please? 48. Okay, for the next year, the variable cost is gonna be 48 plus 10%, which is 52.8. Is that clear? Okay. And did they say anything about the selling price? No. Next, fixed cost is how much? 360,000 now. It's gonna increase by 5%, which is 3,78,000. Is that clear? Now, first, find the selling price required to be fixed in 22-23 to earn the same PV ratio. 20%. So, I don't know how much will be my contribution, but I don't know my selling price also. That means two unknown numbers I can't find out in one single equation. So, shall I take my selling price as yes? Yes. From selling price, if I reduce my variable cost, what do I get? Contribution. So, can I write contribution as yes minus 52.8 divided by selling price yes into 100 should give me PV ratio. Right now, how much is a PV ratio? 20%. Understood? Now, S minus 52.8 is equal to 0.2 S, which is gonna be 0.8 S is equal to 52.8. S is equal to rupees 66. So selling price to maintain the same PV ratio would be 66. Assuming the same selling price of rupees 60 per unit, Find the number of units required to be produced and sold to earn the same profit of 21-22. In the year 21-22, what was our profit? Guys, first place, what was our sales? Now, I know my PV ratio, which is 20%. I know my fixed cost, 3,60,000. Correct? No? Last year I'm talking about. My fixed cost is 360,000. My PV ratio is 20%. What do I get? Break even sales. Fixed cost divided by 0.2, which is 18 lakhs. I know that margin of safety is 40%. That means 60% means 18 lakh. 100% means question mark. Sorry? 30. My break-even sales would be rupees 30 lakhs. Sorry, total sales would be rupees 30 lakhs. Okay, when my total sale is 30 lakhs, if 20% is PV ratio, then my contribution would be 6 lakhs. My fixed cost is 3,60,000. That means my profit is 2,40,000. My profit is 2,40,000. Now they are telling if at all selling price is gonna remain at 60 rupees only. Let's say units to be sold be yes. Variable cost, let's say 52.8, right? Hello. Contribution will be how much? 7.2, yes. Whereas fixed cost is going to be 3,78,000. That will give me profit of 2,40,000. That should give me, because that's what we are planning. Correct? No? So can I say 7.2s is equal to 2,40,000 plus 3,78,000. S is equal to 85,000. That is, if at all I end up selling 85,833.33 units, then I will end up making same amount of profit. I will end up making same amount of profit at the selling price remaining same, but variable cost is increasing. Is that clear, everyone? You can use, but please be careful while taking PV ratio, because PV ratio won't be. Got it? Hope it's clear. No doubt. We can proceed. Look at this question. Question number 24. Shall we see? So I think 1/3 of the questions are done. Almost 1/3. But yeah, remaining those are like bit bigger question. Let's see how much ever is possible today. We'll complete today. If not, tomorrow. We have a lot of time. Don't worry at all.
We have full 20.
Till 20th, yes.
Full 20 on that day, full day.
Yeah.
So,
Yeah. No, that extra one day I kept it based on the pace of one chapter per day. But now, now if it goes, then material and labor somewhere in Chennai, or I will take and I will upload, or let's see, or I won't. Let's see. If time, let's see. Why to worry so much? Anyhow, material is completely done in regular only. Hope you guys have seen those recorded backup. Whoever didn't attend, full. Which chapter? That is 2 minutes work. See, the process will be, today we'll complete marginal, tomorrow we'll go to standard only, let's not go to process, then we'll go to process, then we'll go to JPBP, then we'll be left with only 3 chapters. Employee, material, employee and labor same magane. Employee, material, cost accounting system. Then it's your call. Whichever you tell me, I will take that. Priority. Let's try to complete everything. Priority will set. Okay. Gayatri, bad. He laughed. An automobile manufacturing company produces different models of cars. The budget in respect of model 007 for the month of March is as under. Units are 40,000. Sales they have told 2,10,000. May I know how much would be the selling price per car? 2,10,000 divided by 40,000. What? Good. Why 5.25 lakhs? Because you are dividing lakhs by normal. If you divide lakhs by lakhs, it is normal. Understood? Great. If you didn't, forget. Next, variable. We have material, labor, direct expense together 132 lakhs per car. Yes, sir.
3.3.
Certain things you should not put it out. Whatever you think, you should think and hear only. You should have only. Inside you should say. Now, specific fixed cost and allocated fixed cost is there. May I know total? 60,750. First, calculate profit with 10% increase in the selling price with 10% reduction in the sales volume. Guys, selling price will be 5.25 plus 10%. 5.775 lakhs. Hello. Into units would be 40,000 plus 10%. Sorry, reduction, right? So minus 10%. 36,000. 2,07,900. Correct? No? Yes? Now, let's reduce variable cost. I know variable cost per car is 3.3. Along with the change in the selling price, will it change?
No.
3.3 only, right?
3.3.
Something you told, 3.35, 3.
No, 3.3.
Just 3.3. Great. Along with the selling price, will per unit variable cost change? It's gonna be
Same.
great. 3.3. But units is changing, so total will change. May I know the contribution?
89,100.
Happy? 89,100. My fixed cost is 60,750. 1,750. Will it change along with the units, guys? 28,350. Awesome. Your profit in this case is 28,350. Shall we go to the next one? Volume to be achieved to maintain the original profit, which is 17,250. After a 10% rise in material cost at the originally budgeted selling price. So I don't know how many cars I should sell. Shall I take number of cars to be sold as C? Then my sales will be 5 point, oh no, old price only, 5.25. 5.25 C. Listen, variable cost I don't take directly. I can't take 3.3 directly because in that material is changing. So you tell me first, material, don't add 10% to this and tell. I'm telling you because
79,200.
Divided by cost, 8,000.
that's what I'm telling. Don't add. He's telling 79,200 plus 79,200 is for 40,000 units. Per unit, how much? 1.98 plus 10%. 2.178 per car into number of cars sold I will take. Okay. Labor and overhead no changes. May I know the total of this please?
50 to 800.
Divided by 40,000.
1.32.
1.32 C per car. Correct no? May I know the contribution please? 1. 1.752 C. And the fixed cost is not changing. It's gonna be 60,750 only. So that should give me profit of 17,250. The old profit. Now 1.752 C minus 60,750 equals to 17,250. 1.752 C is equal to 78,000. C is equal to that is I should sell 44,521 cars to achieve this target. Anyone, any doubt? $44,521. And the other one we got it as profit as 28,350 lakhs. Is that clear? Shall I see one more question before going to break? Sure. Great. See there. A manufacturing company is producing a product A which is sold in the market at rupees 45. This will be your selling price. The company has the capacity to produce 40,000 units. For the year, we are planning 30,000 units. The cost of each unit, each unit is expected as follows. Material 12 rupees, wages 6 rupees, overhead 9 rupees, 6 rupees, total 27. MOS is 4,12,500. Margin of safety is 4,12,500. First, what they are asking, calculate FC break-even point. Calculate the volume of sales to earn profit of 20% on sale. If the management is willing to invest rupees 10 lakh with an expected return of 20%, that means they are expecting return of 2 lakhs. Calculate the units to be sold to earn this profit. Management expects additional sales if the selling price is reduced to 44. Calculate units to be sold to achieve the same profit as desired profit in point number 3. Otherwise, you should connect it to main one. Is that clear? Go to that. Listen here, they are telling cost of each unit and no other information of PV is given. So we assume overheads is include only variable overhead. It don't have any fixed overhead because they have given per unit basis. Okay. So how much will be your contribution? 45 minus 27. 18. Selling price. PV ratio. PV ratio is 40%. Is that clear? Hello? First, they're asking fixed cost. What can we do? I know the PV ratio. I know margin of safety. What do I get? I get profit. May I know how much it is? 4,12,500 divided by 40%. 10 lakh 250. And also, you know how many units you sold during the period? 30,000. You know the selling price also? 45. May I know 30,000 into 45? Sorry? 50? Hey, no need to find out. If you want to find out that way, yeah. Find out break even now. You know total sales. 13 lakh 50,000. You know margin of safety. 10 lakh 31,250. May I know the break even sales? 3 lakh 18,750. If you want in units, divide it by 45 rupees.
Units.
7,000? 83.33. Got it? Fixed cost. Fixed cost will be, you know the break even now, right? You know break even. Contribution at break even is equal to fixed cost. Contribution at MOS is equal to profit. So contribution of break even will be 3,18,750 into 40%. 5,40,000. Correct? No? No? Hey, yeah. How is it possible? 3,18,750 into 40%. 1,27,500. My FC is 1,27,500. Next, they are asking, calculate the volume of sales to earn profit of 20% on sale. Shall I take my sales as yes? Okay. I will take my sales as yes. Then my contribution will be 0.4s. From the 0.4s, if I reduce 1,27,500, which is fixed cost, I should end up making profit of 0.2s, 20% on sale. So 1,27,500 divided by 0.2. 6,37,000. 1 second, madam. They just ask volume, no? 6,37,500. If you want to give it in units, divide it with 45 rupees.
14,000.
Which you can round it off to next numbers. If the management willing to invest 10 lakh with an expected return of 2 lakh, calculate the units to be sold to earn the profit. Now, I know my selling price. How much? 45. Correct? So, my sales unit, shall I take it as X number of units? So, my sales will be 45X. Variable cost will be, if the contribution is 40%, variable cost is 60%. May I know 60% of 45, please? So variable cost will be 27x. That means my contribution will be, guys, 18x. From the 18x, if I reduce my fixed cost of 127,500, I should be able to arrive at a profit of 2 lakh. So 3,27,500 divided by 18 is equal to 190 44, which you can round it off to next number. Management expects additional sale if the selling price is reduced to 44. Calculate units to be sold to achieve the same profit as desired in point number 3, that is 2 lakh. Then shall I take units to be sold as A? Then my sales will be 44A. Variable cost, should I take 44 into 60%? No, because my variable cost per unit will not change with the change in selling price. So it is gonna remain 27 only. Got it? So contribution will be 17A. We have to recover 127,500 towards fixed cost, which is gonna be profit 2 lakh. So 3,27,500 divided by 17. Sorry? 265 units. Okay. That's the case. How much you got?
19,264.7.
1 second.
So from the 375, they've added one more to this. Down
No. That fixed cost, how much we got?
1,27,500.
Where we found out the fixed cost? Using the first one, no? So check once again, guys. Margin of safety is 412,500. PV ratio was 40%, right? Total sales, how much you got? Break-even sale is different, huh? Hey, margin of safety is how much, guys? 4,12,500. Total sales will be how much? So 9 lakh. Then how come we wrote this? Wait. Profit we didn't compute, no? Or we computed? PV ratio we got 40 only, no? Okay. And sales, how much we took? 30,000 into 45. Correct? And margin of safety, how much we have taken? 4,12,500. And divided by, they have given margin of safety here. Margin of safety divided by PV ratio will give you what? At margin of safety, contribution is equal to profit. So margin of safety into PV ratio, if you do, you will get profit. So here we should have divided it by profit by PV ratio. You have divided margin of safety with PV ratio. What you get? Some random number. You should divide profit by PV ratio. Okay. Now, how much is margin of safety? 4,12,500. How much is PV ratio? That will give you 1 lakh. And we know that contribution at margin of safety is equal to profit. Contribution at break-even sales is equal to fixed cost. So here 1,65,000 profit I got. Correct? Okay. Now 1,65,000, margin of safety is 4,12,500. My total sale is 13,50,000. What is the break-even sale? 9,37,500. Of that 40%, that is break-even sale into PV ratio will give you contribution at break-even sale. Contribution at break-even sale is equal to fixed cost. So 3,75,000. Next, what they're asking here, they're asking calculate the volume of sales to earn a profit of 20% on sale. If I take sales as S, then contribution will be 0.4S. Correct? So 0.4S minus fixed cost 3,75,000. That will give me, should give me profit of 0.2S. So S is equal to 18,75,000 divided by 45. 41,666.67 units. Next, if the management is willing to invest 10 lakh, they want to achieve profit of 2 lakh, right? So they're asking to do that, calculate the units to be sold. So here I will just change, because selling price is going to remain same 45, variable cost is going to remain same 27. My fixed cost is 3,75,000. How much it will be? 5,75,000 divided by 18. 945 units will take. Okay, 31,945 units you should sell to achieve the profit of so much. Next, management expects additional sales if the selling price is reduced to 44. That means here this will change to 3,75,000. A is equal to, sorry, 824. 33,824. However, if at all that point, calculate the units to be sold to achieve the same profit, then you should have taken 0.3 profit, or you should have taken the main profit.
Not the main profit.
I just told before starting this question, whatever they have given in subpoints, if at all they create link from one subpoint to other, then go for that. Otherwise, go for the main question. That means if the question was only calculate the units to be sold to achieve the same profit, that's it, then you should go for the main profit, not 0.3 profit. You said 0.3, I feel, but yeah, got it. Always remember, if at all any sub question, link it to the other sub question, then only take the data of other sub question. Otherwise, always and always and always it is main question. Not only in costing, even in FM also the same thing. Got it?
Yes.
Shall we proceed now? Yeah. Got it. Good. Someone is concentrating. When I took MOS, she has written, sir, MOS divided by profit you have done. We'll proceed. One more question we'll see and we'll proceed, or how is it? Break you want? Fine. We'll take break. So how many questions are done so far? 28 are done now. How come? 25 shut down 2, right? 27 are done total. Remaining few questions are there. We'll see that. Now we'll take a break. Hello. 1:19. Break till 2:20 p.m. Option description.
அவர் என்ன சொல்றாருன்னா அந்த பாயிண்ட் வரைக்கும் இருந்ததுன்னா மேல இருக்கு அந்த பாயிண்ட் வரைக்கும் நம்ம அவர் கேட்டது வந்து அதுக்குள்ளே அதோட நிறுத்திதான் என்ன பண்ணுறது நம்ம எல்லாருமே அண்டர்ஸ்டாண்ட் பண்ணிட்டது வந்து அங்க அவர் அதை சொல்லிட்டே இருக்காரு கிளாஸ் எடுக்கும் போது அதை சொல்லிட்டே இருக்காரு அதுலதான் நிறைய பேர் அந்த கேர்லெஸ் செஞ்சு அங்க போய் அந்த டென்ஷன்ல வந்து நம்ம முன்னாடியே ப்ராஃபிட் இருக்கும்ல அதை எடுத்துருவோம் அது நல்ல எடுத்தாங்க ஜாலியா இருக்காங்க
இல்ல
ஃபர்ஸ்ட் குரூப் எழுதுனா கிளியர் பண்ணிட்டேன் இப்போ செகண்ட் குரூப் கண்ணாடி பார்க்காம சரி கிளம்பிடுச்சு எங்க போகுது எஸ் எஸ் எங்களுக்கு பக்கத்துல என்ன
ரவுட்ரி பேசுறேன். அவளை அந்த மெசேஜ் எனக்கு இந்த ஃப்ரெஷ்மாக ஒரு சொல்லு சார் போகலையா
ஒரு செகண்ட் வெயிட் பண்ணுங்க.
கொரோனா இருக்கீங்க நம்பர் சொல்லு 9865
744
ஞாபகம் வச்சுக்க. அதுதான் என் ஃப்ரெண்ட்ஸ் யாருமே தஸ் ஏன் இருக்கிறேன்.
நீங்க லஞ்ச் கொண்டு வந்திருக்கீங்க.
அதெல்லாம் கேட்டாங்க சார் கால்குலேஷன்
మీకు బ్యాలెన్స్
அதான் சொல்றேன்.
బ్యాలెన్స్
இன்னைக்கு வந்து பச்சை பயிர் முளைக்கிறது சுண்டல் அங்க கொஞ்சம் நிறைய பப்பாயாவும் நிறைய அது அது ரெண்டு சாப்பிட்டாலே ஓகே. இல்லடா அவன் ஃப்ரெண்டா சொன்னாச்சு. இப்ப போய் நான் கீழே எல்லாம் பெரிய பெரிய இதே இருக்கு.
சார் மேல இருக்குங்களா?
இல்ல ஆல்ரெடி இருக்கு. நேற்று அப்படிதான் எங்கேயும் அவங்க பண்ணிட்டு இருந்தாங்க. கல்யாணம் பண்ணிட்டா அப்படியே இருக்கு. சொல்லிட்டு எதுக்கு நீங்க ரெஜிஸ்டர் அப்ப நீங்க அப்படிதான் பண்ணிருந்தீங்களான்னு கேட்டா எங்க வீட்டுல அப்படித்தான் சொல்றேன். என்னை வந்து அப்படியே போய் அனாசி செலவு தான் உண்மையாக.
பெரும்பாலும் ஃபுல் சேவிங்ஸ் இதுக்கு வேண்டி நம்ம சம்பாதிக்கிற மாதிரி இருக்கு.
எத்தனை பேர் லோன் எடுக்கிறது அடுத்த 5 வருஷம் லோன் கட்டுறாங்க.
இன்வெஸ்ட் பண்ணாம
நிறையாவது வாங்கி போடலாம் அந்த பொண்ணுக்கு. இல்லாட்டி 2 பேரும் அவங்கவுங்க நேம்ல ஃபர்ஸ்ட் இன்வெஸ்ட் பண்ணிக்கலாம்.
என் ஃப்ரெண்டு வேலை சொல்லுவா எனக்கு எல்லாம் குழந்தை ஆனா ஃப்ரெண்டு சொல்லுதான் எனக்கு வந்து அதை அப்படியே டெக்ஸ்ட் பண்ணிடுறீங்களா? இன்கம் டேக்ஸ் மட்டும் அந்த ஃபார்ம் நேம் மட்டும் தெரியும். நான் மூட்டை யாருமே ஆமா எங்கம்மா இதுதான் இந்த ரெக்கார்டு அது அவங்களே எடுத்து வீடியோ 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 அவங்களோட நான் பேசுறேன் இருக்கு ஆனா ஸ்னாப் இருக்குதுன்னு ஒரு வண்டி வந்து பெட்ரோல் இருக்கு அதே விட்டு அதே வெடிச்சு கரெக்ட் போகும்போதெல்லாம் சின்ன பஸ் பெரிய சரி அவங்க வேறு நானும் எடுத்து சரி அண்ணா due season. Very first July first July. But Saturday. இப்படி அந்த டைம்ல எனக்கு பார்த்தேன் இப்ப பக்கத்துல பண்ணான்னு தெரியுமா
இதான் என் கேஸ். நான் ரொம்ப லக்கி. டபுள் சைட் சாக்லேட் கொஞ்சம் ஃபுல்லா இருக்கிறது வீட்டு கொடுத்துட்டா ஃபுல்லா ஒரு 10 minutes கூப்பிடுவாங்க. அது ஒரு 10 minutes. முடிக்குது பண்ணவே எப்படி போறோம்? அப்படியா? சுடுதொல்லி 2 நாள் டாக்டர் வனிதா நீ அமைச்சு உன் ஃப்ரெண்ட்
ஆனா நீங்களே உட்காருங்க 10 நிமிஷம் மேல உட்காருங்க
அது அமைச்சது சார் ஒரு சார் இன்னொரு சாருக்கு 100 ரூபா கொடுத்து அவங்க தான் அமைச்சிருக்காங்க அகிலேஷன் நான் கொண்டு போய் அமைதியா இருக்காங்க சொன்னாரு எனக்கு அப்ப தெரியாது நான் இதெல்லாம் பார்க்கல நீங்க சொல்றாரு நீங்க சொன்னதை 100 ரூபாய் பே பண்ணி இந்த காப்பீட்டு போட்டு இல்லையா இன்னைக்கு 5 பேர் தான்டா
சரி ஓகே நானும் என்னன்னு கேட்கிறேன் ஓகே சரி ஓகே நீ உனக்கு என்ன மாதிரி இல்ல எனக்கு இந்த இதை பத்தி தெரியாது இல்ல நான் அவங்க எந்த மாதிரி ஒர்க்ல இன்ட்ரெஸ்ட் அந்த மாதிரி வேணும்ல சாதாரணமா இந்த எல்லாமே தெரிஞ்சுக்கணும்னு நினைக்காது இன்கம் டேக்ஸ் இன்கம் டேக்ஸ் ஜிஎஸ்டி ஜிஎஸ்டி இல்ல இன்கம் டேக்ஸ் ஜிஎஸ்டி ஆர்ஓஸ் ஃபைலிங் பேங்க் ஆடிட்டு கணக்கு இதுவே போதும் இன்னும் எல்லாமே வச்சுக்கணும்னா அது பண்ணிடணும் எல்லாமே பண்ணிடுவாங்க பண்ணுவோம் எல்லாமே பண்ணுவோம்
Tell. You have class, we'll tell later. Call later. Tell no. You told her. Gayatri, tell no. Class is gonna start. Who? Give me a second, guys. Yes, sir. Yeah.
ரொம்ப கம்ஃபர்டபுளா இல்ல போட்டா கொஞ்சம் வாமா காலி குளிர் அடங்குச்சுனாலே 50% குளிர் காலி இது போஸ்போ டேய் முடியல அப்படியே போட்டு காலி சும்மா போடு மேல சார் மட்டும் பாருங்க யார பார்க்க மாட்டேன் பரவாயில்ல நீங்க இங்க பஸ்ல அந்த இதையும் போட்டுட்டு
I will share. Not cold, is it? Go increase, it can come.
and from there they will come.
Who? Class is not there, no?
இருக்கனால தெரியாது நிறைய மத்தியானம் 3 o'clock அப்புறம்
No, which class? He takes there, no, ground floor.
ground floor
Hmm. We'll start. Don't tell you, turned it off. I believe in you. That's worse than turning it off. Room temperature is a bit less.
now it's 23
Is it?
but for 23 it's chill 23 for 23 I feel it's too chill.
No, classroom is small, no? So same thing will get rotate. Fine. Shall we proceed now? 25 questions are 25, 27 questions are done, no? Hmm?
95 plus 2
Shutdown cost. Okay. Look at this question, everyone.
so this is
Question number 26, which is PYP May 2019. Measure Gaurav Private Limited is manufacturing and selling two products, guys, black and white, at a selling price of rupees 20 as well as rupees 30. The following sales strategy has been outlined for the financial year 1920. Sales planned for the year are 81 lakh as well as 54 lakh in case of black and white. The selling price of black will be reduced by 10% and that of white by 20%. So, selling price of black will become 18 rupees. Selling price of white will become 24 rupees. Is that clear? The break even is planned at 70% of the total sale of each product. So 81 lakh into 70% is how much, guys? 56 lakh 70,000 for black, and 54 lakh into 70% is how much? 37 lakh 80,000 is for white. Profit for the year to be mentioned as 826,200 in case of black and 745,200 in case of white. This would be possible just by reducing our annual fixed cost of 42 lakh allocated as 22 lakh and 20 lakh to white. Now, number of units to be sold of black and white to break even during the financial year 1920. Guys, so I know the break even sales now, correct? Do I know the selling price of next year? I know 18 and 24. May I know the units here, please? 3,15,000 for black, 1,57,500 for white. This will be the units to be sold. Is that clear? To break even. I just did break even sales by selling price. Next, amount of reduction in fixed cost product wise to achieve desired profit mentioned above. They are telling how much should be your reduction in the selling price. Guys, do I know can I tell that I know that my sales will be 81 lakh as well as 54 lakh only. Can I say that or no? 81 lakh as well as 54 lakh. My sales. That is sales planned for the year. 81 lakh and 54 lakh. Okay, this is done. And have they given you PV ratio? They haven't given you PV ratio, but they have given you fixed cost 42 lakhs. 42 lakhs divided by PV ratio, if I do, I should get break even sale, which is 56 lakh 70,000. So may I know 56 lakh 70,000 is that fixed cost is 22 lakhs for black. 22 lakhs. How much it is? 22 lakhs divided by 56 lakh 70,000. 48.14%. Okay. Next one. 37 lakh 80,000. 20 lakh divided by 37 lakh 80,000 into 100. 52.91%. But the thing is, this is at what rate? This is at new current PV ratio. But what they are asking, they are telling profit for the year to be maintained as 826,200 and 745,200. Guys, can you tell me how much is your break even? We know that 56 lakh 70,000 and 37 lakh 80,000. Correct? No? 37 lakh 80,000. Now, can you tell me the break-even sales, please? Oh, sorry, this is break-even sales, no? Margin of safety. 24 lakh, 30,000, 16 lakh 20,000. This will be your margin of safety for the period. See, that PV ratio is at a old rate, right? This is your margin of safety for the period. Now, I also know that how much profit I want to achieve during the period, which is 8,26,200, 7 lakh 5,200. Guys, I know MOS, I know profit. So profit by MOS should give me PV ratio, because profit by PV ratio is MOS. PV ratio, if I take that side, MOS, if I bring this side, profit by MOS is PV ratio. How much it is? 34 percentage, 46 percentage. Is that clear? So this will be my PV ratio. Also, I know the sales as 81 lakh as well as 54 lakh. May I know the contribution? 81 lakh into 34%.
27,54,000.
If you want to do that, you can do that, or using break-even sales also I can find out fixed cost. What shall we do? This is fine, huh? Okay. 81 lakh into 34%. 81 lakh into 34%. 27 lakh 54,000. 54 lakh into 46%. 24 lakh. This will be your contribution. Correct, no? From this contribution, when I reduce fixed cost, I should get the profit. Now I know that desired profit is 826,200 and 745,200. So in first case, my fixed cost should be how much?
19 lakh 27,800.
Second case,
17,38,800.
that means in first case, how much fixed cost we should save? Right now we know that fixed cost is 22 lakh. Correct, no? But to
17,38,800.
okay. First case, I know that my fixed cost right now is 22 lakh, but I want to achieve 19 lakh 27,800. That means I want to save how much?
2,72,200.
Got it? In second case, I know that my fixed cost is 20 lakh. To achieve this profit, I have to make sure it is around 17 lakh 38,800. Is that clear? This should be the reduction in the fixed cost. Hope it's clear. Sir, this PV ratio, why we didn't take? This is older rate. During the period, you know that selling price is changing, right? So automatically, it will have a impact.
They mentioned in the second question, sub-question, like 4 there. That's the reason.
That is the reason, yeah. We have taken profit and everything as this. Shall we proceed? During a particular period, ABC has furnished the following data. Sales 10 lakh, POP Jan 2021. Contribution 37%. So variable cost is 63%. Margin of safety 25%. Break-even sale is a decrease in the selling price and decrease in the fixed cost could change the contribution to sales ratio to 30%. They are telling that due to decrease in the selling price, our new PV ratio is gonna be 30%, it seems. Right now, how much it is? 37. They are telling it will be reduced by how much? 30. And margin of safety is 40 lakhs. Sorry, 40%. From 25%, it will go to 40% just because your fixed cost is also reducing. Got it? Now they are asking you calculate the revised fixed cost, revised sales, new break-even sales. How to solve this? We already done it in the morning. We discussed also. Same logic. Sorry? Variable cost. What is it? See there. Decrease in the selling price. Because of that, your contribution is falling to 30%. Not because of the change in the sales quantity. That means whatever you achieved last year variable cost, same total variable cost will be there for current year also. Last year, how much was your variable cost?
6 lakh.
Sale was 10 lakh. PV ratio was 37%. That means contribution was 3 lakh 70. Variable cost was 63%, which is that clear? This is your variable cost last year. Whereas they are telling decrease in the selling price would lead to decrease in PV ratio to 30%. That means remember that here purely it is only and only due to decrease in selling price, not due to decrease in sales quantity. That means for current year also variable cost will be how much? 6,30,000 only. Got it? And current year PV ratio is 30%. That means variable is 70% of the total sale. 70% means 6,30,000. 100% means question mark. Rupees 9 lakh. Is that clear? Hello? So your revised sale is around 9 lakh. Hope it is clear. Margin of safety is 40% of the revised sale. That means break even is 60% of the revised sale. May I know how much it is? 5 lakh 40,000. 5 lakh 40,000. Is that clear? New break even is 5 lakh 40,000. Now guys, I know that at break even contribution is equal to fixed cost. If the break even is 5 lakh 40,000, you took 60% of 9 lakh, right? 5 lakh 40,000 is break even into PV ratio, that is 30%. I will get fixed cost because I know that contribution at break even is equal to how much it is. Is that clear, everyone? 1 lakh 62, 9 lakh, 5 lakh 40,000. Anyone, any doubt in this? Again, I told you to remember that key point. If at all they tell due to change in the selling price, they are trying to give you hint about variable cost. Okay? Anyone, any doubt here? No doubt, no? Can proceed. This is one more nice question. PYP Jan 2021, 10 marks. Guys, let's say there is one firm, okay? There is one firm with the total capacity of rupees 10 lakh. One more firm is there, let's say, with the total capacity of 20 lakhs. Now, this is operating at 80%. This is operating at 70%. Now, can I say that, 80% of this is how much? 8 lakh. 14 lakh. Can I say that 22 lakh, if I merge these two firms, that will be 22 lakh. Can I say that 22 lakh is 150% of new firm? Can I say that it is 150% of new firm? No. I should first find out total capacity of my new firm. How to find out? Can I compare 8 lakh and 14 lakh? No. What I will do, I will find out 100% is how much. Firm 1, 100% is 10 lakh. Firm 2, 100% is 20 lakh. So total firm capacity, new firm capacity will be 30 lakh. If at all we are operating at 22 lakh, that means we are operating somewhere around 73 point some percentage. Understood? So you just can't add these two and tell my firm is operating at newly merged firm is operating at that percentage. Is that clear? Because one is having different capacity, other one is having different capacity. Just you can't add on those percentages and tell that this is the total capacity. No. You can't compare the firm which are operating at different capacity. You should bring it to the common capacity. Need not be 100%. If you want, you can bring it to 50% also. How, sir? 80% it is operating at 8 lakh. 50% it will operate at what? 5 lakh. Second one, at 70% it's operating at 14 lakh. 50% it will operate at. That means 15 lakh is there, no? That is 50% of your new firm capacity. Like that. You should bring it to the common. You can't just add and tell that total is 150. No. You understood this concept now? Now listen. Two manufacturing companies, A and B, are planning to merge. The details are as follows. A is utilizing capacity of 90, B is utilizing capacity of 60. Now can I add these two and tell that we are operating at 150? No. Right? So I have to find out the capacity of new firm. To find out the capacity, I should bring it into common factor. Shall I bring both into 100% of their capacity? 90 means 63 lakhs, guys. 100 means 70 lakhs. 48 lakh means 60, guys. 100 means, that means total capacity of my organization will become 1 crore 50 lakh. Is that clear? Hello? Done. Variable cost is there. Leave that we'll see later. Fixed cost is there. It has nothing to do with what percentage capacity, whatever it is. Assume that the proposal is implemented. Calculate break-even sale of the merged plant and the capacity utilization at that rate. Now guys, this is your sales at 100% capacity. Correct, no? Variable cost at 100% will be how much? 39,60,000 at 90%. At 100% it should be 44 lakhs. 22,50,000 at 60%. At 100%. 37,50,000. May I know the total variable cost? Why you did this, sir? Because I can't compare sale of 100% with variable cost of some other percentage, no? So now what will be my PV ratio? 81,50,000 divided by 1 crore 50 lakhs. 50? Is that clear? Hello? First what they asked? Break-even sales they asked. Guys, Should I convert fixed cost also into 100? No. Fixed cost 0 to 100, it will be same only. Correct? No. It's not going to change at all. So the total cost of the fixed cost will be, 28 lakh. First one they are asking break even sale of the merge plant, which is 28 lakh is the fixed cost of the merge plant divided by PV ratio of merge plant will be how much, guys? No, that is your variable cost. PV ratio will be 45.67 percentage. Correct? No? Which is gonna be 61 lakh 30,000 939. This will be your break even sale. 61 lakh 30,000 939. Hope you guys understood why we converted it to 100. If you want, you can convert to 50 also. I am telling again and again and again. Next, capacity utilization at this stage. So, yeah. Yeah, 100 is little easy because this also will be answered now. See, now we want to know how many percentage of capacity was utilized. I know that my 100% capacity is 1 crore 50 lakh. Otherwise, I have to calculate it again. Okay. So, 1 crore 50 lakhs. Whatever the capacity, you make sure you take for both same percentage. That's it. How many percentage is 41 na? Round figure. Then keep it as 40.87 so percentage. Is that clear? Profitability of the merge plant at 80%. Guys, sales is 1 crore 50 lakhs. 80% of 1 crore 50 lakhs is how much? 1 crore 20 lakhs. Contribution of this will be how much? 0.4567. 54 lakh 80,000. And your fixed cost is how much? 28 lakh. So 26 lakh 80,400 rupees would be your profit when you are operating at 80%. Got it? Next, what they are asking, sales turnover of the merge plant to earn profit of 60 lakh. That means, guys, I don't know how much sales should be. Shall I take it as X? Then contribution will be 0.4567x. From that, when I reduce fixed cost, that should give me net profit of 60 lakhs. So 88 lakh divided by 0.4567. 67. Then what they asked? When the merge plant is working at capacity, that means working at capacity means 100%. At capacity means always remember 100%. To earn a profit of, oh, now it is not at capacity. So try to understand. When the merge plant is working, if they just said at capacity, that means it is 100%. But here they are telling we are working at a capacity to earn profit of 60 lakh. Yeah. What percentage of increase in selling price is required to sustain an increase in 5% in fixed overhead? Now, how much sales we are doing to make the profit of 60 lakh? I don't know, right? So shall I take it as 0.4567a minus 60 only, right? Then we know the sales, no? We know the sales what we are making. 1 crore 92 lakh 68,667.
28 lakhs fixed. Here 5% increase.
No, that is there. First, you see, when the merge plant is working at a capacity, what percentage of increase in the selling price is required? So, to sustain increase in the fixed cost by 5%, that means, try to understand, if I take sales, my sales now just it cannot be 192, 68, 667. I should add some extra amount to it. Then only I can make sure that increase is taken care. So my new sales will be 1 crore 92 lakh 68,667 plus extra what I should make to get that number. Contribution on this will be 0.4567. Got it? How much it will be? 88 lakhs plus 0.4567x. From this, when I reduce the fixed cost, now fixed cost will be 28 lakh plus 5%. 29 lakh 40,000. From this, if I reduce, I should get a profit same as earlier, which is 60 lakhs. Got it? Now, how much will be my X value? 88 lakh plus 0.4567 X is equal to 89 lakh 40,000. Now 1 lakh 40,000 divided by 0.4567 is equal to X. 3,06,000. That means, try to understand, to achieve this, to make sure this is taken care, extra fixed cost, I want to achieve extra sale of 3,06,547. That is not possible, of course, through change in sales quantity. I want to achieve it through sales price change.
Sir, when I do it straight also, I will get the excess. Not only excess, the whole amount, then I can minus.
Then you should minus and take it. Now I got to know only extra amount is how much compared to the old amount, which is 192, 68.
So when I do it in the same way, I take the.
Yeah, if you take here it as X straight away, then you can get no problem. 1 point. So you should increase your selling price by 1.59. Got it? So we got 45.67 only, no? Capacity utilization, we got 40.88. 40.87. Okay. Next, profitability, we got 26 lakh 80,400. Yes. Okay. Next, sales to earn profit of 60 lakh. We got 1 crore 90 to 68. Yes. Increase in sales, we got something else. They have just taken only change in fixed cost. Okay. We have done it. this way, but actually $89.40, 88, 1,40,000, right? We also taken 1,40,000. How much is 1,40,000 divided by 0.4567 once again? Three lakh 6,547. Here the thing is, these people are taking 0.726. That is just they have taken it. This should be the increase in contribution, not increase in sales.
They have mentioned sales.
No. Which one? No, that's what I'm telling. What they are taking it as, they are taking, see, fixed cost, we won't get the full sale amount. We get contribution amount. To make sure that 1,40,000 is offset, I want my contribution 1,40,000 more, or I want my sales 1,40,000 more. I want my contribution 1,40,000 more. Okay, but they have taken sales. One way it is correct also. The reason being, here we want to achieve 1,40,000 by what? By increasing sales quantity or by increasing selling price? By increasing selling price. Now that means variable cost, whatever we planned earlier, that's gonna remain same. But here, when we did here, what we took that amount on the text also. So listen, I will tell what is it. Right now we are making 192,68,667. This is the current sale. For the same number of units, if at all current selling price, same number of units if I sell, how much variable cost I will make? 192,68,667 into 45.67 percentage. 366. Guys, now my question is, due to change in selling price, will your variable cost change? That means we should have taken variable cost as 87,90,336. Got it? We have taken contribution of that. Okay. So what we can do, sales 192,68,667. Also I should increase some more amount due to increase in selling price. That will give me total sales now. From that I will reduce variable cost of 87,90,366. But we have taken PV ratio and taken contribution directly. That's the mistake there. You got it? Now my contribution will be how much, guys?
83,89,630.
Plus X. Correct, no? From this, I will reduce the fixed cost. How much will be the fixed cost? Right now, 28 lakh. It's going to increase by 5%. 29 lakh 40,000. Got it? This should give me profit of 60 lakhs. Now may I know the value of X, please? Sorry? 60. 15 lakh?
38,301.
How come you are getting that? You reduce this too, no? Sales minus variable cost you have done, right? Okay.
That is the concept like one crore 4 lakhs. From that again we reduce
29 lakh 40,000. How much it is?
35 lakhs. From that we reduce 60.
15 lakh. X is equal to
15,38,301. Yes.
how come you're getting that much? This one 1,92,000 you have taken, no? Guys, yeah, we have taken, no. Wait. This you have taken, no? Into what percentage you have done? 45.67 is it? But that is contribution, no? Variable cost percentage is how much?
34.33.
Reduce that, no? One crore.
1 crore 4 lakhs 68,667.
Is it? So actually your variable cost is this. We have taken PV ratio. Don't take PV ratio. 104, 66, 667. May know the value here. 88 lakhs. Okay. Now can you tell me the value of X? One lakh 40,000. So my sales should increase by 1,40,000 compared to 1 crore 92 lakh 68,667 earlier. So how much it should increase?
0.7.
Into 100. 0.72%. Is that clear? This is how you should do. So please make sure, due to the change in selling price they are telling. Okay. So don't take the PV ratio directly, contribution you don't take, start from the sales only. Okay. And that variable cost percentage we should have taken. I don't know why we have taken PV ratio. Forget. Is that clear? Okay. Look at this question. PYP Jan 2021. But here the major thing is, one more thing is that guys, in this question, convert the percentage into common percentage.
100%.
It could be 100, it could be 50, it could be 90, anything, but bring it to the common percentage. That will be that many percentage of newly formed firm. Okay. AZ company has prepared its budget for the production of 2 lakh units. Variable cost per unit is 16. Fixed cost per unit 4. That means for 2 lakh it is 4. That means total is how much? 8 lakh. Company fixes its selling price to fetch a profit of 20% on cost. Guys, total cost we determined to be 20, right? Extra 20% profit we kept. 24. Okay. Selling price was how much? 24. First, they're asking you present break-even sales. Guys, your selling price is how much? 24. Variable cost is how much? 16. So contribution is how much? 8. So how many percentage it is? 8 by 24. 33.33%. Is that clear? So your PV ratio is, guys, 33.33%. Present break even they are asking. We already computed fixed cost. How much? 8 lakh. You understood now how 8 lakh? When it was 2 lakh units, per unit 4 rupees. 8 lakh won't change year onwards. Along with sales, per unit will change. 8 lakh divided by PV ratio.
24 lakhs.
Rupees 24 lakhs. You should take continuously 0.33333333. If at all you want it in quantity, very simple. Fixed cost is 8 lakh. You can divide directly by selling price. Or you can take fixed cost is 8 lakh, contribution is 8 rupees, which is 1 lakh units. Present PV ratio we already computed 33.33 percentage. Is that clear? Revised break-even sale in rupees and revised PV ratio if the selling price is reduced by 10%. That means new selling price will be how much, guys? 24 minus 21.6. Variable cost will be how much? 16 only, because variable cost won't change with selling price. Contribution is 5.6. PV ratio 5.6 divided by 21.6 into 100. Sorry? Sir, please don't round off the percentages. 25 ah? 9 na? 9. Okay. This will be the PV ratio. So, 24 lakh? That's what I told madam. You only computed that 33.33. So in calculator, take 33.3333333333. In question, if they give 33.33, you take directly 33.33. Here you computed. So your calculator didn't give you answer as 33.33. It gave it as 33.333333. So take the full numbers. For this also, any recurring number it is, if you do in calculator, take full number. In question only, if they tell 30.33, then take only 33.33. Okay, done. Now, new break even will be, guys, how much is the fixed cost? That is not going to change. That will be 8 lakh only. But new PV ratio is 25.93%. 30 lakh? That depends on rounding off. What would be revised sales in quantity and the amount if the company desires a profit increase of 20% more than the budgeted profit and selling price is reduced by 10% compared to point number 3. So try to understand what will be the quantity and the amount of sales they are asking. Desires a profit of increase in profit of 20% more than the budgeted profit of 0.3. How much was budgeted in 0.3 profit? Not in 0.3. Overall, how much is budgeted? 20% of total cost. Correct? So, how much it was? Total cost was 20 rupees. So, 20 into 2 lakh? 40 lakhs. Correct? No? 40 lakhs. 20% was what we planned? 8 lakh. Earlier we planned for how much? 8 lakh. You guys understood?
Yes.
Earlier total cost came to 40 lakh. We were expecting 20% on that as profit. Whereas this year they are telling desires profit of increase of 20% more than budgeted profit. So extra 20%. So our desired profit is 9,60,000. Is that clear, everyone? Desired profit is sorted. Next. Selling price is reduced by 10% as point number 3. That means they are telling new selling price is 21.6 only. Hello. Selling price is 21.6 only. That means PV ratio will be 25.93 only. Or in simple, first let's find out the units. Shall I say X number of units we are planning to sell? Okay. X number of units we are planning to sell at what rate? 21.6. So my sales will be 21.6x. Variable cost will be 16x. Contribution will be 5.6x. From that, fixed cost we are going to reduce, which is 8 lakh. No changes in all those things. Only change is our desired profit is gonna be 9 lakh 60,000. So x is equal to 17 lakh 60,000 divided by 5.6. 286 units. Okay. Units wise, this much. Amount wise, you understood this one? Amount wise, let's say total sales is Y. Then PV contribution will be 0.2593 Y because PV ratio is 25.93 percentage. From that fixed cost we are going to reduce 8 lakh. Profit would be 9 lakh 60,000. How much is 17 lakh 60,000 divided by 0.2593? Yeah, you can do. You can multiply with the selling price. I'm just showing, if at all you want to start with the amount, you can start with this. Units, you can start with this. Simple question. Anyone any doubt in that? Reason is 25.93 is not the actual PV. That is having some different thing. Rounding off errors. Okay. Some difference is coming here. Hope it's clear and we can proceed. Look at the question number 30. ABC Limited sells its product Y at a price of 300 and its variable cost is 180. PYP November 2022 and its variable cost is 180. So may I know the contribution please? 120. The fixed cost is 16,80,000 per year uniformly incurred throughout the year. The profit is 7,20,000. First one, they are asking break-even point in units as well as in rupees. Fixed cost is how much, guys? 16,80,000 divided by, first let me find out in value. So I will take a PV ratio, right? Divided by PV ratio. PV ratio is 40%, 120 by 300. Break-even sale is rupees 42 lakhs. If I divide it with the selling price, that is 300. Why? 42 lakh divided by selling price. You want formula wise? Okay, then fine. 16,80,000 divided by 120. 14,000. I was telling, anyhow you have a break-even sales, divide with selling price, you will get in units. Whenever I do that, they're like, sir, we can do this multiply now. Now I divide it. They're like, sir.
On that spot.
Oh, no worries. Now, shall we proceed to MOS? Now, I know the break-even sale, which is 42 lakhs. Right now, how much is my sales? I don't know. How much is my profit? 7,20,000. Then do know 7,20,000 divided by profit. PV ratio. Profit by PV ratio will give you MOS. 18 lakhs. Profit made when sales are 24,000 units. Guys, when sale are 24,000 units, that means Contribution is 120, right? So your sales will be, contribution will be 24,000 into 120. 28 lakh 80,000. And how much will be your fixed cost? Fixed cost is 16 lakh 80,000. So profit is, guys, 12 lakh. Profit is 12 lakh. Is that clear? Next, sales in value, that is in rupees, to be made to earn the net profit of 10 lakh for the year. For this, shall I use formula? You remember what we discussed in the morning? What was that? Fixed cost, awesome, 16 lakh 80,000 plus desired profit 10 lakh divided by PV ratio, not contribution per unit. Reason being they want it in value, and PV ratio is 0.4. 60. And if at all you want to use the normal equation method, let me take sales as X, contribution will be 0.4x, 0.4x minus 16 lakh 80,000, that will be equal to 10 lakh. 0.4x is equal to 10 lakh plus 16 lakh 80,000. 0.4x is equal to 26 lakh 80,000. X is equal to 26 lakh 80,000 divided by 0.4. X is equal to 67 lakhs. Can do that way or this way. It's your choice. Anyone any doubt in this? No doubt? May 2023, question number 31. For 5 marks. Shall we start? The following information pertains to ZB Limited for the year. PV ratio is 30%. So contribution is, variable cost is 70%. MOS is 25%. Break even is, fixed cost is 12 lakh 60,000. You are required to calculate break even sales they are asking. That is fixed cost divided by PV ratio. You know, right, why? At break even, contribution is equal to fixed cost. So break even into PV ratio is equal to fixed cost. Break even is equal to fixed cost divided by PV ratio. Hope you remember how we arrived at formula. Hope you remember that statement, sentence, everything. 12 lakh 60,000 divided by PV ratio is 0.3. Next, total sale. Guys, break even is 42 lakh and they are telling MOS is 25%. That means break even is 75%. So 75% means 42 lakh. 100% means 56 lakhs. Is that clear? Next, proposed sales value. If company wants to earn the present profit after reduction of 10% in fixed cost. So we want to earn the current profit, which is total profit. We know the margin of safety. We don't know. We have to compute. Total sales is how much? 56 lakh. Of that, 25% is your margin of safety. Okay. We know that PV ratio, that is contribution at margin of safety, will give us profit. Correct? No? Contribution at margin of safety is equal to profit. 4,20,000. They are telling, boss, you have to earn the same 4,20,000 rupees provided reduction in the fixed cost by 10%. How much is fixed cost? 12,60,000. Now let's say, shall I take sales as X? Yes. Is selling price changing? Variable cost changing?
No.
Moral of the story, PV ratio changes. No. So P ratio is going to remain 30% itself. That means, can I say sales to achieve is 0.3s? From the 0.3s, I am going to reduce the new fixed cost. 12,60,000 minus 10%. 11,34,000. That should lead us to the same amount of profit, which was 4,20,000. So 4,20,000 plus 11,34,000 divided by 0.3. So the sales I want to achieve to offset 10% reduction in the fixed cost is 51,80,000, because we don't have to achieve 4,20,000 extra sales. Is that clear? Done. Sales in value to be made to earn profit of 20% on sale, assuming fixed cost remains unchanged. That means my contribution will be 0.3 SR. Fixed cost is gonna be 12,60,000 only. Okay. To achieve profit of 20% on sale, 0.2 yes. So 12,60,000 divided by 0.1. 1 crore 26 lakh. Is that clear, everyone? You guys are able to understand, right?
Yes.
Next, new margin of safety if the sales value at present computed in point number 2, 56 lakh, decreased by 12.5%. 56 lakh minus 12.5%, 49 lakhs. Guys, will your break even changes along with the units? Sorry, I mean, yeah, sales decrease? No, which is 42 lakhs. 7 lakhs. Simple. Anyone any doubt in this? No doubt? That up in that first one, there you should, yeah. And sometimes students say that shock will be there, be careful. No, the first one you put. Steel pencil you take. Steel pencil you take. Take steel pencil. Or put some water into that pencil. Put some water. Trust me. Nothing will happen. I don't know why that meme was coming to my mind. With coffee mug. Same. Again coffee mug. Now she's like, she's gonna fly. Yeah. She'll go home, she will change plug points to this thing, and she will start doing it.
And every supply company should give an wooden pencil with letters. They have to
Steel pencil they should give.
better pencil.
Seriously.
Wooden pencil, if any parent may can use a wooden pencil. If you are inserting a pencil, even
Wooden pencil, what happens?
wooden electricity passes. If wooden pencil means electrics will not be.
Is it? Do this, I will tell you one crazy thing. To rectify that in one single shot, I mean, after that in your whole life, you don't have to do that at all. In one shot, it will get rectified. Take the wooden pencil, overnight soak it in water. Overnight. Along with almond one side, brain, you know, one side, this one. Next day, you just put there. And please don't forget to turn on the switch while you are putting there. More important. Otherwise, just light shock it is.
No.
You guys, yeah. You guys don't have that idea, I feel. You know that cable TV by any chance? Yes? Earlier, that used to come in one pin. So, whenever it was thunder and all used to be there, we used to plug it out. That used to give us like nice shock. So, like that, it will be light one. You just turn on the switch and you do. No, I know how to do that without pencil also. So, I don't. It won't go there. Yes. You should take the other end of the charger.
To make it down.
That
Mobile pin is there, no? C type.
Sir. How it would go to that circle?
Why it won't go? Yeah, it will go. See, that is not that small also. C type will go.
No, I will not. No, sir.
Try, go try.
Can we try with your pencil?
No. This one? This is ArivuPro's. I don't mind. Not this. No, this is, I think, ceramic, so nothing will happen. If you want, you can try like this, holding like this.
Holding it.
See this. Calculate the effect on profit under each alternative and recommend which alternative is most likely to be adopted to get a maximum profit. A recent question, that is PYP Jan 2025, for 6 marks they have asked. Easy question. Easy in the sense very easy. See. SW Limited manufactures linen bed covers. Present cost data are as below. Variable cost is 200. Variable selling is 100. Total variable cost is how much? Fixed cost is 16 lakh. Selling price is 800. So contribution is? Expected profit during the year is 8 lakh. Okay. So how many units you are planning to sell then? No information, but you can find out. Yeah. Let's say we are planning to sell X number of units. Okay. Then if you sell X number of units, contribution will be how much? 500X. From that, if I reduce fixed cost, that will give me profit of. So X is equal to 24 lakh divided by 500. So now you are planning to sell how many units? 4,800 units. I mean, now you are selling. The management could sense a stage of stagnation or deterioration in future sale with the new entrant RK Enterprises. The SW Limited has approached to one marketing consulting firm For the study of cost volume profit analysis, the firm suggests three alternatives to fuel the sales growth by changing or playing with the selling price. Alternative 1, reduce selling price by 10%. Right now how much? 500, no? 800. So change it by 10%, that means 720. Next one, reduce it by 12.5%. Next, reduce it by 15%. This will be the new selling price. Projected increase in the sales. From the sale level, that would generate 8 lakh. Right now, it is how many units? 4,800. It will increase by 15%. 5,520. Next one, it would increase by 20%. 5,760. Next 25%. Okay. These are the new sales quantity, new selling price. Is that clear? Clear or no? Now, if at all you go for the first one, how much will be the contribution? 420. Because variable cost is not going to change. Selling price is going to be 720. So the profit will be, contribution will be 420. In second case, 400. In third case, 380. Is that clear? Huh, madam? 300, no? Now, contribution in first case will be how much? 5520 into 420. 20? 1818. 23 lakh 18,400. 23 lakh 4,000. Okay. 22 lakh 80,000. This is contribution. Correct? Now, profit will be how much? 23 lakh 18,400 minus 16 lakh fixed cost. 7 lakh 18,400. 23 lakh 4,000 minus 16 lakh. 7 lakh 4,000. Next one. 6 lakh 80,000. Guys, which one will give maximum profit? Current situation gives maximum profit, of course, 8 lakh rupees. Correct, no? However, next year onwards, we are not able to continue that. That's the reason we hired these people. So, next year onwards, out of all the three, which one is better? First alternative is better. That is, decrease your selling price by 10%, and because of that, increase in quantity by 15%. Is that clear? No doubts? We'll proceed. Calculate the minimum number of units to be sold to sustain the same per unit profit. Per unit profit, please keep in mind, not total profit, per unit profit. For the financial year, ignore further effects on fixed cost. Okay, May 2025 for 5 marks. Few people will curse now. For 5 marks, they gave this big question. At the same time, for 6 marks, they had given this silly question that they don't care at all. Oh, benefit you should never question.
Why anybody will question this? They have not even considered this consideration.
Now, A Industries is a heavy industrial gear manufacturing company with a manufacturing setup based in Pune. Mr. Andrew, the CFO of the company, furnished the following information to Mr. Joy, who heads the finance department. Anyone friends fans here? Nice. Who will stop, friends? Which season? No, you should see first 5 episodes. First 5 will be boring. Then, once all the characters get introduced,
What is
in Netflix it's there, is it? That will keep changing. It was there in Amazon, Netflix. Yeah, exams are there. Don't see all those things. Time pass. After exams, you can watch. Yeah. Also, you can watch Office. That is also good. Also, you can watch Suits. That is also. By then, your articleship will start. Then don't do whatever Harvey does in office in your office. Then they will throw you out. Suits is now not nice.
No, I just started watching. We have to watch. I didn't continue to watch it. But started, I didn't watch it.
You are a ArivuPro student.
Yes, sir. But I didn't attend costing.
Got it. No, I mean that's what our recorded students also will do. They start watching, they won't continue. Shall we start? See, right now they have given total sales, they have given raw material cost, they have given direct wages, they have given fixed and variable overhead. Together they have given, guys, 25,000 and profit is 10,000. Just check, things are matching there. 50, 50 plus 40, 90, 90, 10. Correct. Total number of units sold are 40,000 units. May I know the selling price, please? Per unit.
2.5.
What?
Per unit.
Very good. The market being very competitive and with the raw material rates rising, Mr. Andrew raises his concern with Mr. Joy, who he expects in the next financial year workers' wages to rise by 20% and fixed cost component to decrease by 500 crores. Okay. A morning I told you change in fixed cost is also there. So just you can't take change in cost divided by change in units as a variable cost per unit. Morning I told you, remember? See, you can see here. Total fixed total fixed overhead would be, I mean fixed and variable is 28,500. Last year how much it was? Now it will be 28,500. But remember, compared to last year, this year fixed cost is increased by 500. No, fixed cost component decrease by 500. Total fixed and variable overhead, however, leave PYP, is it RTP? The total number of units expected to be sold would be 50,000. Next year, total overhead is expected to sold is how much? 50,000. Calculate the minimum number of units to be sold to sustain the same per unit profit in the financial year 25-26. Last year, how much profit we made? 10,000. So per unit, how much we made? .25 CR per unit. Correct, no? This year also they are telling we want to make the same amount. Raw material, guys, per unit how much last time? 1.25. This year they are telling what? Rate rising, Mr. No, only wages. Okay. About raw material, they didn't tell how much increase and all. So we are going to keep it same. Direct wages 15,000. That means per unit how much? 0.375. And that is going to increase by
20%.
0.45. 0.45 will be where? Direct wages per unit. Now, fixed and variable, concentrate here, very important. Last year, how much it was? 25,000. This year, how much they are telling?
28,500.
28,500. Last year, how many units? This year, how many units?
3,000.
Now listen. If at all they haven't told anything about that fixed cost, then I would have treated full 3,500 is change due to variable cost. So 3,500 change in cost I used to take, divide by change in units 10,000. I used to make it as 0.35 is variable cost per unit in this. Change in cost by change in sales. But the best part is here fixed cost is also changing. So in this scenario, what you should do, sir? Very simple. Eliminate the effect of fixed cost. Very good. Add 500. Compared to last year, this year fixed cost reduced by 500. If at all you want to eliminate the effect of that, you should add it back to total. That is, if at all fixed cost wasn't changed, no. If at all fixed cost was like old one only, my cost wouldn't be 28,500, rather it would be 29,000. Got it? That means due to the change in variable cost, the effect is not 3,500, rather it is 4,000. Got it? 4,000 is due to effect in the change in variable cost all alone, divided by 10,000 rupees, 0.4 per unit. I can apply to anything, better to apply to first one. Better to apply to first one. How much it is? So how many units are there? 40,000, no? So 40,000 units into 0.4. 16,000. This will be your variable cost, where the total was 25. That means fixed cost was 9,000. But for the current period, listen, fixed cost won't be 9,000. This is last year. Current period they are telling fixed cost is reduced by 500. Current period fixed cost will be 8,500. That 500 don't forget to eliminate. Is that clear? Any doubts? You understood now when there is a fixed cost what to do? Change in fixed cost also is given. Otherwise all the cost will be due to variable cost. But here change in fixed cost is also given. So I should eliminate it and take the only changes in variable cost and then find out. Then you can do whatever nonsense you want. Okay. Now shall we find out how many units to sell to achieve this profit? Yes, my sales will be how much, guys? My sales will be, selling price is 2.5 CR, right? Are we changing our selling price? Nope. So my sold units will be 2.5x. If at all we are planning to sell X number of units, it will be 2.5x. Variable cost would be 1.25 material, 0.45 wages, other 0.4 this variable overhead. How much? 1.25. You should show separately, but I am adding and taking. 1.25 plus 0.45 plus 0.4. 2.1x. Contribution will be 0.4x. Contribution will be 0.4x. And your fixed cost is how much? 8,500. Correct? That should give me profit of 0.25 per unit. Correct? They didn't ask total profit should be same. They told per unit profit should be same. Got it? So can I make it as 0.4x minus 8,500 is equal to 0.25. So x is equal to, sorry, so I should sell at least 56,666.67 units to achieve got it? Hello? Any doubts? Any doubts? Paka? We'll proceed. Understood now? This is that opportunity cost question I told no. They have asked for 3 marks here. A company can make one of the two product M or S during the year. It can exercise its option only at the beginning of the year. Relevant information. Selling price they have given, variable cost they have given. Contribution 30, 15. Market demand production, whichever is lower or whichever is higher. Whichever is lower. Here I can produce 3000. Here I can produce 7000. Fixed cost 1,20,000. Are you produce M or you produce S? Actually, it should be for both. Okay. It's not going to change. So, moral of the story. This should not be considered for computation of opportunity cost. If at all you produce M, how much will be your contribution? 3000 into 30. 90,000. In second case, 7,000 into 15. So if at all you produce M, your opportunity cost is 1,05,000. If at all you produce S, your opportunity cost is 90,000. Simple question. Can you imagine that for 3 marks? See, actually, this is RTP question, okay, May 2018. They have made a bit mistake in the question that they would have rectified in question. I don't know why they didn't rectify. Rather, after solution, they have rectified and given. May 2018, RTP May 2018. See here, they are telling, I mean, just a small change. The budgeted profit or loss for 2018 in respect of A and B should be 210 and 30,000 respectively instead of 150 and 30,000. Okay, they had given 150,000 and 30,000. They should have given it as 210 and 30. I have rectified and given here, but in the RTP they had done that mistake. I think in yours it is 150, 30. Please change it to 210 and 30. Because I rectified it very recently.
210 and minus 30.
Yeah. By the way, what do you mean by price elasticity, guys? Unity. Price elasticity in unity. That means 1. What do you mean by price elasticity is equal to 1? Economics, correct. I am non-eco student.
However, due to change in price, how the demand changes.
However,
Demand changes for the.
see, if at all, total sales is not going to change. If unity is 1, or I mean unity means 1 only. If at all elasticity is 1, that means if at all you increase your selling price, automatically your quantity sales will reduce. Sales will remain same. If at all your selling price decreases, actually sales should fall, no? But it won't fall because people will start buying more. That means in simple, total sales remains same. Due to change in selling price, the total sales will not change because the units will get adjusted to that. Okay. Now, a company manufactures 2 types of herbal products, A and B. Its budget shows profit figure after apportioning the JC of 15 lakhs in the proportion of the number of units sold. Okay. The budget is as follows. Profit. A is making 2,10,000 profit. B is having loss of 30,000. Selling price is 200, 120. PV ratio is 40 rupees 80. Here 60. Variable cost is 120. Here it is 60. Is that clear? Now, first compute the best option among the following if the company expects that number of units to be sold would be equal. That means both will be sold in the same quantity. Both will be sold in same quantity, they are telling. See, due to exchange in manufacturing process, the joint fixed cost would be reduced by 15% and the variables would increase by 7.5%. Here they are telling JC of 15 lakh is distributed in what ratio? Unit sold ratio. Correct? And below that they told units sold are same. That means can I sell JC? Fixed cost will be 7,50,000 and 7,50,000. Yes or no? Guys.
Yes.
Now, first, due to exchange in manufacturing process, the joint fixed cost would be reduced by 15%. So, may I know the new fixed cost? Sorry? 12,75,000 and divide it equally because both are selling 6 lakh 6,37,500, 6,37,500. Correct? Now, before that, can you guys help me out in determining how many units we would have sold? Shall I take units sold as X? Yes. Contribution of A would be 80X. Contribution of B would be no Y, X only. Both are same quantity. Okay. Minus fixed cost. Earlier fixed cost was 7,50,000. I am talking about earlier. Correct? Hello. Here profit was 2,10,000. Here it is negative 30,000. So X is equal to the other one also we are getting same. Correct, no? Same, no? Earlier when it was 150 and 30, it wasn't matching. When it was 120, 150 and 30, it wasn't matching. But yeah, you should make it as that 1, 210 and 30. So now it's clear, I feel. Number of units earlier we sold was how much? 12,000 units. Now let's see. Same 12,000 units we are selling. Selling price is same only. Variable cost is also, variable would increase by 7.5%. So, variable cost here it was 120 rupees, no? Plus 7.5%. 129. Here it is. Sorry? Okay. Number of units they didn't tell changes. So, we are going to assume same number of units only. So, when you sell 12,000 units of A at the rate of 200, variable cost is 129, contribution will be how much? 71. Here, selling price is 120, variable cost is 64.5. 50? So, in case of A, contribution will be 71 into 12,000. Sorry, yeah, contribution only. 71 into 12,000. 8 lakh? 52,000. In case of B, 12,000 into 55.5. Sorry? 6,66,000 minus fixed cost. New fixed cost is 6,37,500. Two lakh 14,500. 21,000 profit only, no? In this, which one would you select? A. Is it clear? I mean, there is no choice because it's a joint cost. That means you can't produce only A. You have to go for A and B. In this case, total profit would come to how much? 2,43,000. In the existing, how much it was? 1,80,000. Got it? Price of A could be increased by 20%. As it is expected that price elasticity of demand would be unity over the range of price. That means if you increase your price by 20%, units sold also will be decreased by 20%. Overall speaking, sales will remain same. But please keep in mind, sir, then why we even have to adjust it? Variable cost is there, no? Variable cost will not change with change in, but it will change with. Got it? Although sales remain same, variable cost will not remain same now. Got it? So product A, right now how many units we are selling? 12,000 at the rate of 200. Now we are planning to change our selling price to 20% more, 240. Correct? So now how many units we are selling? 12,000. Automatically it will fall by 20%, which will come to 9,600. Is that clear? Hello? Now variable cost was how much? Variable cost was how much? 120. Don't take it. First one you should take. This is for the second point. 120. Contribution was 80. Take 120. So your contribution would be 120 into 9,600 units. Please keep in mind. 11 lakh 52,000 will be your contribution. Fixed cost is how much? 7 lakh 50,000. Don't take 6 lakh 37,500. 4 lakh 2,000. Of course, B, no changes. So it will be having loss of 30,000 only. 3 lakh 72,000. Is that clear? Hello? Third one. Simultaneous introduction of both the options. That means now you have to merge everything. Okay? First, sales. Second option may sales, no changes were there. Correct? But first option, sales, no changes were there. Second option, there is a change in the sale of A. Correct? So selling price of A would be 240. Variable cost would not be 120, 129 because of the first option. Okay? Selling price of B would remain at 120 only, but the variable cost will change to 64.5. Are you guys able to understand?
Yes.
So the contribution is 111 55.5 into units sold. Here, of course, units sold is going to be 9,600. Here it will be 12,000 only. 10,65,000 and 6,66,000. Fixed cost would be 6,37,500. Got it? 4,28,000.
It will not be 7 lakh.
No, because of the first point, it is changing. No joint fixed cost. We should take new cost. Next one. 28,500 total. Is that clear? See, option number 1. I think we got 2,43,000. Okay. Option number 2. Option number 2, how much we got? Where is option number 2?
4,56,000. Above. 4,56,000.
This one is option number 2, is it? No, this is option number 3. Option number 3, 5,01,000. How much is, wait, option number 2 we'll check first. Option number 2, revenue from A was 24 lakh only. Revised contribution 12, existing contribution, increase in profit 2,40,000. Just check in option number 2 how much was the increase in profit. This was option number 1 now. This was option number 1. This was option number 2. This was option number 3. Correct, no? What is the change in here? Oh, sorry. Here, 1,80,000, no? Earlier it was 1,80,000, no? What is the difference between 1,80,000 and 3,72,000? How much it? Increase in the profit when first one is 63,000. Here it is 63,000. Increase. Earlier it was 180,000. Now it is 2,43,000. Second alternative. Second alternative, I am unable to find out which one was the second alternative. This one only, no? 11,52,000 was the contribution. Earlier the contribution was how much? 12,000 into 80. How much was 12,000 into 80? 9 lakh? What was the difference? 2,40,000. Here actually 2,40,000. Okay. Minus 7,50,000 we have taken. Correct, no? Wait. Budgeted revenue is 24 lakh only. Correct. Revised contribution is 12 lakh. Existing contribution is 9,60,000. So here existing contribution, how much you got, you told? 80 into 80 is how much? I meant to say, sorry, 12,000 into 80 is how much? 9,60,000. Here the contribution is 9,60,000. 11,52,000 minus 9,60,000. 11,52,000. 1,92,000. But they are taking here 2,40,000 with the
10,000 units.
here how much we took units?
1,000 units. Nowhere we have taken 10,000. 12,000, 9,600.
How many units? We got 12,000 units, no, in total, or 10,000 units. 12,000 units only, no? Earlier? Yeah. Earlier it was 12,000. We took minus 10%, no? We took minus 10%, no? But by taking minus 10%, can you check how much will be the sales amount? Will it be same or no? 9,600 into new selling price is how much? 240, right? How much it will be? 1 second. How much? 23 lakh? 4,000. At old selling price, can you check for 12,000 units? 12,000 into 200. 20? Revenue is not same. Revenue is not same. So find out the units to be revenue to be same. Actually 10% increase, both won't match. How much it is? 24 lakh divided by new selling price. How much you told? 10,000. Actually the units you should take is 10,000. Sorry. Not 9,600. Because your sales revenue should be same. If you reduce 20% directly, revenue won't be same. How much is contribution? Sorry? 12 lakh. So profit will be 4,50,000. Here 4,20,000. So existing contribution is 9,60,000. New contribution was 12 lakh. So how much extra we got? No, 1,80,000 was old profit. New profit is 4,20,000. How much extra? 2,40,000. That's what we are making. 2,40,000.
The third option also there.
A third option, it will change. It will become 10,000. 11 lakh. 11 lakh 10,000. 4,72,500. Net 472,500 plus 28,500. 5 lakh 1,000. Difference, please. No. Difference is 1,80,000. Compared to first one, we are doing 3,21,000. Okay. That elasticity, please keep in mind. While telling, I told revenue, but I think minus 10% we did. Revenue won't change. Okay. To achieve the same revenue, you find out a unit rather than reducing it directly. Revenue will match. Unity means 1. That means revenue won't change. Okay. That one thing. And also whoever old question, just make the rectification there. Because in answer they had given this note. They should have just rectified it in question only rather than giving note here. I don't know the point, but yeah. If it was question paper, makes sense. Question paper comes first, then answer key later. So in answer key they rectified and given etc. Sorry? Just make this 150 as 210. No, there nothing is there.
They have given that in the bracket, no, the total revenue in respect of products or demands.
That
is not.
No, that I added. That they didn't give, that I added. What do you mean by elasticity? No. This one I added. Because they told no. Economics. Don't know. This one I added. That much they won't give. They expect you to know unity. We'll see one more question. RTP May 2020 as well as May 2024. Assume the administration overhead is related with the production activity. Okay. See here. A Limited manufactures and sells its product R9. The following figures have been collected from the cost records of the last year for the product R9. DM is there. 30% of COGS. Direct labor 15% of COGS. Factory overhead 10% of COGS. That is variable. Fixed is 230,000. And admin overhead 2% of COGS and 71,000. Selling and distribution is 4% of cost of sales and 68,000. Last year 5,000 units were sold at rupees 185. From the given, determine the following: break-even sale in rupees, profit earned during last year, margin of safety, profit if the sales were 10% less than the actual sales. What we can do here?
And sales we have,
Hmm.
we have, is that the variable sales?
Sales minus variable cost. How do you know variable cost? 30% of what? Do you know COGS?
But we know the fixed costs.
Okay. How is it going to make difference?
We have to take one unknown variable.
One unknown variable you can take. So which one you will take? Sales. Cost, if you take it as COGS, okay. Then cost of sales you will take as unknown number, or COGS you will take as unknown number? You will get COGS. See, here let me take cost of sales as C. C. Now sales will be how much? 5,000 into 185. Sorry? 9 lakh? 9,25,000. Got it? And here this is your sales minus cost. If I do, I will get profit. Correct? No? Okay. Now cost I don't know. Cost shall I take it as C? Yes. Now total cost is C means if total cost is C, selling and distribution will be 4% of C. 0.04 C. Admin overhead is 2% of COGS. How do you get that COGS? So whatever the cost is there, that is C. Correct? From the C, if you reduce selling and distribution, which is 0.04 C, which is 0.96 C minus fixed cost of 68,000. This will give you COGS. Now 30% of this, 15% of this, 10% of this, 2% of this. Okay. Plus these many things will give you C. Will give you C. Now when you solve it, you will find out C. You know the sales. Difference is profit. You understood what I am trying to say? Understood or no?
Yes.
So I can write it something like this. Concentrate. Total cost, shall I take it as C, guys? Total cost, shall I take it as C? Now selling and distribution will be 0.04 C. 0.04 C plus 68,000. This is your selling and distribution. Agreed or no? Yes. That means your cost of goods sold will be
70,000.
0.96C plus or minus 68,000. Minus 68,000. Correct, no? From total cost when I reduce COGS, from total cost when I reduce selling and distribution, I will arrive at COGS. So my COGS is 0.96 minus 68,000. Got it? Now, my COGS how much? Where it went? Which question? My COGS is there. Correct? Can I say my COGS is 0.96C minus 68,000? Yes? Plus my selling and distribution is 0.04C plus 68,000, that will be equal to C. Now we have to divide this portion into COGS. See here, I will just show it here. Direct material, direct labor, factory overhead, admin overhead. All these will give you cost of goods sold, because admin overhead they told related to production. Otherwise it would have formed part of your COS. If you take COGS as COGS, if you take COGS as COGS, direct material will be 0.3 COGS, direct labor will be 0.15 COGS, factory overhead variable 0.1 COGS plus 230,000, and admin overhead 0.02 COGS plus 71,000. So COGS is equal to 0.57 COGS plus 3,01,000. COGS is equal to 7 lakh. Okay. Now I know that my total cost minus selling and distribution will give me COGS. That means to COGS, if I add selling and distribution, that will give me total cost. Now, cost of sales is equal to COGS plus selling and distribution. Now, cost of sales would come to 8 lakh. Got it? Now, my first one, profit earned during the year. My sales is coming to 9,25,000. From that, if you reduce your COS 8 lakh, you will get profit for the period. First one is sorted. Next, variable cost. Total variable cost is how much? COGS, how much you got? 7 lakh. Of that 7 lakh, 30 plus 15, 45, 55, 57%. 7 lakh into 57%? 3 lakh 99,000. And my total cost came to how much? 8 lakh, right? 8 lakh. 8 lakh into 4%? 32,000. This would be my variable cost at the given level. How much? 4,31,000. Got it? Now, variable cost is how much? 4,31,000. Sales is how much? 9,25,000. Contribution is how much? 4,94,000. Now PV ratio is how much? 4,94,000 divided by 9,25,000. 53.41%. Now I know my fixed cost total. How much? 3. 3,69,000 divided by 53.41%. 6,90,000 will be your break-even point. Profit is 1,25,000. Margin of safety is profit, you know, PV ratio, you know. You will get margin of safety, which is, you will get in amount. That one, if you convert how many percentage of sales, how much is amount? Profit is how much? 1,25,000. 1,25,000 divided by 53.41%. 2,34,000. This is in amount, but they don't want it in amount. They want it in percentage. So divided by sales amount. 9,25,000. Margin of safety is 25.31%. Is that clear? Next, what they told. Profit if the sales were 10% less than the actual sales. Profit if the sales are 10% less than the actual sales. So sales would go to 925,000 minus 10%. 8,32,500. And they didn't tell it is due to change in selling price or units. We assume in units. Into, so PV ratio is how many percentage? 53.41. If at all it is due to selling price, then my variable cost also, variable cost wouldn't have changed. PV ratio would have changed. But here PV ratio won't change. How much it is? Fixed cost is how much?
38.
Okay, fixed cost is how much? 4,31,000 or something, right? Oh no, 3,69,000 I feel. Fixed cost we computed no somewhere. 3 lakh. That one 4,44,600 6. Rounding off. 75,600, you got 638 point. That is how you should do. But in that question, the major thing is conversion of that C into some value. Okay. If you want, you can start from C also. If you want. If at all you want, you can start from C. It's completely your call. If you start from C, listen, what you should do. Sales 9,25,000. Hello.
Yes, sir.
Sales 9,25,000. Sales is equal to cost plus profit. Hello.
Yes.
9,25,000 is equal to cost. Shall I take it as C? Then profit will be 9,25,000 minus C. So now 9,25,000 is equal to C plus 9,25,000 minus C. Wait. Now C I am going to split further. C I am going to split further. COGS and selling and distribution. C I am going to split further into COGS and selling and distribution. Selling and distribution we take as 0.04C plus some amount. COGS will be C minus this amount. After that you should keep on taking percentages. It will come to some full big line. Then you should start solving. Or you can start with COGS also.
Also on C is that there also.
Hmm.
If I take this no, then the answer will be different because minus.
No, this is plus C, this is minus C. No, that will get cancelled.
That is correct. Because we need to take this C as COGS and
Then that, ma'am is telling that.
Yeah, that will also change. Or that you keep it as that C only. This C you expand. Once I am expanding, because here also I am going to take no new integer. Everything will be CCC only. COGS is something minus C, like that. Okay, or else you can stick to this COGS point. Okay, where COGS is total of all these things. So COGS is equal to 0.57, this one, whichever you. Okay. One question we'll see and we'll take a break. How many basic more basic questions are there? Like 1, 2, 3, 4, 5. 5 more basic things are there. After that, we have different applications of marginal costing. Now, all these are not application. Here it is just determining the things. Now, when you apply it to any data, that is application of marginal costing, that we have different things. Like for break even, we have to apply multiple break even, we have to apply key limiting factor is there, indifference point is there, shutdown point is done, no? So we have key limiting factor, we have indifference point, we have multiple break even, multiple products in simple, and also we have absorption versus marginal. 4 more major things are there. Pricing decision 5. See, J Limited manufactures a product Y. Analysis of income statement indicated a profit of 250 lakhs on a sale volume of 5 lakh units. How much per unit? Rupees 50 per unit. 50 lakh. 250 lakh. 250 lakh, yeah. 50. Lakh by lakh, yeah. 50 per unit is profit. Please keep in mind. Fixed cost are 1,000 lakhs, which appears to be high. Existing selling price is 680 rupees. That means cost is how much? 530. Sorry, 630. The company consider revising the profit targets to 700 lakhs. You are required to find out a break-even point at a existing level in units and in rupees. Okay. How to determine that? Do you know the selling price?
Yes, sir.
Okay. They are telling 250 lakhs is a profit. Yes or no? Do you know the selling price? 680. Do you know the sales quantity? How much? 5 lakhs. So how much will be your sales? 3,400 lakhs. 3,400. Is that clear? Current sale is 3,400 lakhs. Current profit is how much? 250 lakhs. That means current cost is how much?
3,150.
Current profit is 3,150 lakhs. Guys, in that 3,150 current cost, fixed cost is how much? 1 lakh. Sorry, 1,000 lakhs. 1,000 is fixed cost. That means 2150 is what? What is that? Variable cost. Correct, no? I took the sales here. From that I reduced profit. I got the total cost. Now variable is how much? 2150. So 2150 lakh divided by 5 lakh. 2150 lakhs only, no? 430, na? Rupees 430 per unit. This will be your variable cost. Okay. See here. Variable cost per unit is how much? 430. Is that clear? Pakka? Okay. Now, I know the selling price, 680. I know the variable cost, 430. Contribution is 250. 250 divided by 680. PV ratio, please. Seven six or 6-7? 7-6 what?
4-7.
Okay. Now, so better we'll do one thing. We'll find it out on the basis of amount only. Unit. Then we'll go to amount. Okay. First, break even point in units. How much is the fixed cost? 1000 lakhs. 1000 lakhs. And how much is contribution per unit? Which is 4 lakhs. Units wise, break even point is 4 lakhs. 4 lakhs. Amount how much it is? Sales. 4 lakh into 4. You don't have to do that. That's why I didn't want that rounding off. That's the reason first I found out in units, multiplied with selling price. 4 lakh into 680. 2720 lakh. This is your break even for the first one. The number of units required to be sold to earn the target profit. How much is target profit? 700. Correct? So contribution is how much per unit? 250. 250x minus fixed cost is how much? 1000. Should give me profit of 700 lakhs. How much it is x? 6,80,000 units. 6,80,000 units. Profit with 10% increase in selling price. So selling price will be 680 plus 10%. 748 will be selling price. Next one, drop in sales volume by 10%. 5 lakh minus, don't take earlier one, 6,80,000 minus and all, no. Main data, 5 lakh minus 10%. 4,50,000. So now 748, listen, only there is a change in selling price. There won't be change in variable cost. Variable cost per unit earlier was how much? 430, right? That remains same. Hello. Change in selling price will not lead to change in variable cost. Variable cost earlier we found out. How much? 318 into 4,50,000 units.
14 crore,
14? Okay. Fixed cost is how much? So profit will be 431 lakhs. Okay. Volume to be achieved to earn a target profit at the revised selling price as calculated in point number 2. What was point number 2?
The number of units required to be sold. 6,80,000.
Point number 3. If the reduction of 10% in the variable cost and 170 lakhs in the fixed cost is envisaged, all you have to do is change that and find out. See, selling price will be increased by 10%. Sales volume drops by 10%. That is there. Here, new revised selling price, how much you got? 748. Variable cost was 430. But they are telling reduction in the variable cost by 10%. So, new variable cost will be 387. Selling price will be 748. Contribution will be 361. And what did they say here?
Units.
Volume to be achieved to earn the target profit. Target profit is 700. Correct, no? So, to make that 700, how much is the variable contribution I told? 361, na? 361x will be my contribution. Minus fixed cost will not be 1000. it is reduced by 170. Okay, so 830, that should give me 700. How much it will be? Is that clear? This is how you will compute. Hope it's clear. Great. This one is study material question only, guys. Change in over budget, under budget they have given. That means they have given the changes altogether. Hello? They have given changes. So you have to take changes by changes, you will get PV ratio for each and every levels. Accordingly, you can compute. That one you can go through once. It's there in study material. Okay, fine. We'll do one thing. We'll take break and we'll come back and we'll discuss the remaining questions. 4:30, 4:40. Take break till 5. We are starting at 5 p.m. Okay. Today's target, this basic we should complete plus absorption versus marginal we have to complete.
So will I take little late in the evening?
Might be.
15.
Yes. Bye bye. Start. Okay. Look at this 39th question. RTP May 2023. The following data are available from budget records of Fine Sign Women's Handbag Company for the forthcoming year. Sales price is 1000. Variable cost per unit total is 800. Annual fixed cost is so 23 lakh is total. Although the firm manufactures bags with a different style, they have identical purchase cost and a selling price. That means although they have a multiple product, it is as good as one type of product, because multiple product means methods and all will change. I will tell that later. Although done, requirement. What is the annual break-even point both in terms of units and value? Very simple. Total fixed cost is how much? 23 lakh. Divided by variable cost per unit is how much? 800. Sorry, selling price is 1000. Contribution is 200. May I know the break-even point in units? 11,500. If I multiply with the selling price, that is 1000. 11 lakh. That will be my break-even point and break-even sale.
3 lakhs.
Okay. 1 crore 15 lakh will be my break-even sales. If the store manager is paid 1% commission on sales, what would be the annual break-even point both in terms of units and in terms of value? Whatever the sales will be there, no? Of that 1% will be the commission. Then can I take break-even sales as B? Yes? Okay. Or let's say units as unit only, let me take. Shall I take it as 1000 B? Yes. Variable cost will be 800 B. $800B. But this is not the only variable cost. We have to pay commission. How much? 1% on sales. Sales is 1000B. 1% of that is 10B. Got it? Contribution will be 190B. Fixed cost is 23 lakh. Where the profit will be 0. Because B is what? Break even. So B is equal to 12,105 units. Got it? If at all you want it in amount, it will be multiplied with 1000. 1 crore 21 lakh 5,000. Okay, done. Next up, if the firm decides to pay a fixed salary of 9 lakh in lieu of sales commission, that is, yeah, generally it is always advised to round it off to units. Kgs and all you can keep decimals, but units it's always advised. If the firm decides to pay fixed salary of 9 lakh in lieu of sales commission, that is your sales commission we are paying, no? This one let's not pay. Instead of this, we pay 1 lakh salary. Okay. What would be the annual break even in terms of value and units? Guys, my fixed cost will become 24 lakh. My fixed cost will become 24 lakhs. Variable cost will be 750. Selling price will be 1000. That means contribution will be 250. So 24 lakh divided by 250. 9,600 units. 9,600 units. In terms of amount, 96 lakhs. In terms of amount, 96 lakhs. No, what they told here. Ayo, 9 lakh is salary. Sorry, my bad. How much it will be? 9 lakh? 31 lakhs, right? 32 lakh divided by 250. Sorry? 12,800 units. 1 crore 28 lakhs. Okay. Hi Rikin. Hi Kaushik. Hello Aditya. We'll proceed. Considering break-even point in requirement A, that is 11,500 units. If the stores manager is paid 2% commission on each bag sold in excess of break-even point, that is whatever is sold over and above break-even, what would be the profit of 20,000 bags were sold? Listen here very carefully. First, how much is the break-even? 11,500. Correct, no? But we are selling how much? 20,000. So, 20,000 bags we are selling at 1,000 rupees. Correct? My sales will be 2 crore. My sales will be 2 crore. Less variable cost. Same 20,000 units. Yes, whereas 800 is the variable cost, but that is not the only one. I will tell how much it is. 1 crore 60 lakhs. May I know the profit, please? Profits are 40 lakh. Oh, I mean, sorry, contribution. That is not even contribution. Wait, one more cost is there. Commission. How much, guys? Listen what they are telling. 2% commission on each bag sold in excess of the break-even point. That means break-even is 11,500. That means excess of that is 8,500 into 1,000 into 2%. Please keep this thing in mind. 1 lakh? 1 lakh 70 or 1 crore 70? Okay. Now tell me contribution. 38 lakh?
3 crores.
No. 38 lakh 30,000. Less fixed cost is 23 lakhs. So the profit we are going to make is 15 lakh 30,000. Anyone? Any doubt till here? Anyone? Any doubt? 15 lakh 30,000. Any doubts? Pakka. We'll proceed.
Yes.
40th. RTP November 2023. A dairy product company manufacturing baby food with a shelf life of 1 year furnishes the following information. You are required to calculate the break-even volume in units for 23-24. On 1st of April 2023, company has an opening stock of 20,000 packets whose variable cost is 180 rupees. Okay, opening stock is there 20,000 whose variable cost is 180 per packet. In 22-23, production was 120,000 packets and the expected production in 23-24 would be 1,50,000 packet. Expected sale in 23-24 is 1,60,000 packets. In 22-23, fixed cost per unit was rupees 60. Guys, in 22-23, how many units we produced? 1,20,000. 60 rupees of that. 72 lakh. Fixed cost was 72 lakhs. It is expected to increase by 10% in 23-24 plus 10%. Sorry? 79 lakh 20,000. The variable cost is expected to increase by 25%. 180 was there plus 25%. Rupees 225. Fixed cost is gonna be selling price is gonna be 300. Got it? They're asking you to calculate break even. How much is your contribution? 75. How much is your fixed cost? 79 lakh 20,000 divided by 75. One crore 5 lakh 1 crore 5 lakh 1,05,600, provided there was no opening stock, etc. But here there is a opening stock. See, on 1st of April 23, that is in the year 23-24, there was a opening stock of 20,000 packets. Correct? No? Hello? Guys, how many packets? 20,000 packets. And we produced also 120,000. 22-23 we produced 120,000, and 23-24 it is 1,50,000. Expected sale is 1,60,000. That means closing stock will be how much? 10,000. Try to understand. 20,000 is opening. We produced 1,50,000. Closing is, sales is 1,60,000. That means still 10,000 is with us only. Got it? See here. For the year 22-23 fixed cost was 72 lakhs. For the year 23-24 79 lakh 20,000 that we discussed. Variable cost 180 and 225 we got. Oh, great. Calculation of the break-even. Since the shelf life of the product is only 1 year, opening stock should be sold first. Total contribution required to recover the total fixed cost and reach break-even is, we know that fixed cost is 79 lakh 20,000. Contribution from opening stock will be how much? Opening stock, selling price is 300, variable cost is 180 from 24 lakh. That means remaining should be recovered from where? New production. So from new production I should recover 55 lakh 20,000, whereas new production contribution per unit is 75. So 55 lakh 20,000 divided by 75. 73,600. That is not the only break even. So total break even 20,000 units from the opening stock, remaining 73,600 is from the current period. Together we did the break even. Mark it as LMR. If at all that shelf life point wasn't there also, I already told you, you remember, FIFO we apply. Unless and until they tell any other method in the question, it's always and always and always FIFO. Got it? Shall we go to the 41st question? Gourmet food products is new entrant in the market for chocolates. It has introduced a new product, Sweetie. This is a small rectangular chocolate bar. The bars are wrapped in a aluminium foil and packed in attractive cartons containing 50 bars. Please remember, one carton will have 50 bars in it. A carton is therefore considered the basic sale units. That means we don't calculate 50 bars as 1111 unit. We consider 50 bars together in one carton as one sale units. Is that clear? Although management had made detailed estimate of cost and volume prior to undertaking this venture, new projection based on actual cost experience are now required. Income statement for the last 2 quarters are each thought to be representative of the cost and productive efficiency we can expect in the next few quarters. There were virtually no inventories on hand at the end of each quarter. The income statement revealed the following: 50,000, 12 lakh, 70,000, 24. That means in the first quarter and second quarter, there are no much sales. Got it? COGS 7 lakh, 880, gross margin 5, 8 lakh, S&D. You can see there, things are changing. That means S&D is and admin is not completely fixed, variable. Net profit they have given, taxes they have given, net income they have given. Firm's overall marginal and average income tax rate is 40%. This 40% figure has been used to estimate the tax liability arising from the chocolate operation. So they are telling 40% in simple. First, management would like to know the break-even point in terms of quarterly carton sale for the chocolates. Tell me one thing. How much is 7 lakh divided by 50,000? 14. How much is 8 lakh 80,000 divided by 70,000? That means, remember, in COGS, whatever is there, everything is not variable. It has fixed as well as variable in it. So, as no information is there, can I say 1,80,000 is change in cost due to 20,000 units changes. Per unit rupees 9. Per unit rupees 9. Apply it in either 1 or 2. Let's apply it in 1. So 50,000 into 9 rupees. That means 2,50,000 will be your fixed cost. Fixed cost will be how much? 2,50,000. Is that clear? Hello? Next, selling and admin. 650, 690. Again, both are not variable completely. So, what is the change in cost? Change in units. Per unit. Correct? Fixed cost will be 2 rupees into 50,000. 1 lakh. So, out of 6 lakh 50, if 1 lakh is variable cost, fixed cost will be 5 lakh 50,000. Okay. Now, first what they have asked. Management would like to know the break-even point in terms of quarterly carton. How much is the fixed cost? 8 lakh. Correct, no? Hello? Fixed cost is 8 lakh, no? Divided by how much is your PV ratio? Guys, variable cost is how much? 9 plus 2, 11. Listen, now you might say, sir, tax also will be variable. No. What we are trying to find out? Break even. Break even means our profit will be 0. No profit means how much will be tax? 0. So only these things you should take. How much it is? 11, right? 11, no? What contribution?
7 plus
9 plus 2 now. 11, right? So 11 rupees is your variable. Contribution is 13. Okay. Fixed cost is how much? 8 lakh. Contribution is 13. 61,539 cartons. Is that clear? Any doubts? No doubts. Next, what is it? Management estimates that there is an investment of 30 lakh in this product line. What quarterly carton sales and total revenue are required in each quarter to earn after tax 20% per annum on investment? 20% per annum. So 30 lakh into 20%. 6 lakh. But 6 lakh we have to achieve per annum. Quarterly, then I have to achieve 1,50,000. Got it up? Now, selling price is how much, guys? 24. Correct? So, units sold, shall I take it as X? Or C I will take. 24 rupees into number of cartons. Variable cost was 11. 11C. Total 13C. Correct? Now, fixed cost is 8 lakhs. Huh? That should give me profit before tax. From that I will reduce tax. How much? 40%. That should give me profit after tax. How much? 1,50,000. Now guys, remember 1,50,000 means 60%. 40% means question mark. Huh? Tax 1 lakh. That means, can I say that 13C minus 8 lakh is equal to 2,50,000. 13C is equal to 10,50,000. C is equal to Is that clear? Here, majorly one mistake students will do is straight away here they will take 6 lakh and they will start computing for that. If you start computing for that, that means you are taking yearly data. They are asking quarter 4. Arriving at the last one. That also works. Now, firms, marketing people predict that if the selling price is reduced by 1.5, that means new selling price will be 22.5 per carton, and 1,50,000 advertising campaign among school children is mounted. That means fixed cost gonna increase to 9,50,000. No, that is a special fixed cost, relevant fixed cost. Sales will increase by 20% over the second quarter. What was the sale in second quarter? 70,000. 20% means 84,000.
So this we are taking it as fixed because when the units increase also, this will not have any. This is one.
Now, sales will be how much? 84,000 into 22.5. Leave. Variable cost is 13, right? Sorry, 11. So, contribution 11.5. Correct, no? So, sales will be 11.5 into 84,000. Nine lakh 66,000. That will be the contribution.
Ah,
84,000 into 11.5. Contribution. Minus fixed cost. 9,50,000. 16,000 profit. Should plan be implemented? Already they were making 66,000 in the quarter number 2. If at all it is implemented, it will go to 16. Why would you suggest that? Correct? No. You will lose around 50,000. So better don't go for it. Okay. So
9,600.
no, that is after tax. After tax. 16,000.
So we need to actually mention that.
A conclusion you should write. Right, while writing you can say consider tax also, because if you consider in both, difference only. Whatever you compare, if at all you are comparing after tax, then you take after tax figures. Comparing before tax, then you take before tax figures. 1660. Okay. Then you have to compare with after tax. Is that clear?
Yes.
With that, we have completed basics. Here onwards, decision making. But before that, we'll go for absorption costing versus marginal costing. What? Absorption costing versus marginal costing. Okay. Now, what is this absorption costing versus marginal costing? Guys, absorption costing, your cost of production means prime cost plus factory overhead. Even admin overhead related to production, that will be there. That will you generally in marginal costing, it won't be there. So remember it as prime cost plus factory overhead. Factory overhead means both variable as well as fixed. Both variable as well as fixed. And you know that fixed will be absorbed. Fixed will be absorbed. Variable also will be absorbed. But variable will be on what data? Actual data or normal data? While teaching overhead, I told you no. Variable overhead. Absorption rate is computed on actual data. So it's not going to make any much difference. Right? So fixed overhead recovery rate is normal capacity basis you have to compute and you have to apply it to actual. Got it? So in case of absorption costing, what you should do? Your cost of production includes prime cost, that is direct material, direct labor, direct expense, and factory overhead. Factory overhead includes both fixed as well as variable. However, cost of production under marginal costing is prime cost plus factory overhead, but only variable in nature. We don't take fixed cost. We don't take fixed cost. Is that clear? Hello.
Yes.
Why a fixed cost is not taken?
Because marginal costing, fixed cost is treated as period cost. You produce, you don't produce. End of the day, we have to incur. Okay. So,
But whatever you calculated now, we have included fixed cost also.
we'll go there. I told what? COP. Is COP is the only cost? How do we arrive at profit? Sales minus cost of sales, not cost of production. Okay. So I just told COP. So your prime cost plus factory overhead, your absorption method includes variable as well as fixed, but your marginal says only variable. Is that clear? Now look at the income statement under absorption as well as marginal. First, shall we discuss about absorption? Okay. We will take sales and keep it aside. We have nothing to do with that now. Okay. Now let's go for the cost determination. Direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead on what basis? Absorption basis. Fixed manufacturing overhead on absorption basis will give us cost of production. Will give us cost of production. To the cost of production, if we add opening stock of finished goods, reduce closing stock of finished goods, add opening stock of finished goods less closing stock of finished goods. You know that FIFO, for closing stock valuation, if the question is silent, we will arrive at cost of goods sold. Now while arriving at cost of sales, remember we take everything, that is admin overhead, both variable as well as fixed. Selling and distribution overhead, both variable as well as fixed. One more thing. Let's say you have under absorbed your overhead. That means, let's say you would have incurred 10 lakh rupees. Okay, you would have absorbed only 8 lakh rupees. That means already in COP, how much cost is included?
8 lakhs.
8 lakh. But actually, how much you have incurred?
10 lakhs.
That means totally you should book 10 lakh no while determining profit. 2 lakh is not booked, under absorbed no. That you add to cost here. That means your actual overhead, you don't allow that to affect your cost of production. Because cost per unit is determined on cost of production. So don't allow it to impact your cost of production. But of course, it should be reduced while arriving at profit. That's the reason I will include it in cost now. So add under absorbed overhead. And if at all it is over absorbed, that means actually incurred 10 lakh, but I recovered, I added to cost already 11 lakh. That means 1 lakh cost I showed extra, no? Again, there you don't do anything. But here you add 1 lakh rupees. Reduce from the cost. Because already you added it as 11 lakh. Actually it was only 10 lakh. So always remember, under absorbed overhead if any, of course only production, because admin and sales we are taking in there only. Actual basis may you take and finish it off. But only production overhead we are discussing. So whatever under absorbed is there, add it. Whatever over absorbed is there, reduce it. You will arrive at cost of sales. What do you arrive at? Cost of sales. I repeat again. Direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead on absorption basis will give me cost of production. To the cost of production, when I add opening stock of finished goods, when I reduce closing stock of finished goods, will give me cost of goods sold. To that I will add admin overhead, both variable as well as fixed on actual basis. Selling and distribution overhead, both variable as well as fixed on actual basis. Not only so much, if at all I under absorb my overhead while arriving at cost of production, I will add that balance amount. If at all I over absorb my amount, that means I showed more cost while arriving at COP, that cost I will reduce from the cost. Now I will get cost of sales. From the sales, I will reduce cost of sales. I will arrive at profit under absorption. Is that clear? Is that clear? I repeat one last time. We'll take the sales amount, park it aside. Direct material, direct labor, direct expense, prime cost. To the prime cost, we will add variable manufacturing overhead, actual basis, fixed manufacturing overhead, absorption basis. We will arrive at cost of production. To the cost of production, if I add opening stock of finished goods less closing stock of finished goods, we will arrive at cost of goods sold. Now to the cost of goods sold, I will add admin overhead, both variable and fixed, selling and distribution overhead, both fixed and variable, add under absorbed overhead minus over absorbed overhead, I will arrive at cost of sales. From the sales, if I reduce cost of sales, I will arrive at profit. Is that clear?
Yes.
This is your absorption method. Now we'll go to marginal. Before going to this marginal method, first you tell me in marginal one statement we discussed. Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you profit. Correct? Now let it be. Now marginal also sales, let it be direct material, direct labor, direct expense, variable manufacturing overhead. That's all. Will give you cost of production. Will give you cost of production. To the cost of production or production cost, if we add opening stock of finished goods minus closing stock of finished goods, we will arrive at cost of goods sold. Listen here. In case of absorption, any product, when we were valuing closing and opening, it used to include what and all? Direct material, direct labor, direct expense, variable manufacturing overhead as well as fixed manufacturing overhead. When we are valuing in marginal costing, it includes what? Material, labor, expense, variable overhead, that's all. That's all. Variable manufacturing overhead. That's all. COP. To that we will add opening stock of finished goods less closing stock of finished goods. We will arrive at COGS. Now listen very carefully. COGS. Now to the COGS. Listen very carefully. To the COGS, I will add variable admin overhead. Variable selling and distribution overhead. That means all the variables are done. Right? Now that will give me total variable cost. Got it? That will give me total variable cost. Sales minus total variable cost I will do. That will give me contribution. From the contribution, I will reduce fixed cost, including production overhead. Because production fixed cost I didn't take any cost as cost so far, no. So for fixed cost I will take production overhead fixed, admin overhead fixed, selling and distribution overhead fixed, total fixed cost. Now from contribution I will reduce total fixed cost. I will get profit under marginal costing. So the basic skeleton remains same. Sales minus variable cost, contribution minus fixed cost, profit. But sales is relating to sold units, right? So if at all stock is there, you can't take it directly. Because cost will be relating to produced unit, sales will be relating to sold units. That's why we take variable cost like this. Shall I repeat once again? Sales, park it aside. Direct material, direct labor, direct expense, variable manufacturing overhead. That's all. Cost of production. Add opening stock of finished goods minus closing stock of finished goods will give you COGS, cost of goods sold. Now to the cost of goods sold, if you add variable admin overhead, variable selling and distribution overhead, you will arrive at total variable cost. From the sales we will reduce total variable cost, we will arrive at contribution. Now fixed cost, production fixed cost, admin fixed cost, selling and distribution fixed cost, because it is treated as period cost. It has nothing to do with the production, right? So the total fixed cost will be reduced from the contribution, we will arrive at profit. Both the statement, one last time I will tell, concentrate. Sales, absorption I am telling, direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead, absorbed will give you cost of production. To the cost of production, if you add opening stock of finished goods, reduce closing stock of finished goods will give you COGS. To the COGS, if you add admin overhead, both variable as well as fixed, selling and distribution, both variable as well as fixed, and add under absorption of overhead minus over absorption of overhead will give you cost of sales. From the sales, if you reduce cost of sales, marginal. Sales, keep it aside, direct material, direct labor, direct expense, variable manufacturing overhead, variable will give you cost of production. Add opening stock of finished goods minus closing stock of finished goods will give you cost of goods sold. To that, if you add opening admin overhead, variable admin overhead, variable selling and distribution overhead will give you total variable cost. To the total variable cost, from the sales, if you reduce total variable cost, you will get contribution. From the contribution, if you reduce period cost, that is fixed cost, you will arrive at profit. Fixed cost includes production fixed cost, admin fixed cost, selling and distribution fixed cost. Everything actual basis, there is nothing called absorption in the marginal costing. Now my question is, what do you think? Profit as per marginal, profit as per absorption, will it match or will it not match?
Not.
Why?
So there the absorption, over absorption, under absorption, we are adding.
Here also we are doing that only. For example, fixed overhead, let's say incurred 12 lakh. In absorption, there I wrote 10 lakh. Extra 2 lakh I added, no, while arriving at COS. That means total 12 lakh accounted. Here I will take directly 12 lakh. Will it match or will it won't match?
Previously, COP, we are taking only absorption.
Hmm.
Remaining, we are taking its units.
Hmm. So will it match or will it not? It won't match. Reason being, valuation of your stock under your absorption costing, absorption or marginal, total units will be same only. Cost per unit you take, no? Under absorption, cost per units includes what and all? Direct material, direct labor, direct expense, variable manufacturing overhead, fixed manufacturing overhead. Whereas in your marginal, direct material, direct labor, direct expense, variable manufacturing overhead. That means in absorption, valuation of inventory includes fixed overhead also. That's the reason it won't match. Okay. So any difference will be only due to valuation of inventory. Now, opening stock will increase your profit or decrease your profit? It will decrease your profit because opening stock is cost. Closing stock will increase your profit because closing stock is reduction from the cost. Correct? No? But remember, whether it's opening or closing, compared to marginal, absorption only will be more. Because absorption has 5 elements in it. Marginal has only 4 elements in it. Marginal has DM, DL, DE, VOH. Absorption has DM, DL, DE, VOH, FOH. So whether it's opening inventory or closing inventory, value of inventory under absorption will be more compared to marginal. Clear? So remember, if at all opening stock is more than closing stock, profit under absorption costing will be less than marginal. Because opening is more than closing. That means cost is more. In both, cost is more, no doubt in that. But compared to both, where the valuation of inventory will be more? Absorption. So automatically in absorption, cost will be much more than marginal. So of course, whenever opening stock is more than closing stock, profit under marginal will be more than absorption. Because in absorption, cost booked is more. If the closing stock is more than opening stock, in absorption costing, profit will be more than marginal. Why? Closing stock compared to marginal and absorption, of course, absorption will only be more. Closing or opening, it will be more. Now, closing stock is reduction from the cost. In absorption, more reduction from the cost. In marginal, less reduction. So, compared to this, automatically absorption profit will be more. They might ask you to prepare statement and they might ask you to reconcile it also. Okay. Hope you guys understood there.
Yes.
Profit under absorption costing and marginal costing might not match due to valuation of inventories. Guys, if opening stock are more than closing stock, then marginal costing approach gives more profit, whereas
Closing stock.
if the closing stock is more than opening stock, then absorption costing gives more profit. You understood, I feel, that point. Now listen, one more point, very important. Sometimes opening stock valuation, they won't tell anything. In that case, whatever our COP is there, no, assume last year also same cost of production and value it at the same. However, sometimes they will give standard cost. Sometimes they will give standard cost. In that case, opening stock should be valued at standard cost. That is standard variable cost plus absorbed fixed overhead. Fixed absorption rate is standard only, no? How do you compute absorption rate? Budgeted by budgeted, right? So always remember, if at all opening stock valuation they don't give and standard information is given, always remember you should value your opening stock at standard rate, standard cost. Hope it's clear. Whereas remember, your absorption costing includes, opening stock of absorption costing includes variable standard cost plus fixed overhead recovery rate, absorption rate. Whereas in your marginal, it includes only variable standard cost. Okay. So if valuation of opening inventory is not directly given in the question, then use standard cost to arrive at valuation. Refer practical problem number 17. Fixed manufacturing overhead should be absorbed on the normal production capacity and not on the total capacity. Got it? Normal capacity, not total capacity, guys. Remember know the difference. Total capacity is your theoretical capacity, which you can't achieve. Normal is after adjusting the normal idle time, etc., what we can achieve. Okay. So always our planning should be on the basis of normal capacity. Hope it is clear. Yes. Shall we see a few questions? Multiple products, no. KLF, no. Look at this question. We have 1, 2. 2 questions we have. Okay. What is it, madam? Any doubts? No doubts. Oh. Question number 54. That is your illustration number 14, if I am not wrong. 14 or 12? 14, is it? It's there in page number 134. Wonder Limited manufactures a single product, Zest. The following figure relate to Zest for a 1 year period. Activity level at 50%, it is 400 rupees. Sorry, 400 units. At 100%, you can produce 800 units. Okay. Now, sales, they are telling 8 lakh. May I know the selling price? 8 lakh divided by 400. So whether you take 16 lakh by 800 or you take 8 lakh by 400, selling price is gonna remain same. Talking about production cost, variable, again per unit it's gonna remain same. So 320,000 divided by 400. 800 per unit. Fixed is 1,60,000. Okay. Selling and distribution, variable 160,000. So 160,000 divided by 400. Fixed is 2,40,000. That you leave. Now, normal level of activity in a year is 800 only. So whatever the budgeted is there, that only is your normal capacity also. Fixed costs are incurred evenly throughout the year, and the actual fixed costs are same as budgeted. There were no stock of Zest at the beginning of the year, so only closing is there. In the first quarter, 220 units were produced, 160 were sold. That means 60 units were in closing stock. Correct?
Yes.
Now, compute the fixed production cost absorbed by Zest using absorption costing. Guys, what is the recovery rate? What is your budgeted overhead? 1,60,000. Correct, no? 1,60,000 production overhead, fixed production overhead, where normal units are 800. That means per unit we thought of recovering how much? 200. Correct? So your recovery rate is how much, guys? 200 per unit. Is that clear? Now, how many units we actually produced? 220 units. 220 units, if I recover 200, how much it would be? 44,000. But how much I am incurring? If the question is silent about actual budgeted, then budgeted only will be actual. So how much I am incurring? 1,60,000. So I am under recovering. How much? 1,16,000 is under absorption. Correct? Wrong. Guys, 44,000 you absorbed for how many months? 1 quarter. Yes, 1,60,000 is expense per annum. So you have to compare 40,000 minus 44,000. So over absorption of 4,000. Is that clear? Calculate the under recovery. Done. Over recovery is 4,000. Absorbed is 44,000. Over recovery is 4,000. Next, calculate the profit using absorption costing. Very simple. We have to go for statement, income statement. First, sales. 160 units we are selling at the rate of 2,000 rupees. Sales will be 3,20,000. Best part about the question, they haven't split and give direct material, direct labor, direct expense, etc. Straight away they only told variable production cost. How much it is? 800 per unit. Correct, no? So variable production cost is 800 into 220. How many units you produce? 220 you produce. 1,76,000. Also, I have to add fixed production cost. Fixed production cost, we absorbed 44,000 rupees. We already computed it. 220 into 200 rupees. 44,000. Your cost of production would be 2,20,000. Your cost of production would be 2,20,000. Guys, 2,20,000 to produce how many units? 220 units. Per unit how much? 1,000 rupees. So add opening stock, which is not there, minus closing stock. Minus closing stock. Closing stock has 60 units in it. Because no opening was there, you produced 220, you closed 160. I mean, you sold 160, closing is 60. 60 into 1,000. Hope you guys understood the valuation of closing stock. Now, what you arrived at is cost of goods sold 1,60,000. Add admin overhead, which is not there. Add selling and distribution overhead. It has both fixed as well as variable. Fixed is how much? 2,40,000, but that is per annum. I want per quarter, which is 60,000. Variable, we computed 400 per unit. Always remember, selling and distribution is for units sold, not unit produced. So 160 into 400, 64,000. So also there is a over absorption. Correct? You recovered more. You showed more expense. You incurred only 40,000, but you showed more. You should reduce minus over absorption. That will give you cost of sales. Cost of sales is 2,80,000. So from the sales, when I reduce 2,80,000, my profit would be 40,000. Sales was 320,000. Cost of sales was 280,000. Profit is 40,000. Anyone, any doubt in the absorption costing? Any doubts? That valuation of inventory is clear, no guys? That is major thing, valuation of closing stock. Also the absorption rate and absorption amount is also clear, right? Now shall I show it under marginal? Guys, marginal or absorption doesn't matter. Sales will be 320,000. In fact, total cost will be all, I mean, actual profit also is not going to vary. Because of method, it might show more lesser, but actual will be actual only. 320,000. Now let's start one by one. Again, variable production cost only directly they have given. They haven't told anything. Direct material, direct labor, direct expense, etc. etc. How much it is? 1,76,000. This itself will be my COP. 1,76,000. Add opening stock which is not there minus closing stock. While valuing closing stock, listen, 176,000 we incur to produce 220 units. Per unit how much? 800. So closing stock is 60 units. 60 into 800. You can see there carefully. Closing stock under absorption is 60,000. 12,000 is nothing but portion of your production, fixed production overhead. Is that clear? Done. Now this will give us COGS 1,28,000. To that I will add admin overhead, variable in nature, which is not there. Selling and distribution overhead, which is variable in nature. 400 per unit. So 400 into sold units. Please keep in mind. 160 into 400, 64,000. So that will give you total variable cost. Total variable cost is 1,92,000. From the sale, when I reduce 1,92,000, that will give me contribution which is 128,000. From that, I will reduce the fixed cost. Fixed production overhead rupees 40,000. 160,000 per annum per quarter, 40,000. Not absorbed, actual incurred. Okay. Admin overhead is not there. Selling and distribution 2,40,000 per annum per quarter, 60,000. Total 1 lakh. Profit will be 28,000. Now, actual profit, I mean, as per absorption, it is 40,000. As per marginal, it is 28. The reason is very simple. Opening stock is not there. Only effect of closing stock. Closing stock under absorption is 12,000 more than marginal. 60, 48. So, automatically, profit under absorption will be more. Sorry, 60 here. Okay. Hope this point is clear. Shall we see one more question? Question number 55. One last question we'll see and we'll wind up for the day. Tomorrow we can continue with the indifference point, multiple break even, KLF, pricing decisions, miscellaneous. Okay. We'll try to wind it up by first break, if not by lunch, and followed by standard cost. XYZ Limited has a production capacity of 2 lakh units per year. Normal capacity is 90%. That means for absorption purpose, denominator is going to be 1,80,000 units, not 2 lakh units. Please keep in mind. Standard variable production cost is rupees 11. Total fixed cost is 3,60,000 per year. Variable selling cost is 3 rupees. Fixed selling is 2,70,000. Selling price is rupees 20. In the year just ended on 31st March, the production was 160,000. Sales was 1,50,000. Closing inventory is 20,000. Guys, if at all you produced 160, sold 150, that means how much should be there in the closing? But how much is there? From where other 10,000 came? Opening. So you are going to assume opening stock was 10,000. In the given question, opening is there. And if they don't tell about opening valuation, you know what to take. They have given standards. They have given standard cost. The actual variable production cost is 35,000 higher than the standard. So whatever you get as per standard here, that is 11 rupees per unit, no? Whatever you multiply and get, no? For that you have to add 35,000. Calculate the profit for the year using absorption costing method, marginal costing method. Explain the difference. They might also ask you to reconcile the difference. Now, shall I show it under absorption? First, sales. Guys, how many units we are selling?
2 lakh.
1,50,000 units. 2 lakh is our total capacity. And we are selling it at what rate? 20 rupees. So sales will be 1,50,000 into 20.
30 lakhs.
Got it? Now, first, direct material, direct labor, direct expense, variable manufacturing overhead. Everything they only have given it as variable manufacturing cost. Correct? No? Variable production cost. 11 rupees they only have given. So let me take variable production cost. How much they have told? 11. How many units we produced? 1,60,000. But this is not what we incurred. We incurred 35,000 more than this. They told no. Because variable you should take actual. How much? 17,95,000. Fixed production cost. How much they are telling? They are telling 3,60,000. Per unit, I should take normal capacity or total capacity? Normal capacity. So recovery rate per unit would be, recovery rate per unit is rupees 2. Is that clear? Now, during the period, how many units we produced? 1,60,000. That means fixed production cost will be 3,20,000. 1,60,000 into rupees 2. Is that clear? Done. That will give me cost of production, which is 21,15,000. Add opening stock of finished goods. We know that 10,000 units there, but value you know? You don't know. Whenever opening stock value is not given, even standard is not given, then we will go for actual, whatever is there, that basis. Otherwise, we should go for standard. Have they given standard variable cost? 11 rupees. Have they given standard fixed cost? They haven't given directly, but we computed 2 rupees per unit. Recovery rate. So we should value it at 13 rupees. 1,30,000 minus closing stock of finished goods. 20,000. 20,000 into, guys, FIFO approach. We incurred 21,15,000. Correct? No? To produce 1,60,000. So for 20,000, how much? 2,61,000. Is that clear, everyone? Hello? You understood? Closing stock should be valued at COP, no? FIFO. Now, may I know how much is COGS? $22,49,375. Is that clear? To that, I am going to add admin overhead, which is not there. Selling and distribution overhead is there. Correct? No? Fixed is also there. Variable is also there. Fixed, how much they are telling?
19,80,625.
Which one?
COGS.
19 lakh 80,000 625. Now, selling and distribution fixed is how much? 2,70,000. Here only we are taking, no? Variable is how much? 3 per unit. How many units we sold? 1,50,000. 8, 7, 4 lakh. Give me 5 minutes, I will finish it off. Then you go home and sleep well. Okay. Now this will give me cost of sales. Oh, yo. Sorry. Under absorption or over absorption is there? No? How much is absorbed? 3,20,000. How much is incurred?
3,60,000.
Pakka? Ha.
3 lakhs.
So 40,000 we have under absorbed. Add under absorption of 40,000. That will give me cost of sales.
625.
27 lakh 40,000 625. My sale is 30 lakh. Cost of sale is 27 lakh 40,000 625. Profit would be
2,59,370.
Is that clear? Under absorption costing is the profit point clear. Shall we go to marginal? Sales, I told you it's not going to change. It will be 30 lakh only. Variable production cost we already computed 17 lakh 95,000. This only will be our cost of production 17 lakh 95,000. To this we should add opening stock. We know that opening stock we should value it at standard. How many units were there? 10,000. And marginal we are using. That means only variable elements should be taken. Variable production cost elements. Not variable everything. Selling and distribution. No. Only production cost. COP should include only production cost. Rupees 11. Which is going to be 1,10,000. Minus closing stock. Guys, we incurred 17 lakh 95,000 to produce 1,60,000 units. Closing stock are 20,000 units. 2,24,375. That will give me COGS. Sixteen lakh 80,000 625. Okay. To this, I am going to add variable selling and distribution, which is 4,50,000. That is 1,50,000 into 3. Correct? This will give me total variable cost 21,30,625. Now my sales is 30 lakh. Total variable cost is 2130. So my contribution will be 8,69,375. 8,69,375. Is that clear? Now I am going to reduce my fixed cost. In that, first one is production overhead, which is 3,60,000. Correct now? Or 3,20,000?
60.
3,60,000. Selling and distribution overhead, which is 2,70,000. Now my total fixed cost would be 6,30,000. So that will give me profit. That will give me profit. 2,39,375. You can see there difference in the profits in these two is 20,000. What is the reason? If at all you want to analyze, listen, which one shall I take it as a starting point? Let me take absorption profit as a starting point. 2,59,375. This profit I have to match with marginal profit. 2,39,375. How? Guys, opening stock. Under absorption 1,30,000. Under marginal 1,10,000. That means overvaluation of opening stock. Overvaluation of opening stock in absorption costing. Because of this, profit has showed less because opening stock. We showed more expense. How much? 20,000. So I will add back to my profit because I want to match it with marginal costing profit. Okay, so I'm going to match with marginal, means marginal may, if it is increased, here I will increase. If marginal it is decreased, here I will decrease. Is that clear? 20,000? 20,000 or 40,000?
110, 130 from 259. So you
110, 130. That means here we showed more. More means we showed less profit. So to match with marginal, I have to add it back. 259 is what? 259 is profit as per absorption costing. Now to match with marginal, in absorption I showed 20,000 less. Overvaluation of opening stock led to more profit or less profit? Now to match with marginal, marginal profit absorption. In marginal, we undervalued our opening stock. So their profit is more. Now to start with that, like to match with that absorption profit, what should I do? Next, closing stock. As per absorption, 264,375, marginal 224,375. That means in absorption, 40,000 we showed more. Correct? Overvaluation. Always remember, in absorption, stock is always overabsorbed only. Overvalued only. Overvaluation of closing stock in absorption costing. That means in marginal we showed 40,000 less. To match absorption profit with marginal, here also we should reduce, no? Because we showed 40,000 more, no? Now reduce that 40,000. Automatically it will be 239,375. This will be your reconciliation of profits. Got it? Any doubts? No doubts? Any doubt is there? If at all you start from marginal, what it will be? 239,375. In marginal, undervaluation of opening stock. Because of that, we showed more profit compared to absorption. To match with absorption, we should reduce. 20,000 I will reduce. Undervaluation of closing stock. That means we showed less closing stock compared to absorption. That means we showed less profit compared to absorption. To match it with the absorption profit, I should got it? Hope absorption marginal it's clear. Great. Recently in one MCQ they have asked this, similar only, not much changes. So MCQ may they have asked. No, question only they gave, few things they have asked. What is COP, under marginal how much, under absorption how much, like that. Normal. In case scenario question for 10 marks. So case scenario solving is very easy. Normal solve, you solve the question in a normal manner, you have to write the answer. Shall we close for the day? Tomorrow we are going to continue with the same and followed by standard costing. Sure. Bye bye.